Oh man, that's crazy. That's crazy. All right, guys. Sorry, I've had the stream on, and I was sitting here talking, and it never flipped over. So, anyway, good morning. Hope everyone had a great weekend. Good Father's Day, all that fun stuff. I'm gonna get right into it. I didn't put out a watch list yesterday. Was a little busy with we had a cookout and stuff. So, but I didn't really, nothing really changed for me. I was looking. I had a watch list that I was trying to get together, and I felt like I was trying to find something new. But really, I'm just going to stay with where we're at, right? You had Netflix breakout, NFLX, Tesla. You got that news going on. It's just, it's just pulling back. So I'm going to, we have GameStop, GameStop earnings today. Dude, what is going on with my It's always something, guys, I swear. Alright, I'm just trying to get this stuff together. Alright, so let's go through. If you guys have any... look, it already did it. Are you kidding me? Alright, so Netflix is going to be off. I mean, unless you get pullbacks here. I'm not going to say that it's off. Pullbacks on Netflix in the 663 area, 665 to 663. If that area can hold. So now it's broke. Because if you look here, this all-time high... Let me take it back here. It's already done it. And I still... So look, this is why I don't really want to go live. Which I might... This might be one of the last few times I do this here. Not to say that I won't do it during the week or something, but I think that, we've offered a lot of great things here for you guys. And there is the turnaround on Netflix or Tesla. There we go. So Tesla's going to be my top watch today, or going into the week. Guys, Microsoft. I mean, it's just countless times over and over where I give you guys trade ideas. We don't really get any feedback. We don't really do anything. So I feel like it's more of a hassle for me, like right now, trying to do everything, versus what is, giving back in return. I don't ask for a whole lot, but I'm just saying it now. This may be one of the last times that I stream live here. And I'm just going to go over to a Discord, and I'll cover the trades, in the afternoon. So if you guys have any questions, just wanted to give you guys a heads up there. Again, it just feels like it's not really going in the direction I want, and it is what it is. You got to move on. Know when to hold them, know when to fold them. But that doesn't mean that you don't try. Just because something doesn't work doesn't mean that you don't give up or quit. Because, oh my God. See, like right now, like what I'm having trouble is signing in on my account over here. All right, I'm logged in. Bada bing, bada. Why is that down to that? I swear, bro. All right, anyway. All right, so Tesla, here we go. This is actually the entry point. I was looking at Tesla. We have GameStop earnings coming up. We'll have that live. I haven't even looked at GameStop yet this morning because I've been kind of just watching Tesla and had a bit of a late start with the stream. So you have some. Let's pull this up. I'm not really going to pull it up. Let's go over to GameStop. Let's go over to GameStop here. So I'm going to give you guys my analysis on GameStop, all right? I am more bullish. Well, listen, I'm going to say this right now. I have no conviction either way. I have no conviction either way. Why is this not letting me sign in? This is insane. All right. So I feel like, see, right here is a pivotal point. Okay, this 28. Really, I'm going to give you guys the 30 level. All right, because this $30 level is still resistance on GameStop. Now, if I were to look at the chart and use the indicators, I am being told I have a lot more room to the upside than I do the downside. Like, at least I should be open to another pop if levels start to hold. So what are the levels? Here, let's talk about Friday. Friday, you did a really good job of trying to hold. It's like 28.75, and you can see how it just sat here. Sat. That's progress. All right, that's progress. We said Friday to be careful getting short or, going after the long up here. We felt like there was a pullback. So a recapture of really 30.32, but to get that, you want to see volume, right? If we get it's a decent amount of volume, and obviously depending on what is said today, if we get some volume to start holding this 28.75 level, I'm telling you guys right now, watch out, because this thing still has room. I'm not ruling out the downside, because you could still pull back to 27. You could pull back in here down to this low at 26, and it'd still be a higher low. All right. But if you look here on a 4-hour chart, look what happened here. So we broke above, right? $30. Got above, rejected, retested 30. Okay, double top 30, pulled it back. Look right here. I want you guys to look right here. Right there. So Friday, coming into like if you did any work over the weekend, you would have said, man, that's a clear rejection point right there on GameStop on that candle, because you got back under this level, and technically you would want to hold it. You would want to hold it to shoot, find a higher support level to climb higher, potentially get above this $30 level, because if you get above 30, if we can get above 30 on volume, we have room to 38.40. Those are the trades we like. We like when we have room. All right, we like when we have room. Look here. As you guys can see, if my charts will work with me. All right, if we get above 30 and we start holding this $30 level right here, you have nothing in your way until, well, really you have 33 there. But 30 and 32, 30 to 33 is really the same area, if you want me to be honest. It's up there at 33 where you have all that room right there. Then it starts getting big. So you don't have resistance until 38. So what I'm getting at, guys, is if we break 30, we start holding 28, 27. All right. We continue to hold this level right here at $28. We see a lot of volume today, and we end up getting above yesterday or Friday's high, and we start holding $30 as support on that break of 30 to. So you're going to break. You should get a lot of volume going up to 30 off of 28. If we have that, if we have more volume than we had Friday and Thursday, all right, I'm looking to hold that level and take it to 38.40. Okay, that's that. All right. Let's see here. So, but I'm going to be waiting for the shareholder meeting, obviously. Tesla is right now bouncing back to Friday's low. Now, I'm watching the 20-day. I'm going to get really in-depth with you guys really quick. All right. I don't. So, again, this is the same thing as GameStop. If I'm looking at the chart versus the indicators, I'm getting two different stories. So, you have to, when you start looking at charts, or when you're looking at whatever it is you're looking at, like obviously what I would say is if you're trading semiconductors, okay, obviously the trend is to the upside. Where's the strength and where's the weakness within the sector? Tesla does not do anything that Ford and GM and Rivian and all of them do. It is a mind of its own. So I can't say watch the automotive market. No, Tesla is and of itself. All right, so we'll look for pops from Friday's low. Right now, you're getting it. If you guys look right here, this little support level, I'm watching 178. 178, and that's where that 100-day moving average is sitting at. All right. Looking for tests back into which you just popped right back into the 20-day. What I would say is be careful, because if we open up, maybe we test Friday's close. I'm watching the 100-day. I'm watching $78 and that 20-day and 100-day moving average. To the upside, obvious 180. Okay, everybody and their mother knows about 180, but I don't think that's where your resistance level is. Your resistance level is back here from Thursday's low. Okay, the support level here at 182 to 181.50. Now I'm going to show you guys. Look here. What do you guys have back here? Look, you see this double top? You guys see this double top right here? Right? You see that double top? Where's that line up with? That prior support. So that's the long. That's my target for the long side. If we can break above the 100, like if we start coming in with some volume today and you're just seeing bang, 178 hold, bang, the 100-day hold, bang, we're up at the 180. You get a slight pullback off the 180. Psych, sucks all those people in short at 180 and it breaks through 180 and it's heading to Thursday's low. Maybe we make 180 support because, again, you have nothing stopping you really to 186 if you get above 180. That's what the indicators are saying. All right? That's what the indicators are saying. But I'm going to take it step by step. That's how I'm going to play it. What I just went and said to you guys right there is probably how you're going to hear me speak today on this trade. What are we doing? Okay, Friday's low. Right now, we're getting a little bit of resistance there. Do we pull back to 178? 177.50, find some support, bang, bunch of buyers step in, using level 2, time in sales, and seeing how order flow is acting. I don't know what options I want to be in yet, which would be a smart idea to get looking at. Obviously, some of that volume and open interest is going to change, but I have an idea. I have an idea where I would like to be. More than likely, I might go for the 180 calls for the upside. We'll have to see when it opens up. Let's see what happens when it opens up, and I'll let you guys know what strike price I go after and all that stuff. I'm going to tell you guys right now, I'll probably go with one that's about $1 or $2 out the money, depending on Delta and all that fun stuff. So that is Tesla. All right, that's Tesla. All right, we have GameStop shareholder meeting. I just covered that. You have some upgrades and downgrades as well today with semiconductors and stuff. So Netflix. Let's go back to Netflix. All right, so we said, Friday we had a really nice breakout day, and I forgot about this for some reason. I forgot about Netflix. And this was a nice setup because this was one of the setups that we've been attacking. And it has been showing itself all over the markets. All over the markets. And what is that setup? That setup is breaking out and closing into an area. Breaking out into an area you guys can see right here on Netflix on the daily chart. You see how you broke into this area here where that resistance, this was your resistance here at 650, 649. All right, you start closing up there, you obviously got the gap down. You came in with the gap down, still held the 20-day, bang, on a run. All right, I mean, and honestly, this is a pretty nice pattern in and of itself. You had these previous double top highs there, broke above, consolidate, bang, it just took for it to put in that resistance zone and that prior resistance zone to get broken. All right, and that was it. Once you got into this area, once you started closing candles above 652, right, it just tells me this is how we played Microsoft. Once you get above here, you have all this room back up to 665, and from 655 to 665, that's a nice $10 move. That's a nice margin. Wait, what is it? What is going on here?
Responding to CNBC today, saying board and management maintain an open dialogue with their shareholders and welcome constructive input from them. We'll talk more about that in a little bit. Get the opening bell in about 6 minutes. And don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
Today's Money Mover, Dell CEO Michael Dell, Sarah Eisen's exclusive interview, the impact of AI in the workplace and on the economy. Insight for every investor. Money Movers, today 11 a.m. Eastern, CNBC.
Paris is a dream come true. I've worked for this. Paris is going to be amazing.
NBC Universal's coverage of the
Bro, what?
Paris Olympic Games, brought to you locally by your tri-state Toyota dealers, proud partner of Team USA.
I love working with my sons. Where are they?
Anyway, I'm trying to see here.
Today's backyard is so much more. A home office, kitchen, and a staycation.
So make yours spectacular with Cambridge. Our unique ArmorTech process keeps colors rich and they'll stay beautiful for years to come.
You'll never want to leave.
Visit Mulchworks Recycling today.
Is it me or is work not working? At least not the way it could. Your people are buried in busy work. You might be thinking, can AI make it all work? It can. On ServiceNow platform, AI transforms your entire business. Because when your people work better, everything works better. So, let's get to work.
Get yourself over to there. He's super nice.
All right, sorry guys, I was just trying to log in. All right, we have just a few minutes here. Let's get going. All right, good luck today. If you guys have any questions,
You know what? Here's an idea. Let's ask Markham. That's good. Now, lunch.
Ever wonder where the people with all the answers get all the answers? Ask Markham, accountants and advisors.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating
oh my
change
god,
for
I guess I can't do that.
125 years.
All right,
Always looking forward, anticipating
hold up.
risks, and trusted to manage the
You gotta be fucking kidding me, man.
solving for the needs of investors today and
Sorry for the cursing.
that's the power.
All right, guys, let's get right into it. All right, so if you guys want to, if you guys have questions, throw them down below. If there's anything I can help you guys with, I'm looking to demolish this week. All right, hit that like button, subscribe. If you have any questions, post them below. If you guys end up trying to, dude, this is so weird.
That would mark the next step in rolling out that
I,
feature to Chinese drivers. Of course, last week we had the time
I swear, man, I fucking hate Google. I really do. I hate Google. I do. Like this, some of these companies have gotten way too big for what they are. See. All right, let's do it. All right, that's Netflix. Let's go over here to Tesla. All right, so I'm still again watching Coinbase.
1 minute to the U.S. market open.
Coinbase, Morgan. Yo, JP gonna reject again today? Are you serious?
The question is, what implication could this have? Obviously, Twitter's a private company, but could it matter for Tesla? The Wall Street Journal with a piece that, if this amounts to something like the SEC asking a court to
Wow.
revoke his privileges,
We do have 40 seconds. I want to see JP Morgan real quick. Wow. Because we could have some nice downside if you have the markets pull back.
2024 domestic
And
globally.
again, I've said this last week. Watch if the market pulls back and Tesla goes higher. And then the next day, like follow it for a few days and see if you don't see that that type of price action where it just kind of does the complete opposite of whatever the market does. Because I kind of got those vibes, I should say. All right, good luck today, everybody. Again, I'm sorry for that because I did not mean to get our ears crushed by the bell. All right, here we go. It's on. It's on. It's on. Let's go. Man, that candle is so small right now. All right, Tesla rejecting the 100-day right there, right now.
U.S. Supreme Court agrees to hear a bid by NVIDIA.
Boom. Let's see if we get some follow through right there. Fuck. See, this is why you got to be ready and quick, guys. You got to be ready and quick. Fuck. And what did we say? What did I say? Watch for 178. Right? We're going to sit and watch 178 Friday's low. We're not going to play games. We're going to see if we get that bounce and they get sucked into the short and it quickly reverts. I told you guys that. I told you guys that. There it goes. Your resistance level is up there at 179. Bro, are you serious? What is going on here? Wait. 330, 11, 1140.
Dow Jones Industrial Average down 148.43.
Bro, that's so bad.
500 down 6.09. Nasdaq is up 12.39.
Alright, she's breaking. She's breaking. Wow, look at that reversal. She's just really trying to suck people in. Wow. I didn't take anything yet. I'm being patient here. Because I know that what we talked about this morning is that the rejection level is up there at 183. But it's very difficult to go long when she pulls back like that. All right, gotta look for... I mean, what's weird is that they're still paying. All right, let's just watch here. I want to watch this level right here. I'm watching this level right there. All right, so what did we say? 182.50, right? 182.50 is your resistance level. Previous double top high. All right, you'll have to use it with pre-market levels on. If you get above this 180, this is what I talked about. I said, look for the shake and bake. Watch for everybody to get short, and they suck them in, and they run it up. All right, be patient. I'm telling you guys, this is where I want to be short. But again, we said, do you want to be long here off the 20-day if it recaptures to get up into that level? That's a decision you have to make. It's a little hard, you know, when she pulls back and, you know, starts acting like she's going to reject levels, pulls back, quickly reverts, and goes higher. So, clear strength there this morning. The volume isn't too crazy, right? It's not too crazy right now. It's not like it's a increase in volume and what, like you have massive amounts of volume here today on it. So I still have the puts up here. Damn, they're so much cheaper. Wow. Now that is a good. Now that's crazy because these now look, right. These are on these 173.33, which is weird. Why is it 173.33? That's so weird. Um, they're now down just about 100%, guys. Well, I'm not going to say 100%. No, they're not down 100%. They're down almost by 50%. All right, and we said look for the pullbacks. What did I say? Said it's up to you. Look for the pullback off of that 180, or if you break through it on volume, which right now it's not really that crazy because if you go back, right, it's not.
U.S. Supreme Court has denied petition to air
It's not bad.
case gaming compact allowing online sports betting in Florida stands.
And on the operations front, you know, they were probably looking at it before all of these sort of governance and accounting.
Wow. So here we go, guys. Here we go. I love this shit. I really do. I love this shit.
Growth business. I mean, the company has still grown, and we've talked to the CEO a lot, Carl, about
All right, look for pullbacks in the 180. You got a nice $2-3 move there. Possibly. All right, you would look to get up into like 182, 182.50 to 183. That whole area up there is what I'm watching. I'm watching that area for a possible rejection on Tesla. That's where we wanted to be short. I just circled it for everybody this morning. So if you were here with us, that's
Trade is circulating a report from Business Korea. DRAM prices to double.
Elliot Love, and now this. Speaking of Disney, Inside Out 2, we've been looking for something to rescue North American box office, and this is the best opening weekend since Barbie, second best animated opening since The Incredibles 2 back in 2018.
Did you guys see Inside Out, the first one?
No.
Okay, I could have told you that this was going to do well.
Oh, I couldn't do.
That movie is genius. My kids don't like any movies. They only want to watch sports, except for Inside Out. And they're dying
Shares
to
of
see
Micron
it.
getting a bounce here on that.
I know if that's my story.
MU.
Micron, nice low volume reversal. I would think that 145 is a nice resistance level there. You got some support now coming in. It's just really low volume. Yeah, that's a nice extension. You broke above it now. There's your opening range. All right, so Tesla is up 1.5% now. Let's see what happens now as we pull into 180.
First one about puberty, but look, Disney's adding the most to the Dow right now. It's adding 10 points to
And the narrative as to whether movies are alive or dead basically changes every weekend. So you have to just more or less take it on, you know, as the releases come. Yeah. Meantime, Chips obviously once again with their hand on the string.
I wouldn't know if Tesla's going to finally break out or not.
Sarah, as BMA goes to
I want to know if that's what's going to happen here. I'm still leery, guys. I'm still leery on this. I really am.
look, this is partially why the NASDAQ 100, the NASDAQ, the S&P, and the semiconductor ETF all broke out last week. This is the story of the market, Mike. And
What I have to do here is... Okay, so I don't have to move that too much.
NET,
But I
Cloudflare,
do...
Morgan Stanley out with a note
most of the evidence comes down to
says they have reasons to believe that Cloudflare is the main provider of Apple's PCC's OHTTP relay.
Oh, wow. Net. Watch net, guys. Watch net. Watch net. Watch a reversal here possibly on Tesla. It's pushing up through 180 right now. Low volume pullbacks right there. Keep an eye on net. You just had some news out on net right there. I'm not sure how liquid this is. If you want to... Damn, this thing's already back to 70. So I bought Cloudflare. I bought net around $32, 30 bucks. I didn't really have faith in it at the time because I went and visited their website and it just really felt a little shady. Like, you know, it was like...
Cloudflare shares right
It was just
now
weird. I can't explain it.
off the
That is an interesting case study because it did fall almost 20%.
earlier high 76.40 up.
Are we gonna fail here?
1% for NET.
Are we gonna fail? Let's see. Let's not fight the trend. Let's not be one of them.
so it's
Let's not fight the trend.
Every other sector is down. Utilities giving back 1%, but we're coming. What 1 week out, Mike, from the half year, so from the end of the quarter, and I don't think anyone expected. Look, and technology, obviously the best performing sector, up 30%. Communication services.
Let's pull back and hold. Yo, guys, if we pull back and hold this level from Friday, this could be a really nice trade because we have some nice room up above us. Like seriously, you have some nice room up above here. If this does hold, I mean, you have nothing stopping you. Obviously, you take profits in front of 183, but and she broke. And she broke. There's your 38.2 coming in. 38.2. 38.2. That is so weird. They have the weirdest options on this thing. Chatbots and drive-thrus. Chatbots and drive-thrus. Chatbots and drive-thrus. That's what they're talking about on CNBC. And I'm just coming up with my own.
U.S. hotel chain signs 2 security robot contracts.
Bro, there's all kinds of news today. Chatbots and drive-thrus. All right, where's the overall markets at? We have the SPY, not just still sitting there. All right, let's see here. That's some nice volume on that wick low, 180. So look, guys, you guys have 38.2 trade line, VWAP, 180, all lining up in this area. Let's see if this continues to hold on Tesla. Just keep an eye on the volume. Again, I don't really have conviction either way. I think the level, if you're looking to be short, is up there. Or if you want to look for, you know, downside move, I think you got to look for it up there at like 182.50. That's a level that has shown us and proved to us that's where we want to be short. If we look to the left, 180 has really just been a resistance level, right? It's always been resistance, 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 resistance. But it looks like we're trying to break above it and hold. So let's see if we hold here. Then you can get long here, 179.95 VWAP area. Okay. Get long right in this area. Look for the pop extension. Take profits in the 182.50. I'm looking at the 185 calls for this week. They're about $1.70. I don't really like the deltas on these. Look at that low volume break. All right, low volume breakout. Again, I am concerned about this level up here at 182.50. I'm looking at Thursday's low. Let me actually do my due diligence here and make sure I'm making the correct. Yeah, see, this is. Yeah, you might need another little pullback here. May need a consolidation. If you look, I know we haven't really gotten to our 15 minutes yet. We're almost there, but you guys can see the volume isn't that bad, but it's not this, right? It's not 9.5 million, 8 or 9 million shares traded in 15 minutes. Shit, it's already left, didn't it? She already left, didn't she? It could still consolidate. Give it time. It'll probably sit here for a little bit. Let that trade line come up. Alright, so the SPY is still sitting on support from Friday. Or from last week, I should say. That's the level, in my opinion, you want to watch is 542 on the SPY. That's the level I'm watching. 542. Okay, so 1 minute candle here. I use the 1 minute so I get a look at really the volume and what goes on underneath the trade. Like,
But you know what? This is the age where you can eat junk food and get away with it. So, you know, they give it a try, but I'd like to think they come back to.
let's see if we can break through these highs here. Break out through new highs. Can you do it? Damn, that's a double top up there, guys. Double top so far on Tesla. Uh-oh. See if this is, see if she's tried. Wow. Come on, we can do it. I should have took my ass long. Bro, my stuff is getting screwed up here. Dude.
Shares of WeTouch getting a pop here to the highs now.
I think it's kind of. I don't have any insight into whether they're making or losing money. The fact that they're still here means that they're at least a zero sum on some level. Probably zero sum.
I mean, to Carl's point about JT, I think one of the arguments is that, you know, if you feel like housing is chronically unaffordable, and I feel like I'm never going to be able to have that, you know, kind of orderly accrual of wealth.
Shares up about 10% on WETH.
And you know, I can either sort of look for the long shot and bet it, and I'm okay if I lose, or you know, I can maybe hit the score and I'll be one of the lucky.
Dude, I'm sorry guys, I haven't.
Crypto is entirely part and parcel of that, and I will say one of my Gen Zers is basically does social media for a range of crypto companies.
There it is. That's a nice breakout. Yeah, that 1 minute volume was nice too, wasn't it? All right, pullbacks. Look for pullbacks. Look for little wicks in there. You're coming into resistance, guys. Understand that, or at least know that you're coming into resistance up here.
Bearing in mind that VIX is always looking ahead 30 days, so mid-October VIX is looking at the election. We do see that bump. It's not there yet, but I do think that bump is going to get more pronounced as we get closer to the election, because I think
I'm really eyeing this level up, guys. I am really eyeing this level up here. Very nice breakout. This Tesla's just strong, guys. She is strong. Let's see here. So we're up right now 2%. We have moved high to low 177, 181, 78, so 9, 80, 81, 82, so $5. What was this? 77, 85. Bro, like, look, everything is screwing up on me right now. You gotta be fucking shitting me, bro.
Like being too conservative or not setting retirement goals. Have someone on your side to keep you on track. Call for Fisher's Comfort.
That might have been a dip buy opportunity right there. I just don't want to pay up for this. Let's see here. What's going on?
The Keepsake Frames app makes it ridiculously easy to frame your favorite photos. Just choose a photo that you love, select the perfect frame,
Alright.
and you'll have your framed frame delivered and ready to go. Download the free Keepsake Frames app and start framing today.
Sick of being hot, fed up with fans and sky-high electric bills? Then you need Arctic Air Pure Chill, the personal space cooler that cools your place while saving you money. Just add water and turn it on. Pure Chill has 3 Arctic settings and is whisper quiet for a comfortable night's sleep. Place it in the living room and never break a sweat. Stay cool while you cook and breathe easy as it humidifies your room. Plus, our True Shield filter removes odors. Get your Arctic Air products online or at these fine retailers.
Okay, ready to watch this? 1 second, I gotta finish my laundry. Yes, it's nice. 1 I use Rinse. What's Rinse? The company that will pick up, wash, fold, and deliver your laundry directly at the touch of a button. I do not trust other people with my laundry. Rinse guarantees your satisfaction. I've been using it for months now with no issues. Okay, let's watch this.
All right, so you broke that level there. Look for 542 on the S&Ps. 542. Come on, man. It's going to be a big money week. I'm telling you guys. It is going to be a great week. I'm going to make it one. And this is probably one of the last live streams I'm doing.
One of Kramer's favorite names in the last few weeks had a very nice call at Best Buy going to 90.
SINT, Syntax Technology, popping
All right,
there on
let's
high
go.
volume. $6.14, up 24% at the high SINT.
185. So I'm looking at these 195s. Or 185 calls. 185 calls.
Clem's not a morning person or a people person, but he is an I can solve this in 4 different ways person.
All right, so we're back under. We're back under this previous low. Is that a failed breakout? Hold on. We had nice volume on the break. It should act. Look, I'm clicking. It's not giving me what I want. There it was. There was that breakout, guys. Ooh, that volume. Look at the volume. It's 1100 to the buy side. Uh-oh. Uh-oh. So you can see people are hesitant, it feels like, to get long into this 182.50 area. That's what it feels like to me.
And in just seconds, you can use the free calculator at abacuspace.com to learn what your policy might be.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Don't sell or lapse your policy without going to abacuspace.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
Okay, what do we have here? Let's see.
More times about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to all investors, sophisticated investors, beginning investors. I'm always learning.
Closing bell overtime, 4 Eastern, CNBC.
I got this $1,000 camera for only $41.
All right. Man, I don't want to be an idiot and fight the trend. I really don't.
This iPad Pro sold for
But
less than $34, and this Nintendo Switch sold for less than $20.
part of me feels like I could... Let's see. We got to get this trade line way up above there. I'm looking...
Right now and see how much you can save.
Yeah, we'll just see if we hold this level. I'm going to relax and watch 180.
So we went to go see it.
All right. I'm going to relax and watch 180.
But then he pointed out the gutters.
You think you've raised the right bid?
I don't want to correct the bar. I just want to auto zoom. Why would I correct it? What is there to correct? If it should already be correct. You shouldn't have to correct bars.
It's a lot easier with leaf filter.
Some of the stupidest shit I ever heard of. Do you want to correct this bar? What are you saying? Is it wrong? Is it wrong? Yeah, this looks like a low volume. You guys can see. I know you guys probably can't see it. You guys can see this volume here. It's just really low compared to that. So, and you're coming up into that level now. So, I'm watching 183. Alright, 183. You guys can see this is 182.50 to 183 is that level there. Let's see if Tesla, yep, that's it. It just rejected. Hold on. I just don't really, we're above 180. We'll see if we get another pullback into like 180 area, then I could look for a long. Maybe we'll look at like See, I don't even like 179 because that means we broke 180. And chances are if you get down in here back below 180, you start turning it into resistance. And this is nothing but a lower high and a retest of Thursday's lows and Friday's pre-market lows. And that pivot low, you're just retesting that on a longer time frame. So, and then the S&Ps, nice rejection there, one of 542. All right, Coinbase, Bitcoin I think is pulling back. All right, ARM is pulling back. JP Morgan's hanging on, doesn't surprise me. TLT. I'm just naturally when I press a T, I go to the S and L. Oh yeah, look, TLT pulling back, guys. So yields are going higher today. FSLR was a rocket. We were watching that last week. That's one of the stronger solar names. It's got some support down here at 260. EMPH, Sunrun, RUN. That's a nice bounce on Sunrun. Look for the rejection back down into like 1298. Coinbase is really yanking, guys, on volume. Coinbase has some nice volume, it looks like.
Is it a fad? Do you think that just people protein now, or this is a long term story? I think it's a long-term story because remember, health kind of comes and goes, and Chipotle was a leader on this one. And remember, a few years ago, made the whole 30 partnership quite popular, and that also helped grow both their lunch and their dinner business because people wanted something that was.
So our plan today was to see what do the overall markets do and does Tesla do the opposite. So far, that's the case. All right, Sunrun 1350 rejection. What else? What else were we watching? mRNA. All right, Moderna's now down into the gap, bouncing back, trying to get a slight bounce. I really wish I knew why this shit signed me out.
Richest guy in the world. I have time to give.
I have people I can count on.
And a million stories to share.
The key to being rich is knowing what counts.
I fucking hate this, man.
81,000 people died in the U.S. of an opioid overdose in 2023. Now, a NASDAQ company, Kindly MD, stock symbol KDLY, is one of the first companies in the nation to integrate medical cannabis recommendations to treat addiction to opioids. Kindly MD, 31,000 patients treated, developing a national database on the use of medical cannabis for the treatment of opioid addiction, rapidly scaling revenue with proceeds of recent IPO. Kindly MD, symbol KDLY.
This is our future, Mom. GoDaddy Arrow creates a logo, website, even social posts in minutes. How? AI.
AI like it. Who wants to come see the future?
Get your business online in minutes with GoDaddy Arrow. These bills are crazy.
She has no idea she's sitting on a gold mine.
She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even on term
Find out if you're sitting on a gold mine. Call Coventry directly.
LICY popping here, Lima India Charlie Yankee.
Visit Coventry.com.
For decades, venture capital has arguably been one of the highest performing investments. For most investors, it was
Traders
average
circulating.
until now. With the Fundrise Innovation Fund,
The
you can
report
invest in
on
some of the world's
IREN,
top
Iris
companies,
Energy.
including those leading the AI revolution.
Financial
before
Review.
they go public. Now it's your turn to get in early and start building a portfolio of
IREN,
industry
formerly
leaders,
Iris Energy, that's India Romeo
with the
Echo.
Fundrise
All right, here goes the SPY reclaiming
Future is now open.
542.
This bakery needs new equipment fast
Trying
keep
to.
up with demand.
Dude, Coinbase is really getting smoked right now, guys. Coinbase is getting smoked.
As soon as the same day.
Wow, it's got room all the way down, honestly, back down to 220. 230, 220. This is a pretty nice support level here. I just worried that you are underneath the Coinbase is underneath the 20-day now.
L3 Harris and Accenture collaborate to accelerate technology reinvention for growth. That's Lima Hotel X-Ray and Alpha Charlie
All right,
November.
50-day, 50-day moving average.
Lower, came back, and now a number of sectors have turned green, along with information technology, which is, of course, up top where it has been lately.
All right.
Consumer staples, industrials, energy, and consumer discretionary all in positive territory. The NASDAQ 100 also has gone positive this morning. Again, it's been a huge outperformer for the quarter, up 8%. For the year, up 17%.
DELL,
Thanks in part to strength
Dell,
in the
Michael
chip
Dell,
stocks today. It's Broadcom.
Michael
CBC,
Dell.
11 a.m.
All right. It looks like you could have some room. You know, I'm neutral this thing. I mean, really the support level I think you got to look at is right around this 220 level. It's a wide range. It's not really one. It's not. Let's see. Yeah, that's what I would use. I would use that. I would use like 218 to 220. All right, 218 to like 220. But really, let's worry about the 50-day because that was support prior, and that means you still have like some ways to go. You still have a few dollars left here from 335. This 335 to 330 level would be considered support anyway, so be careful trying to go short through that level. What I would do is I personally would wait for the bounce back up into this 20-day up there at like 240. That way you gotta have $10 instead of $5, and there it goes. It breaks. There she goes. There she goes. Quick shake and bake. And then watch Bitcoin, BTC, USD, BTC, USD. Hello, hello. I don't know what song I'm singing. So 64, you got a little bit of. Wait, we're below that? Give me the hourly chart. Yeah, 64. 64 is your support level. And then watch for that bounce back, like we said. Watch, look for the bounce back down there. That's a support zone. Should be at least. Alright, I need to get in Tesla real quick. I mean, I don't need to get into anything, but yeah, 640, 642. That's where you want to be short. You want to be short up there, not down here. Alright, see if you start getting a bounce here on Tesla. Come on, we can do it. That's a low volume bounce. All right, let's see what happens here. Let's see what happens here. You can see the volume kind of just hanging out a little bit. I went and grabbed a cup of coffee real quick. I was thinking about if we get a pullback in here, what I want to look for is, so here's what you could see. You could possibly see a breakout, a small little breakout there, and then, or what would we say, a pullback above yesterday's highs. Because I'm trying to see the minute we start, because you can see to the left here, the bottom left, right? You guys will see here that nobody's really even liked this stream anyway, fuck it. So you get this breakthrough, right? You smash through that level, and what's that do? It just cuts that level, and it starts yanking that trade line down through it. Then you get the pennant flag, and what happens when you get that huge gap? But look, you consolidate, put in a pennant, you just consolidate a flag, right? And then what happens the minute you retouch that? So I'm looking at it the same here, down, over, bang. That's your trade. Up, over. So the pullback, I'm looking to see, but you know, even if we're a little, see, this is where this shit starts to piss me off. TC 2000, here I come. All right, I'm done with this shit. I don't know why I stopped fucking using it in the first place. So what I'm gonna do is, yo, you gotta be kidding me, bro. You gotta be kidding me. I'm gonna look for either this consolidation or the pullback. Look, 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 look. It won't even let me do the window. You guys see why I get frustrated? I do apologize. It's not even, look, like it has a mind of its own. So I'm gonna look for this pullback. So this is weird because you just have like this gap here. You have this floating gap. Now, can we get the pullback? Right, you get this pullback on the candle, which is doing it now. Does this pull back down and start yanking this up? I don't think it has enough energy to yank it up. I'm not sure. So I'm still kind of just being patient. And maybe we need to just waste time. Maybe you need to eat up a bunch of time. And then once you start closing candles here at 180, 180.50, it'll start pulling up there. Then bang, you can take that up to, like, you know, you want to take profits into 182.50 to 183 because that's a heavy resistance area. All right, and that's last Thursday's low. So, I'm just trying to figure out point of entry here. The volume, just, you know what I mean? Like, this is a long consolidation here. You're not doing anything. So far we made the right move. And again, guys, I think you need pullbacks down into 180 because you could bring some long scalpers to try to take a scalp to 180, 150, 181 and get that $1.50, maybe even $2, or to try to catch the breakout. But it's hard to get longs here in front of this level. It is, because they're like, yo, wait, I'm gonna get long right here. The minute I get long, I gotta sell it because it's fucking resistance. It's Thursday's low. Not only is it Thursday's low, look at the freaking previous double top, triple top you have there. Look at this. So you guys can see that area, bang, support, did not hold. Does it become resistance? And this was the game plan this morning. 182.50 to 183. What are we going to do there? Are we going to break it or are we going to reject it? So pullbacks, I'm going to tell you right now, we get any pullbacks back down into 180, 180.50. All right, I will attempt, because again, look at this. I mean, you got to honestly look at this. You'd be up probably about 6% or so. All right, maybe like anywhere from like 4 3/4 to 6%. That's a nice trade. That's a nice trade. All right, 180 to 186. That could be a really nice trade. We do have some, you know, the volume's somewhat there. You just have to take profits. If you get long, you have to enter correctly, but you have to understand, you know, you want to be long down here. and taking profits into 182.50, which it feels like it's probably going to start doing now. All right, you got to just understand what's going on, and you know, we're eating up time. Let's get a pullback, a little shake and bake pullback. I think that's it. I think it's going to start pulling back now. I mean, I don't know, but I think if it does, it should start soon, because it feels like it's getting on the ass end of that wedge. You guys can see right there. See what I'm saying? Right there. That was the first pullback. That was the trade, honestly. That VWAP hold at that 179.57 level. All right, let's see. Do you start to get that pullback down here? All right, we still have GameStop to worry about. I have not even really looked at GameStop, so I do apologize. Because GameStop still has a nice setup too. GameStop has a nice setup as well. Look, are we gonna pop just to reject that level? I'm telling you guys. So it's a 180 long VWAP. Yeah, look, you guys can see this pop. If it happens, it's gonna start yanking that trade line up through VWAP. Then we look for the sideways action. You know, that's what I'm watching for, at least. That's what I'm watching for. Let me put up GameStop to the bottom right. Gamer. Did you guys know that was a ticker? Is this thing still alive? GMER? 2024. Yo, let everybody know about this. Are you serious? Good Gaming Incorporated Gamer? This is a stock. What? That's crazy. I think I want to buy this shit at part. Look, it's a penny stock. Literally a penny. It's not even a penny, is it? It's not even worth a penny, is it? Yeah, it is. I might hit these people up and be like, yo, let's do a little sponsored event here for Gamer. GMER. Alright, GameStop. Alright, so we said, I gave you guys the analysis this morning on it. And she is breaking down bad. Oh no. Gotta hold this level. Gotta hold this level here. Has the shareholder meeting started? Let's see. Let's see here.
I chose Wix.
I chose Wix. Yeah, that's gay. Excuse me. Excuse me. Well,
SPY just made a new high of the day and ripping ass above all the 1 minute EMA.
I'm such a good trader. I'm going to show y'all how to be a good trader. No, I'm just playing. I'm just on my ish today. All right, when is it? When is it? When is it? Wait, let's see here. Let me go here. Let's go to GME. All right, SPC Virgin Atlantic gets flattened today. Who gives a shit? Reverse play. What's the best case scenario? Okay, why are they giving me space? GME. I don't want space. 12:30 Eastern Standard Time. No hood shareholders allowed though. Yeah. Okay. Whatever. All right. S&P holding 542.50. Is the Dow still dying? Is the Dow still dying? Is the Dow still dying? JPM, JP Morgan, Coinbase. Coinbase is almost down there at 230. 230. This 235 level, if it holds, you could have a nice reversal back to 245, guys. That's a nice $15 move. Watch for longs here at 235 on Coinbase. Watch Bitcoin. Don't just front run the move, but I'm just giving you guys an idea there. So still under the 50-day. JP Morgan's still under its 50-day. So you got your pullback in the morning, and do you rally the rest of the day? Understand how the market how the markets tend to work,
company naming
right? We pull back in the morning to like 10:30, get that nice move, and then you get a slow move back to previous highs or lows or wherever it is that it's going from 10:30, 11 o'clock, from 11 to like 3:30, 3:45. GameStop, what you doing, baby? What are you doing, baby? ARM is pulling back too, so we're getting some weakness in semis. All right, so Tesla, if you guys were wondering, 185 calls. I think, yeah, 185 calls is what I was looking at. All right, 185 calls. I don't like it that it's that far out of the money, honestly. I don't like that, but I think it's doable. I do. I think it's doable. 50, 177.50. I kind of like these 177.50 puts, guys. 177.50 puts. I might actually watch these real quick. All right, let's go back to where we were, like Dora likes to say. All right, and there's your breakout. There's the breakout on volume. Very nice. Very nice. All right, previous highs. Here we go. Here we go. What's it going to be? Come on, let's rip through this level, guys. Rip through this level. Watch for little wick pullbacks into the previous high. That's going to be at like, bust a move. Bust a move. 181.50. 181.55. All right, but again, we've went through this over and over and over. You got to watch this area. If you're long, you got to be taking profits at this level. All right. This is a good sign. This is a good sign. All right. That increase in volume, but you want that increase when, you know, breaking it, not going to it. It's like, yeah, I'm home, but I haven't walked through the front door yet. So am I really home or am I just at my house? You know what I'm saying? So you want that on a break, because you're solidifying that those sellers that were there will turn back into buyers on those pullbacks. All right, because if you understand what's going on here, if you look, sellers, okay, just saw 180 be resistance. They just saw 180 break. They said, oh shit, 180 broke. So you get that pullback, you get those buyers stepping in there. Okay, this is a little, I'd have to throw up the other, whatchamacallit, but just understanding the psychology behind why does support become, or why does resistance become support when it's broken and whatnot, because there's a fundamental shift in the order flow, right? So if I'm a buyer, right, and I just see 182.50 break, or I just saw 180 break, I'm like, oh shit, I was a seller at 180. We get pullbacks. I want to buy back in because I just seen it break on volume. Like, okay, we broke the level. We get pullbacks down here. I'll be bullish, and then when it breaks, I'll be like, shit, 180 didn't hold. I don't really want to sell it for that much of a loss. If we get back to 180, I'll be a seller there. So it's just the psychology. You see it more so in others than Tesla. It's, there's just a lot surrounding Tesla. It's such a heavily traded stock that that type of buying and selling of the shares, that sentiment, because it has a mind. It has a mind of its own. So you don't really get that as you would with like Intel or Ford or Apple, maybe, right? Did you see why you had that explosion? Because all those sellers that were there on Apple turned back into buyers. They saw that level break. They wanted to own it. They said, okay, let's go. It's time. So all those sellers that were there flipped and reversed back into buyers. I have to give you guys I have to find a good example to show you guys of that. But people buying here, right? So look at this day, last Thursday, right? Look at these buyers here. You had buyers here, buyers here, buyers here, buyers here. What happened? The level broke. Do we start seeing sellers step in here? Let's see. Let's see if that's the case. Because those buyers from that Thursday level right here can now get their money back, break even, or a very small loss, do they try to step back in? Or do we break? Look at the volume. This volume is really falling off here. That volume's really falling off. Now we just got to see, do the sellers step in at this level where it was previously bought? Do those buyers turn into sellers? Let's find out. We are about to find out because we're there. You know, we do have momentum. There are things like that, intraday momentum and news, right, to go along with all of that fun stuff. So what I would do is I'd put this right here. Here's your high. Your previous flat top high right there. I can make it bigger. That's what she said. And 9 EMA also right there. All right. Nah, that's not going to work. But see if this holds. Because you broke that previous double, triple top high. Increase in volume on the break. It should turn to support. And then, again, I'm not doing it. But you want to look for that. You want to look to start breaking out of through that level. That's a major level there. You do not want to see on the 1 minute or even the 3 minute or 5 minute this level start. See what I mean? Like, look at the volume starting to increase on the 1 minute. It's starting to increase on the sell side because buyers from Thursday can now get their money back. They're going to step in and start selling. Watch level 2 and time and sale. So time and sales is to the top right, if you guys can see that. And then your level 2 would be this bottom left. This screen down at the bottom would be the left part is the level 2 of the stock itself. On the right hand side, that is your options price that I'm looking at, the level 2 for the option. All right, I'm watching the bid and ask for the options as well as stocks. Let's see here. Everybody nervous. People don't want to step in and buy here. Let's see. That's a nice pullback to the 9 EMA. This is a trend. All right, we've spotted a trend here. If we bought here, we've been paid. We can take profits. All right, that 9 EMA right there. Look, how many times? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Breakout. Pull back. 12th time is the charm, right? 12th time has got to be a charm. All right, I might grab the, I might look for a pullback down to 180, down to VWAP here. Let's see. Let's see if we can get it. I think I'm going to try for it. All right, where am I at here? So I already have the 177.50. Oh, hold on, 44.18. Damn, 175. I kind of like 175 better. I don't actually. I'm worrying about... Alright, so I'm going to look at the 177.50 puts to see if we can just get, you know, a small, possible little scalp pullback here off of this level. Again, just be careful because we can sit here and trade sideways. You are getting the 90 EMA coming up here through VWAP. Let's see. Yeah, that sell volume is really stopped right there, guys. Let's see here. Can we get some buyers here to break? I want to see an increase in volume on a break to this level. Man, you have nothing stopping you too, man. If this thing gets going, guys, once you break 82.50, it's 186. 185, 186. You have nothing stopping you. This is your level. That's just my opinion. You have a straight shot to 186. I don't know if there's news going on with Reddit or not. It sounds like it. Yeah, that sell volume's really low. All right. Let's not fight it. If it doesn't fit, you must have quit. If it don't fit, you must have quit. Let's see. And we are up about 2%. So ATR, remember your ATR. So if you're like, man, it's already made the move, is there enough left? Well, high to low, 177 to 187 is $10 on a nice high volume, high volatile day. You should get at least $8. That would take you to around 185. And to odd, that 185, 186 lines up right to the area we're looking to get to. So 177 to 186, you know, 185, that's $8, $8, $9. We can do that. We have the volume for that. So these are all things that, you know, it's not hard once you've done it over time. But saying, okay, the average ATR is about $5, $6. We're up $2.50, $3. We're above that resistance, or we're making this support. We should have at least $1.50, $2 left. You know, you think about that in real time. Like I said earlier, I think you could see Tesla up today, finish the day. If it finishes green, you should see it up today about 4.5%, maybe 5% if it closes green today. And that would take you to the average ATR with the volume that we have, right? It's not outrageously high, but it's also not low either, right? Which could give us about a 3.5% to 4.5% day. So using all that should give you the confidence to take trades at certain areas, whether it's reversals, continuation, just understanding what you have left on the move that you're looking for. You could come in with a gap up tomorrow as well. All right, we could also reject this level. Look at the 15-minute chart, man. I think this is a nice opportunity. I'm still thinking about the scalp short here. Pullback to VWAP to like 180.75. I'm watching this volume break here. Very low volume there, guys. 177.50. I'm trying. I want that. Okay, so there it goes. So it's trying to increase here. There it goes. 1 second here. 182.50. 182.50. Yeah, 182.50 would be right there. That's our level. Look, watch that volume. We need it. The only way we can trust this level to hold is if we get a candle on a breakthrough that looks like this, right? Like a nice solid volume break there. You don't want to break it on a low volume. Then you're not going to be able to trust that breakout, right? You don't want that. You don't want a decrease in volume, but go breaking through this major level there. All right, this is a major level, whether you want to believe so or not. All right, so 177.50, 177.50. I don't like the deltas on those. Shit. I don't like the delta on those 177.50s. And there it goes, see? You look at the 1 minute. You got that increase in volume on the breakout. Now we should get a splurge of buying if we can break this and hold it. Man, we're so extended, though, on the 15-minute chart. Let's just watch it. Let's be patient. It's only 10:30. We have all week. We have all week, guys. That's what you wanted right there. There it goes. Now it's on. It's go time. Watch level 2. Look at these orders. Damn, I'm seeing 1,000 to the sell side every... Look, 3,000. 9,000 to the buy side. Damn, the time in sales is ripping. Ripping. Shit. 182.78, 182.95 on the ask. 98, 97... 182. So watch 182.98, 182.97 as we pump up it back into there. 197 rejected again. You hit 197 and there it goes. It broke. You should get extension there. Let's see. 190, 83, 80. Yeah, now you're in the 83s. All right. That's a nice. That's what you want to see, guys. Now you want to see it hold support and you look for the extension higher. Now you have nothing but room. Nothing but net. That's your target. That would be my target again. That's my target there. This is a beautiful setup. Tesla is just a beautiful setup here, guys. Beautiful setup. Trade line entry. Longs. Right? Trade line. It's just... Every day when you come in, look for what's working, what's holding. Right? This 9 EMA was it. Not VWAP. VWAP held twice. But the 9 EMA, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 times. And that's why I brought it up on that high there. That's why I drew that out. Okay? That's why I drew that out, guys. Now you should just get that extension run like it's on now. Anybody that was trying to get short, they're covering. We're going higher. 186 would be the target. All right? Nice job, guys. Nice job.
ADSK, auto
Well done.
Responding
Sarah, back over to you. I know, I saw a
It's a beautiful thing.
on Friday. Okay, thank you.
to the letter from Starboard, said looking forward to holding annual meeting is scheduled on July 6th.
All right, you're about to get 240 on Coinbase. You're about to get 240 on Coinbase. Watch the NASDAQ. Look, the NASDAQ looks like it's failing. You're starting to turn that level into resistance now, putting in a higher low. This could be setting up for a Coinbase short. All right, Coinbase short could be in the works here. Up at 245. Sorry, not 245. 240. Nissan 240. And that double bottom prior day. And then what I would look for is that 20-day. I'm looking right here in the middle. That green box, which is the 20-day moving average. Look for that to be a rejection point, and then look to see if you can't get some follow through. We'll look at it. Back down to the 50-day. Crack 235. Get down to 230. It's a beautiful thing. It might take a day or two. Also, keep an eye on Bitcoin. Don't just assume that it's going to break, because Bitcoin, this is a level of support here for Bitcoin. All right, this is a mild level. All right, but if Bitcoin does decide to break this 64 or 65, I'm sorry, 65,000 breaks. Hello, 61 to 61,000. I'm telling you, that is the level on Bitcoin. Like, I would, if you look here to the left, you have this little pivot low. I know you guys can't see it. I don't know how to. Like, you had this little pivot point right here that we're holding. But if you look, like, again, I talk about this. Look at this breakout right there. That breakout is like pretty much a wall blocking you from all that previous resistance area, in my opinion. That's why I think you have. Come on, man. Oh my gosh.
TSLA Tesla as the highs.
Yes, we already know it's at high. So I think you have room down into that level here.
About 3.5%.
Right there. If you break 65 on Bitcoin, I think you have that. That's the room that you have. All right. That's what I'm going to look for right there. You get in this box, the downside of that box is down there at 61. All right. That's a nice move. That's a really nice move for Coinbase. So that's what I'm eyeing up starting the week. Look at Tesla go, guys. I told you. Did anybody get that second entry right here on this pullback or no? Look at that. 1 minute hit and go. Boom, boom. Oh, look at the volume. I mean, beautifully done. You know what's crazy? You want to know what's crazy about all this at the end of the day? This was our trade idea. Was that watch for the shake and bake to run higher. It's what we talked about this morning. Now I'm going to put on the on GameStop. For a whole lot, but I'm just saying it now. This may be one of the last times that I stream live here, and I'm just gonna go. All right, so we broke above, don't really get any feedback. We don't really do anything live. I had to cook it really in depth with you guys really quick. All right, here it was. I'm going. That's my longs to 182. Possibly look for breaks. We said the whole time. I don't know what's going on. All over the markets. And what is maybe we test Friday's close. I'm watching the 100-day. I'm watching $78 and that 20-day and 100-day moving average to the upside. Obvious 180. Okay, everybody and their mother knows about 180, but I don't think that's where your resistance level is.
There it is.
Your resistance level is back here from Thursday's low. Okay, the support level here at 180. That was the point, because if you watched Tesla this morning off of 180, you would have saw this quick action early in the morning and the hesitation in front of 180. It was like, hey, if you watch that back, guys, you will see me say, it's up to you to try and get long at the 20 and 100-day moving average and look for that 177, 178 long to 182. That's up to you. I think that is the trade, or if you get the rejection up at 182. Okay, that was the decision this morning on Tesla was, hey, we're not worried about 180 because we don't think it's going to matter either way. It's a level that is so clear that people are going to give it way too much attention, and that's not what they should be paying attention to. That's where they're going to get. That's where the trade gets hard, right? That's where they shake and bake, where they goes up to it, it pulls back off of it real quick, and people are like, oh wow, did you see how fast it got off of that level? Blah 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 blah, and then it breaks. It does it on low volume. They don't pay attention to the volume. It pulls back off of 180 on very low volume. That's okay. We're still until we have an increase in volume to really tell us that, hey, that's a rejection point. We're not going to believe it, And we said 180, 250. Well, we're not going to believe the break unless it has volume. And look what it did. It gave you an increase in volume. So the probability we will revisit this and it holds is greater than it was. Then a lot. It's about an 80. I would give it a 75 to 85% chance that this whole area holds. And what's funny is you have VWAP coming up there. What else do you have? You have the 15-minute VWAP and trade line coming up through there. So, 186. And where are we at right now? 4%, 3.7% now. All right, that's a beautiful move, man. Beautiful job. It's gonna be. If I rerun that live stream and literally watch back that trade on Tesla, the analysis on Tesla this morning, Tesla literally for the most part has done exactly what we said. It was hard for me to take this long. I wanted to see what she wanted to do. All right, I wanted to see what she was going to do. All right, so we're way above VWAP. Let's see. Look for a mean reversion here. Look at that volume there. Holy cow. Let's see here. There's a lot of scalpers coming in at 186 level. Coming in up there. They know that this area is a tough zone. Let me move this. What's the level for this? What is this? 185.03, 185.03. All right, let's see if we can get a scalp here. I don't even want to do that because I still think you get this pullback. If you get this entry point like right around here for the long, right, and you meet there, and this is the thing is look at the volume now. I wouldn't trust that break. I think you need to pull it back down to 182.50 first. Hell, maybe even that previous high a day. Look, I'm not going to say much more other than this. This pattern right here is a picture perfect A+, A, B, C, D. It's just got everything. It has everything. This is a picture perfect long. It's got volume. It's got levels holding and breaking how they should. Fib levels, just previous resistance support levels with the fib, like just a picture that I would say, hey, if there's a chart set up you want to hang on your wall or have on your desk, if you see it again, it's this right here. It really is. This is just, it's too good looking. It's way too, this is, you know, this is, I don't know. I'm trying to relate it to something, but I don't know. I was going to say Carmen Electra back in the 90s, but
Power of AI. With the perfect name, a great logo, and a beautiful website. Just start with it.
okay, let's watch Coinbase right here. Let's watch Coinbase up at this level right here. I want to see this is kind of low volume there. Let's see what happens at that 240.50 level. All right, GameStop popping, I guess, in front of the shareholder meeting here. Watch $28. It's got some volume here. Let's do it. Let's go to GameStop GME. Did anybody take that Coinbase trade with us? Did anybody else grab that? Shit, man, I almost fucked up my monitor. I almost messed that joint up. Alright, GME is gone. Damn, that was a nice scalp up off of that level. So look, we just circled this for you about just a minute ago. Look here. Watch this level. Watch it, watch it, watch it. Like the Mexicano next door say, my friend, you gotta watch it. Okay? My friend, watch it. Look, 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 look. You see, he leave. Yeah, his wife. Yeah, she got a friend. She bring friend over. He leave and mucho grande. See, man, she's all right. So my expectations again is you get this 186 level. I got to be out of this trade up here, guys. For anybody else that I mean, that's you're talking pretty much $10 without news, at least that I know of. Other than you do have this China news with Tesla. Where you have can Elon Musk Tesla, let's see right here, see, it's not, come on. So there's something with China's letting Elon they're letting him they're letting him do something over in China, I guess. I don't know if it has, I don't think it has anything to do with FSD, but all right, look for pullbacks. Look, this is a really nice setup, man. This setup gets better and better and better and better. All right, 182.50. Why? Look at this 15-minute chart right there. Look at the VWAP 90 MA. You get this pullback. That is another entry point to get long. Previous support turned into resistance, broke back above it, increase in volume. Look for this level right here to be a level where we are buyers again. Low volume pullbacks though. We do not want this. Top right of the screen. You do not want this pullback, okay, into here, back into VWAP on volume that is like, look at that. Look at that. Look how low that thing was. I know it just opened, but you don't want volume that's like anything more than like 1.35 right? You don't want big 1.3 to 2 million volume on that sell side, because that might tell you that, hey, you're going back to test 180 by tomorrow or Wednesday. All right, so you want a low volume pullback, maybe just consolidate, kind of just chop around, and then that's what I want to see. I want volume that is like zero 0.8 to like 1 million. All right, 800,000. This is the volume that I would like to have in a 3-minute chart on the pullback. That would give me the, or if I was, if I wanted to be long, that would give me the, courage to say, all right, let's do it. All right, looking from a 15-minute chart, swing trade idea. All right, and you're targeting 190 within the next week or so. All right, you could have a day tomorrow after today where it consolidates, so keep that in mind. It also may have a day 2 continuation. That was in all seriousness, at the end of the day, this was a gap up above and a pullback to the 100-day moving average on Tesla. This is why it was my #1 watch today. Was like, all right, are we finally going to do something? Because it's giving us a fundamental setup on the daily chart that we got the news we were waiting for. What's it going to be? All right, what's it going to be? It also wouldn't surprise me if you hit 190 today for whatever reason. It's just, volume holding the 100-day, because that 100-day has been support and resistance for years. Look at this left shoulder, head, right shoulder. We finally break out. Now we look for the extension. I think we got to target this 200-day moving average up there at 210. It'll be like 205 by the time we get to it. That's what I would like to target, guys. Maybe we could even look for a cheap swing trade right now. Well, not right now, but when we get a pullback, if we can get this pullback in the 182, I think I might try that, guys. I think I might go out till next week. I might go out like 2-3 weeks from now and try to get some way out of the money calls to see if we can finally get back up to like 200, 205 and test that 200-day moving average. I want to try it. I'm going to try it. I think Tesla made a lot of progress today. I think it did. I think Tesla made a lot of progress. Had volume. Finally switching it up here. Like, I was worried, man. I looked at that volume Thursday and Friday, and I'm like, oh shit, this is not good. They really don't want this thing to. They're just tearing it up. So I thought finally, hey, we get a pullback to that 100-day. Then after thinking about it, I'm looking at the volume. I'm like, man, like, we didn't even try to hold 180 last week, and sure enough, we came right back. Start of the week, starting off strong. So this is nice. That you're just gonna have this is supply and demand. If you were to ask a prop trader, they look at this as there is a demand to own this stock, not like a support and resistance level, but this is demand. There's just a buy trigger all day long wanting to own this on the breakout up to 200. I need a pullback on the 15-minute chart, guys. Bottom left here, I need this pullback to like 182.50, or I'm just waiting for that. All right, then maybe we pull the trigger again. But watch out, because on an hourly chart, like, it's getting a bit overextended here. You're getting a bit overextended, and we could look for a scalp short up off of this level here at 186. You see how you're just getting that extension right now? Like, it's just close. It's still at the highs. Look at it. It's still at the highs. Watch level 2. They should start to come in here and take profits. You should get some profit taking. That's insane. That's so fucking insane. Excuse my language. That's wild.
UNFI, United Natural Foods, not seeing any news as of yet, continuing to pop here. Heavy volume now. That's UNFI.
UNFI right now is going. UNFI. Yeah, that's nothing. Fucking don't you ever say some shit like that again. on a talking about NFI, UNFI, when fucking Tesla's just demolishing shorts right now. Listen, congratulations. We were long from the we were long-minded Tesla from the morning.
ORCL, Oracle Apex AI
You know.
enables natural language-based
Let's go.
applications.
There, the volume finally just dried up. Did Coinbase break? Where's Coinbase? It's supposed to be right here. Coinbase, nope, still hanging out below that 20-day again. If you notice Coinbase up at 240 and it cannot get through it, you might have a small little trade there to the downside in the 230 because you finally just broke the 20-day moving average and now you're bumping into it. All right, which is Coinbase 240 20-day moving average. If you cannot get back up through that, look for rejections down into 235. Take profits in front of 235. Look for the extension 230, which would be the 50-day moving average. But what? Keep an eye on Bitcoin. God damn, Tesla. She's still going. Still going. Like she reclaimed 186. We said 4.5 to 6% green on the day. That was my call. That's about a $10 to $12 move on Tesla. This is just picture perfect. 9 EMA once again. All right, now we need to pull back. We just got VWAP, trade line VWAP cross on the 15-minute chart. We need that. We need a pullback. We need a consolidation and or a pullback. We need these two to meet up somewhere right in here. All right. We need that yellow line. Tesla. Bang. Long. Look for that extra 2.5% to rip up through that level. And to really get going, you might end up at 190 today. Look, she's still just not stopping. Not stopping. She's still going. She's still going. Wow, what a sight. Just like a rocket. Just a beautiful thing to watch. Alright guys, I'm gonna grab something to drink. Be safe. I'm not going anywhere, but give me 1 second. I'm gonna grab something to drink. If you could, hit the like button. If you'd like to help out the stream, donate down below. Links in the description. Your next level for Tesla is up there at 190. 190. And he ain't mentioned one. He mentioned Tesla one time, and this is the stock of the day. I had a feeling, man. Let's watch GameStop. Let's go look at GameStop real quick. GME reclaim 28. Oh, that's not cool. I don't like that. Yeah, look, see what I'm saying? I did not like that it broke $28. It should have held that level. That's not cool. It's gonna fall, guys. Be careful. Oh, what's her name from eToro's on CNBC? I can't play it for you guys or I'm going to get in trouble. Callie Cox. Alright guys, look for a pullback into 26.50 if you get it on GameStop. The shareholder meeting is at 12 o'clock Eastern Standard Time. For anybody that is unaware. That sucks that GameStop did not hold. Again, I still think, like I told you guys this morning, that I was looking at GameStop getting two stories, more so to the long side. I had a little bit more conviction to the long side than I did the short. But see what happens here at the shareholder meeting. This could be a shake and bake for the shareholder meeting to start up, and then bang. I mean, look at the volume. You still got buyers in the volume, so it wouldn't pay. It wouldn't hurt to go ahead and attempt, to buy it low a day going in front of that shareholder meeting. You gotta love when they use words like, "Oh, this is fair." This is no. They just want to come up with an excuse to fucking steal people's money. Like, this is crazy. So they're closing what they think is a loophole for taxes and businesses. Listen, these are all things that help to make America the greatest country and have the greatest businesses in the world, because the government didn't force you to give the government the money. You could spend it from business to business or company to business, C to C, B to B, B to C, C to B. All right? Not just this is China and you're just going to give us your money and we're going to do with it. Stifles innovation, guys. So when you guys hear them talking about taxes, you really use your head. I know you guys are smarter than that. It should be up to you and your business what you do. If you want to give it to the government, give it to them. That's your decision. But if you want it to go to another business or you want a fleet of vehicles or buildings, you should be able to do that. So if you have to work things around, I seriously hate this administration. I'll say it. I do. I hate them with a passion because they force feed your decisions to none, and they force feed your money into their pockets. It's crazy. It really is. Adobe News.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. Glad you're with us. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Kenny Pulcari, Senior Market Strategist at Sladestone Wealth. Good morning to you both. New week. We've been hitting some records. Kenny, how are you feeling? Where's this market headed? What do you think?
Listen, I think it's been toppy. You and I have been talking about this for a while. I thought we've been toppy for a while, yet we continue to march higher. I think on a lot of speculation over what they're doing with rates and not doing with rates and how many times we're cutting, that same story that we've heard. But I do think it feels a little bit tired here. And I heard you in your prior segment say that we're getting raises towards the end of the year in the S&Ps, which I think is actually true. I think the market's going to end up here or maybe a little bit higher by the end of the year. But I do think we're going to have some pullback. I would love to actually see some pullback over this summer. You know, a 5% pullback would be wonderful as far as I'm concerned. Kind of shake the branches a little bit and see who falls out, because if you look at the charts, they go straight up. There's no pullback at all, and there hasn't been, right? And so I would love to see a pullback. 5% is still well within the normal trading range, and nothing at all for anyone to be nervous or anxious about. But it would be enough, I think, to kind of take some of the fluff out and allow people to start to refocus.
Right, and you may have heard Ahmed say he predicts a recession in early 2025, so he's moving more defensively. How about a name like Amgen? You have Amgen today at 301 and change. So
Amgen, as we know, it's a biotech name, right? So it's in that space. But they came out news earlier with their GLP-1 phase 3 trial. Their therapy is, that's that weight loss medication like Ozempic and Wegovy and Mounjaro and all that. Except theirs is a once-a-month delivery of the drug versus a once-a-week delivery, the way that a lot of these other ones have come about, right? The stock rallied on that news. We saw it rally back in early May. It really popped up there, gapped open big. It has since pulled backed off at about 7% from its highs. It's still up about 3% year to date. It looks like it's going to test trend line support here at about 292, which is the short-term trend line. The intermediate term is at 289. So right in here, it should find some support. And in fact, today it's up with the market kind of wishy-washy, but we're up another $1.92. So I think in here it holds, and here's where we'd own it. We, as a firm, we own it. So just just to be clear, I don't own it personally, but the firm owns it. But we like it in here, and anywhere in here, right above the trend line, I think is an opportunity.
Yeah, RBC put a 332 target on this one, so they do like that.
When did they do that, today?
With an outperform. I saw that on the 14th. RBC raises price target on Amgen to 332 from 328 with an outperform rating, and also the FDA, giving them approval to move forward with treating a blood cancer, which is something you've been talking about. So a name that certainly has been in focus here. So let's take a look at the charts. Ben Lichtenstein, please.
Kenny, Nicole, good to see you guys on this Monday. And, You know, Kenny talked about the market and taking a little fluff out of it, refocusing. He also talked about the big spike that we saw in the beginning of May in this name, in Amgen. And I would argue after that rally, we've seen some of that fluff come out of shares of AMGN, but not to the point where it should really worry those long-term bulls. So I like this one. Taking a look first and foremost at an hourly candle chart, I wanted to begin with just that big move up that we saw because it broke us out of a range that we had been in throughout. We're talking March, April, look at this, and then the big move here in the beginning of May. High conviction, right? The vertical phase as we transition out of the horizontal phase and then transition right back into it. So again, you go from that one phase into the next phase, sometimes more easily identifiable than others, but in this instance, it was very easily identifiable because we bounced around 275 initially, you can see, and then you can also see how after that breakout to the upside, we've now found value up around 305, testing the lower extreme of this range that we've been in. So possibly providing a buy opportunity. Now, I'm also giving the benefit of the doubt to the bulls on this one. Nicole, check it out because you take a step back, you'll see similar pattern. We're now from an hourly to a daily candle chart and going back to looking at that move we saw throughout March, April, May, and to the present time too. Well, this goes back to this time last year when we were all the way down around 210. Look at this rallying all the way up to and well now balancing around 300 on the daily time frame. We had a test of that 265 level which held, didn't spend a lot of time below there. Bulls definitely want to see us break out and take out that 329 level because we've got a range established here and we're kind of right in the middle of it. But look at that. That's what I like, is potentially that trampoline, that lift off the middle of that balance area. One more chart short for you shows exactly what Kenny was talking about. And Kenny mentioned 292 being the 50-day moving average. That's shorter dated. I've got 282 down below for the 200. But, yeah, you've of well-defined lower extreme. You've got a well-defined upper extreme. And right now, here we are smack dab in the middle holding these closely watched levels. RSI kind of not really providing a lean, but this longer-term trend is still up here, right, Kenny?
Yes, I think it is. Right. And I think, you know, to RBC's point, like Nicole just said, they also see that trend as well.
Right, understood. So we had that big gap up. You had the high of 329. So you do see that upside potential now with that. Let's get to Palantir. It's trading at 23.88 this morning. Some of your thoughts there, Kenny.
So Palantir is also trading at 23.88. It's up another 28 cents here today. It's in the right space, right? The application software AI space. There's been a lot of chatter around Palantir this year, right? It's been stuck, if you look at it for the last 5 months, really in this kind of $19, $25 range as you go across. It's been kind of hovering all around the trend lines, just on the south side, just on the north side. We're back to the north side of all three trend lines now. And, you know, as they develop in this AI space, as they develop its structured products, it's relational, it's geospatial, it's all this stuff that we're talking about. I think that's going to continue to fuel this, right? The market, now if the market backs off, which, you know, it very well may, it's also in the growth space that is probably going to get hit, right? Tech will probably get hit because it has outperformed. But I think you're going to see the downside risk here is in the, look at the chart. Well, Ben will show you probably in the $20, $21-ish range. Again, the firm owns it in one of our portfolios. I do not, but the firm does.
Yeah, and Argus today put a buy rating. I'm not sure if that's a new rating. Maybe they just reiterated it, but they have a $29 target. So they do.
They're all following me with this call.
Kenny, Nicole is Kenny's spot on with this one, that's for sure, on a couple different fronts. We'll get into it here as we take a look at the chart. Kenny, you were talking about the north side, the south side. You were appealing to the Chicagoan in me. And this one has been hanging out on the north side a little bit, right, relative to Amgen, but a very similar chart. Let's start off with a similar look here, starting with this 60-minute and the hourly candles. You can see the big move up that we saw, similar to that rally we just talked about, and accepting that new higher level. So values formed up here at this upper level, and we're talking about around 23.25, we'll call it. As long as we hold above 21, I think that was the level that Kenny mentioned. Again, it does appear as if the bulls remain in charge here. Why? Because value is moving higher, right? So we're seeing this one run up. You could call it bottom left, top right. There's a few different ways of describing it, but this is acceptance of a big move that we saw, a nice $2, $3 move to the upside. Step back with me into a daily candle chart. Similar pattern, right, as we looked at with our last example, bottom left, top right. And Here's another instance where, again, value continues to move higher. We mentioned how significant 21 was. We've got 24 right here is that pivot that we're in the middle of the range here that's been established basically since February after we gapped up, if you remember, breaking out of that range that had been around 17. So while we're balancing around 24, we're constantly referencing 17. So 21 on the hourly, and it looks like 17 on the daily time frame, depending on your scope and how much you're distancing yourself from the tick for tick. But let's take a look here where we are relative to the 50, the 200-day moving average. And here you can see shares of PLTR hanging out just above that. So again, a little bit more strength here versus Amgen, but a very similar pattern, that's for sure. And another one, Nicole, where it does look to me like the bulls are in charge.
Yeah, and you know, Kenny, you noted that if the market pulls back, that is an opportunity on this name, right?
Yeah, I think so. And look, if the market pulls back, well, you know, tech is going to pull back even harder. That's in that space. So you have to go in there kind of assuming if you're looking for a pullback that is going to happen, but that's going to provide a longer opportunity.
All right, let's get to Lockheed Martin, which, you know, 1 year, not too much, pretty much flat. It's pretty amazing, right?
You know,
I mean, that's tough for a shareholder, but it's come up off the lows, which is a good thing.
It is, and what's really interesting to me about this one is it's in the aerospace and defense sector, right? Which has actually been a very interesting sector when you think about what's going on around the world this year. I'm actually surprised that the sector has not performed better, but this one is underperforming its competitors, right? So if you look at Raytheon, you look at, let me see, it's, you know, Raytheon is up 23% year to date, right? Curtis is up 69. Curtis is up 19% year to date. LMT is really underperforming, and it's cheap to exhibit. Now we saw that it broke down in January. It then corrected in March, and now it's been kind of reconsolidating up in here. If you look at the chart, it's now gone up and through all three trend lines, seems to be holding above the two of them. It's once again pierced the short term, so it's right in between the short term and intermediate term. But I think it finds some support right in here, even if the market pulls back. They're going to the aerospace defense names are going to continue to be on the radar, considering what's going on around the world. It pays you about a 2.75% dividend, so you do get paid for owning it. Although to your point, it hasn't been a real winner this year, but that's where I now think the opportunity is.
You know, maybe it's not brutal because it didn't do much. It's certainly, you know, disheartening when you say, oh, you know, I'd hoped it would do more. There's so much geopolitical tension. I thought it would be the place to go for my investment. But as you noted, you still think there's potential here. Let's see what Ben thinks about the technicals, please.
Yeah, there's still time, that's for sure. And this one is in a very similar pattern. So we're going to go 3 for 3 here with Kenny today. And definitely can find a you know, reason to be bullish this one when you're talking about the technicals. Bottom left to top right across a couple time frames. We're going to start off with an hourly, and then we'll get into the weekly actually on this one because I wanted to kind of skip through that daily time frame. But you're going to see a similar pattern here, Nicole, a very bullish one at that. Since the beginning of February, stock was trading around 414. It's rallied up. Saw a big move into the beginning of April, sideways consolidation a few separate times on this chart as I look at it and just identify the areas my eye was drawn to. Simply put, value is moving higher, right? We can identify 430 is where we kind of paused into the middle of March, rallied up into the beginning of April. We started to kind of lose momentum, balance around 450. Look at this, multiple tests of that lower level that have held, bouncing around 465. As long as this area, again, on this hourly candle chart holds, this is a very bullish pattern. Hey, get back up and through 465. You open up a door for a retest to 475. Simply put, we're in a range right now, accepting value after a solid run-up throughout the beginning of the year. Let's step back. Let's look at a weekly candle chart. Add some time on. And almost an identical pattern, right? You've got bottom left, top right. We're talking from 156 back in 2014, the summer of, all the way to up to that 508. Now, again, more range-bound recently than not, to your guys' point, but also, again, there's still time here, and there's been no indication that any of this has indicated that there's been rejection or that this is a stock that's losing momentum to the upside. It's just consolidating, simply put, and honoring key areas that were established on the way up. To me, it looks like we're bouncing around this 420 level. holding well above that kind of line in the sand, which would be 320. The other thing, again, I've been noticing this more and more, guys, really watching that sort of final test of an attempt to auction lower that fails right at that balance area, especially in these well-defined longer-term charts, a daily candle chart, again, mature balance area that holds that middle of the range, and then that balance or provides that trampoline kind of liftoff. Retargeting 505 ultimately is what the bulls want to see, and they have potential here now because we're building some momentum off 420. Wanted to show you where we are relative to the 50 to 200-day moving average to kind of wrap things up. Again, this sort of expresses some of that disappointment or lack of enthusiasm, I guess is the best way of putting it recently, because we're teetering around the 50, the blue line. Still above the 200 here, though. RSI not providing a lean one way or the other. But again, another instance, guys, where I think the bulls are behind the wheel on this one.
All right. We'll give thank you for all of that, Ben. I want to give Kenny the last thought.
No, listen, I think Ben makes perfect points. I think I love his analysis on all those three stocks. I'm glad actually we're on the same page. I love when Ben and I are on the same page about these names. And like I said, I think the market, people should not be, clients and investors should not be necessarily nervous if we see a little bit of a pullback. I think you would want to welcome that for a further opportunity as a long-term investor to be able to put more money to work. But thanks for having me. As usual, I enjoy this time altogether.
And thank you for being on with us and kicking off a new week here, too, Kenny. Thank you both. Kenny Pulperio, Sleetstone Wealth, and our own Ben Lichtenstein there on the charts. Coming up next, we're going to spotlight some long picks for your portfolio and some shorts, too. Melissa Armo will be with us. She's looking at Oracle, Adobe, Tesla, and much more next here on Trading 360.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. All so you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a spotlight for you for some stock picks, some longs, shorts. Melissa Armo is with us, founder, owner of the Stock Swoosh. Melissa, great to see you. Today we've heard from Evercore ISI. I mean, they put a 6,000 price target on the S&P for year end. Goldman Sachs has a 5,600. Where do you think the market is headed? I do want to hear about the picks here, but what's your big picture on the market? What's driving it?
Big picture on the market and what's driving the market higher is the fact that the Fed is really wishy-washy about making any decisions about raising rates or keeping rates the same or lowering rates. And I guess that has really
made the market feeling very exuberant. So as long as the Fed continues to say that they're going to lower rates, even if they don't, I don't think the market cares. And obviously the economy is very strong, which is one of the reasons that the Fed has not decided to lower rates. So remember, we're in an election year, so I really don't think the Fed is going to do much of anything in 2024. Maybe they will lower rates one time this year, maybe they won't do anything. I don't think they're going to lower rates twice, but the market thinks they will. The market thinks that the worst is over concerning rates. And it's interesting because, again, when the meeting was last week and when Chairman Powell talked, he talked about the fact that in 12 months in 2025, the expectation was that the unemployment rate could get up to 4.25. Well, I don't see how that's good news for the economy. It's certainly good news for people who are working, who might lose their jobs. And yet you look at the market and everything seems rosy and cherry and great. But again, reality is not necessarily the way that the market acts. Hand in hand.
Understood. You know, there was a time that you were on and you and I had conversations and you didn't have one stock pick because you were concerned about the market selling off and the momentum it had to the downside. Now, do you find that there are many names to pick? Is it getting easier to pick stocks? I mean, I know you have a few longs for us today.
Well, Apple's rallying right now. I think the best long today is Apple, which I didn't have on the original list. That had a massive move last week, and that's got one more leg up in it, at least I think. 2020 was the high last week after it took off like a rocket with this AI stuff. And so I think Apple's probably the best pick today. But as far as going long stocks, again, strong stocks are going to continue to move up as well as the market. People want to short the market, then it doesn't fall, then it fakes like it's going to fall, and then it rallies again and continues to make new highs. Again, the QQQ's got over 480 this morning. They look like they're going to go all the way up to 500. You mentioned 600 in the SPY. I mean, again, we got plenty of time left in the year. At this point now, I really think the only thing that could mess up this market, the bullish move in the market, would be something that would happen that would be totally unexpected, that would have absolutely nothing to do with the Fed, absolutely nothing to do with interest rates. It would be something, God forbid, something overseas about some kind of military escalation, which definitely could happen. But other than that, I don't think there's any trajectory that's going to screw up this market. I think we continue higher. And the problem is people are missing out on the bullish move because they want to wait for a pullback. The pullback doesn't come. And it just keeps screaming higher. Then people short it at the highs, and it keeps screaming higher again. So I think you have to take a look at what you're doing and be selective. I still like to short stocks. There's things I like to the downside. There's things that are dropping. But you also don't want to miss an opportunity to go long if things are setting up right. And there are some things that are setting up right. I like Tesla higher.
Yeah.
You know, that's another one that I had on the watch. I think that's going to have a massive breakout at some point, too.
So you have Apple, you have Tesla. Those are both in the Magnificent Seven. You also have Oracle and Adobe as your names. So a lot of tech type of stocks in that group. Tell me a little bit about which ones do you think have the best potential for an upside move?
I think the best potential probably is Tesla because it's been trading down for so long, and it's finally got the expected news that everybody thought that Musk is going to get the pay package he wanted. And again, they're full on in Texas now. So I think it's good news for investors and good news for the stock because the stock has been basing out for what feels like forever. And again, I'm not saying they're going to get up back to the highs again anytime soon. It's so far away from the last high that it had, which was several years ago. And the market's been so bullish. But Tesla, with the backdrop of a bullish market, has a long way to run. And I think that's very, very positive. I mean, and of course, Apple, too. Apple could get to 250 before you even know it. I mean, when you look at where we're going here into the holidays, in a couple of weeks, it's going to be July 4th, and then boom, we come back from July 4th, and it's earnings season, and then all these companies are going to report. And to think that they can't make 20, 30% jumps even in the next 30 to 45, 60 days, depending on when their earnings are setting up, they absolutely could. Remember, Tesla has to report, and I think that's in July. Same thing with Apple. So, I mean, here we are. We're almost at the end of June. And these things could continue because of earnings, not just because of the market.
Yeah. I mean, I don't know if you quantify yourself as a screaming bull at this point, but you're certainly on the bullish side of things. You do have some shorts here, which have financials, right? You have financials on your short list. Boeing and Disney, two names that, you know, unfortunately just have been having a hard time. Tell me a little bit about the short picks list.
Well, I've been liking Boeing, you know, to the downside for a while. That's lifting today with the overall market. But again, Boeing has had many, many problems. And I still think Boeing is a solid short. Definitely Disney is a solid short. And again, Disney had earnings this past quarter and they were abysmal. So again, I don't know what's going to change really with the next report when that is out. But I'm telling you that the things that are even looking like they're going to have a rally today, it's a fake rally in Boeing and Disney, because I still like those stocks lower. And the banks were selling off last week. Again, with all the news with interest rates, you would think that the banks would be continuing to move up. But some of these banks, even the strong banks, really, I think could be possibly nervous. Why? If, again, people lose their jobs, that's a problem with them making payments. If interest rates continue to stay high, that hurts people making payments on credit cards. And also then banks are not going to lend as much money. They can't. People can't afford it when you still have mortgage rates at 7.5%, 7.75. I mean, again, if we would go into a recession in the next 12 to 24 months, even though nobody thinks it's going to happen, but it still could. If that would happen, then banks could take a hit. Even strong banks could take a hit, but they may not be anticipating.
And what percentage to the downside could some of these names, Boeing, Disney, Goldman Sachs, or JP Morgan, you know, do you see 10% downside? What kind of downside do you see?
Well, you can absolutely see that. Again, one negative earnings, you could see 20% or more downside in some of these things. You know, JPM is still strong. Goldman is still strong. These stocks are in an uptrend. That's true. But again, they're carrying the weight and the meat and potatoes of so many of these financials. When so many of the small banks are not doing well, they're still not doing well. You still could see some more of these regional banks go under. And again, some of these big banks have picked them up and they're still carrying the weight of that. And you don't really know what the outcome of that's going to be, again, going into 2025. I think a lot of it's going to have to do with the election, depends who wins. Things could change. And so everybody, I think, for this year is probably going to sit tight. But come November, after the election, then anything could happen.
Melissa Armo, the Stock Swoosh, thank you so much. Great to see you. Appreciate it. Coming up next, the disruptors. George Stillis is standing by. He's going to take a look at ARM Holdings. Bank of America boosting the price target on this name. So he'll explain why and give us an example trade as well. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trade Trading 360. I'm Nicole Petalini's live on the floor of the New York Stock Exchange. Look at developing stories. I'd like to bring in Caroline Woods, senior market correspondent here on Schwab Network. We're taking a look at Autodesk. You have Starboard revealed a big stake in this company. Some of your thoughts here.
Yeah, we're taking a look. Shares of Autodesk up about 5.5% on this. It's funny. Last Monday we were talking about what Southwest and Elliott Management. Now it's Starboard and Autodesk. Starboard Value has built a roughly $500 million stake in the graphics design software company, has met with executives in recent weeks to discuss things like concerns related to company operations, corporate governance, and how they handled that recent accounting probe. This was first reported by the Wall Street Journal, saying Starboard thinks Autodesk should improve its margins and make changes to its board. And a key focus is this the fact that they're criticizing the company for not disclosing the investigation and other material updates until after the company's window for shareholders to nominate director candidates closed in late March. That's really a key focus of this. And then in a lawsuit, which is expected to be filed today, according to Reuters, it will seek to delay the July 16th annual meeting and reopen the company's director nomination window. Now, Autodesk has responded, said it sought to have constructive discussions with Starboard since the firm first reached out in early June, said that the Autodesk board and management team will carefully review the letter, but said Autodesk is confident in this decision and the process followed by the board and is looking forward to holding the annual meeting as scheduled, doesn't believe reopening the board nomination period is in the best interest of shareholders. Also made sure to say that it's confident in its strategic direction, its significant margin opportunity, and their corporate governance. So we heard from Autodesk on that. Shares up about 5.6% right now. Still underperforming year to date, though. Still down about 2% so far in 2024.
I mean, look, it went from 279, down to below 200 pretty quickly. It's clawing its way back, and to your point, with this news of maybe potentially better margins, some board changes and the like, it gets this boost on this interest from Starboard. All right, thank you so much, Caroline Woods. Great to see you. Now let's turn our attention over to the disruptors. George Sillis is with us, senior markets correspondent. Today's company is ARM Holdings. Bank of America raising the price target on the shares. We get the details from George Sillis. Details.
Yeah, Nicole, I mean, if you look at what's going on, obviously the semiconductors have been a great performing industry group this year. And if you look at the breakdown of what ARM Holdings does, essentially they're licensed design software technology for semiconductors that is used in mobile applications, but also in computing across multiple industry groups. You name it, it's mobile phones, it's desktops, it's industrial automotive space, and of course artificial intelligence has really been the catalyst for this particular name, especially as its IPO presented itself to the market back in September of 2023. But overall, the trend has been positive for ARM Holdings, and their licensed technology is basically used in over 70% of the total world's population uses some sort of ARM technology. And I think if you look at what's been going on with companies have actually done extremely well in the past year because of their CPU technologies, which are blended or binded with mobile application and, of course, communication chips. So they're very power efficient technologies. And I think that's, again, why we're seeing some strong trends in these names. Now, looking at the stock, it's actually performed quite well. And Bank of America sees still some promising growth, considering last quarter when the company reported earnings, they guided for licensed revenue in 2025 to grow by 40%, with earnings to grow about 55% for the full year. And so Bank of America is making an adjustment to their models, increasing their price target to 180 from 160, and they do maintain a buy rating on ARM.
Yeah, understood. So they keep this buy rating. They raise the price target. It's at 157 today, down slightly. Tell us about an example trade here.
Yeah, so it's a good thing to point out. First off, if you look at the price action today, it's down, and we've actually seen the market narrow even further. The past few weeks, obviously, there's been concentration of movers like Broadcom and NVDA. You'll notice those two stocks are higher today, but some of the periphery AI names, the second tier names, let's call it, like ARM Holdings, even Marvell Technology, AMD, just giving you a few examples of some of the losers today. So I think with that said, if you look at ARM, going into 2025, it's still trading at quite a high multiple, around 100 times earnings, and even in 26, 77 times. So what I'm going to do is I'm going to play conservative here, because implied volatility is still very rich in these options, and I'm going to sell a July cash secured put. So what we're going to do is sell the July 145 cash secured put, and that's of course below the current price, but you can earn about $7 a share or $700 a contract if you sell that. So effectively, the delta on that option is 30. So it has basically a 30% probability that the option will expire in the money for the buyer, and that's effectively where we lose money. But the yield of $7 is about almost 5% in the next 28 days. And the break even, if you do get assigned shares at 145, is all the way down to 137. That's a $20 move lower before break even, which is about 13%. So it's really structured in terms of holding price going higher, but also the stock could pull back all the way to 145 and you'd still make full profit of $7 a share.
All right. Thank you for that. We appreciate it. George Sillis, great to see you, and a good look there at ARM today. Coming up next, it's time for our 360 round. We're talking all about crude oil, which is it's at 79.22. I was looking to see how close it was to 80 bucks, but it's been climbing higher. Had a little bit of a volatility last week. Let's see what's doing and the latest breakdown on the production levels that we could be watching. Trading 360, and our panel is ready. We'll be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Welcome back to Trading 360. It's time for the 360 round, and for that we bring in our panel. Tamar Esner, Principal at Vectus Energy Partners, and Bob Yager, Director, Futures Division at Mizuho Americas. And we want to talk all about commodities, oil in particular. Bob, you know, there was an interesting article from Barron's saying that oil or commodities had run up. Commodity stocks caught fire. Now it's time to get out. Some of your thoughts on what's going on in the world of crude oil?
Well, it's when the
OPEC folks 2 weeks ago came out and said that they were going to come in and possibly start adding barrels back to the market in October. We had a big sell-off, and we traded to multi-month lows. They're threatening to add barrels to a market that is already oversupplied. OPEC has taken a good 4 to 5 million barrels off the market. We already have 4 to 5 million barrels of overproduction as it is that they have in their pocket. It's a lot of barrels, and they're saying they're going to start adding some back. The market does not need those barrels right now.
And overall, too, as the Fed decided to stand pat tomorrow, there was also talk how crude got a little boost on that as well, as the Fed, is not making any moves at this moment. Some of your thoughts on what's going on with oil?
Yeah, so to Bob's point, there's a lot of oil, and OPEC clearly telegraphed their desire to bring even more barrels on. So really, for you to be a bull, you've got to be riding on the whole seasonal trade and hoping that the weather is really hot and that there is more power burn in Saudi Arabia, potentially in Asia as well for AC demand, and that people are traveling. And so far, we've seen that demand growth is overall above trend. When you take out the recovery years for COVID, it's above trend, but it's not as high as OPEC had been forecasting. So our numbers suggest about 1.3 million barrels a day of demand growth. It's really solid, but well below OPEC's forecast for about 2.2 million barrels a day. In the context of China slowing, that's going to leave a lot of bulls scared to take bullish positions.
Mm-hmm. Look, we're in the midst of a summer driving season, some heat waves, and even in New York, Bob, you noted in your note how we're getting some hot weather. What does that mean for oil? Where do you see oil? What's the path of least resistance? Is it heading up to 90 or heading down to 60? And what stocks do you maybe think may benefit in the next 6 or 12 months?
Well, I think natural gas stocks will do well because we do have a big heat dome settling in over the country. We're going to start getting some pretty high temps here in the tri-state area. This is the most densely populated area of the country, so it really matters. We're going to get highs in the mid-90s by end of the week. That will be a natural gas load, heavy load. We're going to have to crank up some natural gas, so there's that. The other side of the coin is gasoline. Gasoline has not been performing well here. You send a barrel of crude oil through the refinery, it comes out a barrel of gasoline on the other end. Right now, you're getting $23 for that barrel of gasoline. Last year at this time, $37. It's not working for the refiners. So my opinion, you'd be a buyer of a natural gas name like EQT, let's say maybe Chesapeake, CHK. You'd be a seller of some of the refiners, Marathon Petroleum, MPC, Phillips 66, PSX, and play that gasoline versus natural gas spread there.
Wow, I'm glad you mentioned some of those names. With the buys and sells. And tomorrow, is there sort of headwinds that you're thinking of? And where do you think is the path of least resistance for the level of oil where it could be trading?
Well, I think oil prices going down to the mid-70s was a bit oversold, particularly going into the summer months. Demand should materially improve over the summer. And so we see that the speculative positioning in oil is still very low. Short positions are still very high. So I think that in the short term, the path of least resistance is higher. Could we touch 90? Yes. Do I think we'd stay in upwards of 90s for a long period of time? No, I just am not seeing enough demand to warrant that unless there is, some severe escalations geopolitically or else, really severe weather that really warrants more oil being used for power generation, which to Bob's point, usually in the Northeast, it's mostly natural gas. So we sort of see like an inherent ceiling in oil prices sort of at the $90 level, especially going into an election season. I think that there'll be a lot of focus on the Biden administration on gasoline prices. So we potentially could see more SPR releases if warranted. So the higher oil prices go, the more likely there is to be an SPR release and the more likely China taps off the gas in terms of buying for their strategic inventories. So we don't see much upside for oil prices beyond that. At the same time, with it being a higher demand season, I don't see oil, really sticking in the mid 70s for too much. I mean, I think it's really supported sort of at an $80 level.
Yeah, thank you, Tamara. Just 10, 15 seconds, but just a thought, Bob, maybe on EV demand, climate, I don't know, anything else, that AI, anything else that may be affecting this group. A few seconds.
The gasoline situation is lacking. The refiners just not getting paid to make the barrel. That's a very negative. You don't need gasoline. You don't need the crude oil to make the gasoline. And we're having that threat in summertime. That's not good.
Thank you both so much. Tamara Esner, Invectus Energy Partners, and Robert, we call him Bob Yager, Mizuho Americas. Thank you both so much. Nice to see you. That's it for Trading 360. I'm Nicole Petalides. I'll see you at 2 p.m. for the watch list. In the meantime, download our free Schwab Network app. It's available in the Apple App Store. 24/7, schwabnetwork.com. Fast Market is next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Hello, everyone, and welcome to Fast Market on the Schwab Network. I'm Kevin Hinks. I'll be your host for the next hour. We got a great show for you today. Co-hosting with me today, Kevin Green. You see him all over the Schwab Network. Alex Coffey will be here. We've got Andy Swan coming. We've got George Tillis. We're going to talk about, we have a great theme for today. As we get to mid-year, we're going to look at names that you might want to rotate into if there was a big rotation. All the beat-up names we're going to cover this week. We're going to look at them, and we're going to look and see if there's opportunity. Now, before I bring in Kevin Green and Alex, let's go through the 4 major indices and see where they are at 11 o'clock Chicago time, 12 o'clock Eastern. The S&P 500, we'll call it up 0.2%, 9.5 points to 54.41. Dow Jones Industrial Average, we'll call it unchanged, up less than a point at 38,589. The NASDAQ 100, up 0.3%, 72 points to 19,732. And the Russell 2000, by far the weakest of the 4 indices, and that's been the theme lately, down about 0.5%. $9.70 to 1996 and some change. Now, let's bring in my co-host. He's spending the whole hour with me today for the show, poor guy. Mr. Kevin Green coming to us live from Denver, Colorado. Kev, welcome to the show. It's a Monday. Kind of feels like a Thursday because we're off Wednesday. It's kind of an interesting week, and leading up towards the 4th of July might get a little slow, but I'll tell you, Kev, we've got some individual stocks that are moving today.
Yeah, definitely. And what I would say is we need to change this holiday and just make it for the Monday, right? And just have a nice little extended weekend, because this will feel like a drawn out week because of that holiday on Wednesday here. But you're right, Kev. I mean, at the end of the day, we are seeing actually some green on the screen here for the S&P 500, and we might see a little bit of a rotation taking place right now, especially when you're looking at industrials as well as consumer staples, which were faded pretty heavily last week. But I'm kind of looking at this week's economic data and how that can actually drive prices higher, getting us above that 50-ish area on the S&P 500. And it's kind of light from the economic data standpoint. We have retail sales tomorrow, very key indicator when it comes to consumer spending. We have PMI data points coming out on this Friday. And then we have Fed speakers sprinkled out throughout the week that could cause a little bit of volatility. But this traditionally should be a low volume market, maybe not a lot of rapid movements to the upside or downside, but we will see. We still have a VIX sitting at around 12.7 right now, relatively low going into this week.
I also want to bring in my guest for the first 2 segments today, and you see him, again, all over the Schwab Network, and the co-host of Next Gen Investing. Coming up next, Mr. Alex Coffey. Alex, welcome to the show. I got the 2 young Thundercats with me today. This is going to be a good show. We're going to throw this around a little bit. Now, Alex.
Sure.
You've got stocks kind of a lethargic start to the day. They're kind of picking up steam as the day gets going here. What's jumping out at you? Anything at all?
Yeah, I think one of the questions many investors, traders, let's just say market participants had after last week, such an action-packed week, into the holiday kind of disrupted week, light economic news week, light earnings week, was what's next? And it looks like it might be exactly what the doctor ordered, for just more of the same. We have S&Ps doing all right. We have NASDAQ doing a little better. And we have the Russell kind of struggling here. Bond market, I think, is somewhat pinned in a range. Now, it might be a relatively wide range. If you're looking at 30-year treasuries, maybe it's a 6-point range that the bond market might be oscillating in. If you're looking at ZB, maybe it's less. But you got volatility at lows. You got dollar kind of pinned around 105 right here. And you have kind of turmoil internationally. So what is the, in terms of equities in Europe being volatile, what has that led to? That's led to this desire for this perception of safety, to some extent on the margins. And it's been in U.S. mega-cap tech stocks, or U.S. mega-cap stocks, and that's Apple, that's Microsoft, that's NVIDIA. Now Broadcom with its split announcements getting some excitement. More of the same, Kev, and if it's been lulling you to sleep, don't maybe expect much more this week. Maybe you'll have to embrace the Thursday, Friday feeling that you're getting midweek.
Kev, I want to throw the same question to you, because you went over a lot of the things that were going to happen this week and this morning. Retail sales data, a lot of Fed speakers. What else are you looking at? Is there anything that jumps out at you? I mean, I look at things like Boy, the catch-up trade in Apple is incredible. You've got a couple, Tesla's news. Tesla was down pre-market on this news. I thought it was pretty solid news. Any good news out of China is good for Tesla. Now it's running. There's a lot of names with some big percentage moves, Kev. What are you seeing?
Yeah, what I'm keeping my eye out for this week is going to be the 10-year Treasury, Kev, and the volatility that we have seen within the yield market just as a whole, especially when you're looking at long duration, has been remarkable to say the least. I mean, even today, yields are up around 7 basis points. I mean, that's something that we just really do not see all too often. You have to kind of make the case for that downside move that we saw last week. How further can it go? How much can we really disconnect from the Fed funds at this point in time, knowing that we only have one rate cut happening here potentially happening this year? I just found that maybe we ran a little bit too far, too fast to the downside. And I believe that you actually saw that type of reaction when you're looking at the regional banks, especially when you're looking at small cap names, where they just were not able to catch a bid last week, and rightfully so. The environment's going to be a little bit harder for them. So keeping my eye out on the yield. Also looking at the dollar here, nice little bounce back to the upside. I think Alex kind of hit the nail on the head here. We had some fundamental data that could have created that upside move in the dollar, maybe a little bit. But I think a lot of it is also being priced in for political risk, especially when you're looking at France and the UK, as they may have some elections here that might churn up their administrative powers, to say the least. And so the flight to the dollar is not something that is uncommon when we have these type of scenarios here. And I think that's the reason for some of that strength. And how do equity markets really balance out and fare out in that type of an environment? The correlations we've seen, the traditional correlations just have been broken. And maybe we're in a new paradigm shift here when it comes to the markets and being more selective when it comes to the names to be able to buy into.
Yeah, Alex, Kevin brought up an interesting point that Oliver Rennick and I were talking about this morning on his show, and that is the divergence between yields and the dollar, right? The dollar seems to be reacting off foreign markets like the British pound, and what's going on in the UK and the euro kind of weakness there has firmed up the dollar. But yields, our yields were down small a week ago, and mortgage apps jumped. Well, they're down, this past week, they were down a lot more. Should we mortgage apps coming out Thursday because of the holiday? What do you think about the dollar and yields? I mean, it's not often that they diverge like this.
Yeah, I think yields are relatively pinned, like I said, in kind of a tighter range, just because I don't know that we have the scenario for a big reflation where you're going to have maybe rate hikes or anything like that if you're looking at short end. But I also don't think in the near term we're so close to a cliff on an economic trajectory that things are going to meaningfully change in a relatively short period of time. Now, 6 months, 9 months down the road, we might be having a different conversation, but I don't know that we're there yet for some significant repricing to the downside in yields. As far as the dollar, I'm on record of saying this a couple times throughout the history of our network. I kind of look at the dollar as it has a lot of upside just naturally baked into it. Really, the only situation where the dollar underperforms is somehow in kind of a bucket of its own. The U.S. underperforms a growth trajectory, and the rest of the world's doing well. It's really hard. I think it's the lowest.
Doesn't happen very often.
It's a low probability event, and just because so much of the world's commerce, the majority of it, flows through the dollar, it's hard for the U.S. dollar not to do well. Because if everybody's doing bad, that means less dollars, means more demand for dollars still relative to supply. If everybody's doing well, still demand for dollars. So the dollar just tends to do well. It just has to be a situation where the U.S. is struggling and the world is doing better for it to do disappointing. But that leads me to a good transition point here that I want to get your guys' thoughts on is, I do that same scenario in other assets. I say, what scenarios does this asset do well? What is the scenario that U.S. mega cap tech underperforms? I'm having trouble finding it, and I think that to me is the scary part about the market right now.
Yeah, I'll put this question to both you guys. We got about 4 minutes to go here. Cal, I'll throw it to you first. What worries you about the market right now? What do you think is there anything on the horizon, or is there anything coming up that could scare stocks as we sit at or near all-time highs?
Well, I think it's the concentration risk. I mean, that's been my biggest concern over the last 6 months as we continue to see gains in NVIDIA, or even if you're looking at an Apple and things of that nature. I mean, the more that they gain more power within the S&P 500, the more that we depend on them. And if we do see any type of technical pullback, that could really drag down the S&P 500. So I think that's the immediate risk that I have out there right now. I also believe that if we do see an acceleration, which we are on initial claims, in this pace or this rate of change that we are seeing over the last 3 weeks, 4 weeks, Kev, continues, that means that we probably will be seeing not only just churn in the labor market, but then that should also push up the unemployment rate. And I feel like that's just a very hard thing to be able to stop on a dime. And the Fed really doesn't have any type of tools in order to stop that immediately. And if we are seeing that type of trend, how is the market going to react? Because then that would not be part of that Goldilocks scenario. We're basically already hitting against the Fed's end of year target when it comes to the unemployment rate. And then the last thing I will say, just to kind of note here, what we saw last week in yields, and Alex kind of brought this up, the loosening of financial conditions. That's what he's alluding to, right? When that actually does occur, that can kind of spark the reflation narrative and things of that nature. But last week, that yield move to the downside that we saw on the long end actually did not coincide with loosening financial conditions. Actually, credit spreads, for the most part, tightened up a little bit. And that's something we have not seen throughout this whole cycle. In the October lows, when we had this reversal and we had the yield kind of making this move to the downside, we saw loosening financial conditions. In April, we had the same scenario. Last week, we did not. That might be another shift in this market where that correlation does change, and maybe that does add a little bit more fuel to the fire for the Fed in order to accomplish its inflationary targets here.
Alex, same question to you. What keeps you up at night other than a loud dog?
Well, I actually agree largely with what Kevin said. I think the clearest risk in the market is that we're historically concentrated.
Exactly.
The problem is, and I had this conversation off air with one of our coworkers, Dan Rosenberg, about, he made this comment, this reminds me of that old saying, the market can stay irrational longer than you can stay solvent.
Sure.
The fact is, I'm not sure the action of piling into these mega caps is irrational. Like I said, it's hard to find the fundamental reason why they would underperform. Now, they might not be the best performer, but they seem to be getting a safety bid. They seem to have the growth excitement with the AI. They seem to have the most cash, so they're the least impacted by rates. It's hard to find the negative in those positions other than everybody agrees. That's the risk. But medium and longer term, fundamentally, I think if you made me choose between am I more worried about inflation or more worried about potential recession, I lean towards recession.
Yeah, I mean, these are questions that everyone has to answer. And what scares me? The fact that I've seen this happen so many times, and you don't have to go back very far. Streaming, right? There was so much euphoria during the COVID pandemic about streaming, and look what those streaming stocks did. Eventually, some of these companies are going to have to monetize AI. They're going to have to show that they're good at it and that it brings value. And then maybe NVIDIA's demand, can competition come into the market? Is demand going to stay this robust for a long period of time? There's a lot of things to question here, but right now, there are no questions and there are no problems, and this market really seems to be comfortable right where it is. All right, guys, let's take our first break of the day and go back with our first stock. We're going to look at, remember, beaten up stocks that you could transfer into or roll into from some of these overpriced stocks. First one we'll look at, Boeing. This stock has been tortured by news, by events, by so many things. It's up a little bit today, but we'll take a look at Boeing. Take a quick 2-minute break. Come back with Alex, Kevin, and I on more Fast Market. See you then, everybody.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to Fast Market, everyone. Kevin Hinks, Alex Coffey, Kevin Green back for our first segment. Remember, our theme today, beat up stocks. We're going to look at Boeing. We're going to look at Starbucks. We're going to look at UPS. Three names that as you rotate out of some of these large cap as we get to mid-year, maybe you want to start looking at some of these good companies that are beat up. The first one, Boeing. Kevin Green, I'll go to you first. When you look at a company like this, the headlines, the events, I'm going to give you a stat, Kev, to start off for a discussion topic for both you guys. In 2021, 13,500 deaths from cars, 5,900 from cycles, 7,300 from pedestrians, 57 transit passengers, U.S. air carriers since 2021. 0 deaths. Kevin, your thoughts on Boeing and all the problems that they have?
Yeah, it's a little bit morbid for a Monday there, Kev. But
that's
I mean,
a lot of numbers.
It is. I understand where you're coming from, right? We see the headline risk that is out there as far as the risk for some of these planes, the 747s, the MAX planes, even the Dreamliners now kind of in the crosshairs. But we have to also think about this company here as a duopoly. I mean, there's only a couple of them that can actually maintain the space here in the near term, or at least for the next 10 to 15 years. So how low can it go? I mean, that's for the market to be able to decide. And we were so really focused on the commercial side of their business, which drives, I want to say around 60%, I believe, about 60% of total sales. But they also have a defense business that is actually doing fairly well, continuing to see some decent sized contracts, and then they are fairly profitable on that side there. But how can you manage the headwinds? I think that's going to be the biggest case here. And then how much are they going to come up for the Spirit Airlines, the Spirit Aerosystems deal? Are they going to see immediate synergies like they stated that they will after the first year? Will it be immediately accretive? Is this going to improve the quality control? All those questions out there, I don't think we're going to have answers to in the immediate term, but you kind of know that there's not a lot of places that you can go. And are we going to really diversify away from Boeing and go to another company that might be overseas? I find that very hard to believe here. So technically, it does look like it's a little bit oversold. Fundamentally, obviously, the news headlines aren't great. But you never buy, I wouldn't say never. Sometimes you find value when a stock is really beaten up. And I think that's kind of your thought process here, right, with this theme today.
You're getting well trained, Kev. Never say never, never say always. Alex, how do you rule out the noise with all the events, with the news flow on this company? I'll give you another stat. Ready for another stat? The backlog as of May 31st, 5,625 planes in their backlog.
Well, I'll tell you one thing, you don't rule out the noise, but sometimes you got to plug your nose and you just got to know that the scariest time to buy into some assets sometimes is the opportunity. Like, there is risk associated with Boeing, just like any name that's beaten up. That's why it's beaten up, but that risk corresponds to the reward potential. So you might be taking greater risk, but maybe you're looking at it from a longer term perspective, and you're looking at strategies that can help you position yourself for a longer term perspective if that's what you look at. But I also, if we could pull up a 10-year weekly chart of Boeing at some point, I think it's important to go back. Look, Boeing, there's going to be chapters in the history books and financial books about micro and macroeconomic forces, and Boeing's going to be the perfect example for both. Boeing has had its own issues for the last 3 or 4 years that have held back this company, but it also had macro forces with the shutdown of air travel and everything that impacted it as well. But from September of 2016, which is about a year and a half into my career, till February of 2019, this stock was NVIDIA. It had no downtick.
Right.
And so at one point, it wasn't a matter of when's a good time to buy Boeing. It's, is this stock going to go to 1,000? Is there ever a time to sell Boeing? So it goes to show, so we tie it back into our macro combo, when things feel like they can never go wrong, let Boeing be the cautionary tale.
Sure.
But once they've gone wrong, it can present potentially generational opportunities to get involved with a company that, to both of your points, has one true competitor, and it's an international foreign company. This company is so tied to defense and the U.S. government that there is probably a floor somewhere in this company. I don't know where that is.
Right.
But it's unlike other names for that reason. It's probably why they've even had these inefficiencies and hiccups, is because they haven't been pushed by the competitive forces of the market. That said, Kev, this isn't necessarily a situation where I would be jumping to sell at the weakness. It'd probably be something where you're considering to get involved on the long side or considering passing.
All right, Kev, getting back to you for just a quick question. When you look at a company like this, and there's not a lot of players out there. You mentioned that, right? There's no real competition other than Airbus. The U.S. is invested. It's more than just a 737 maker. They're in defense. They're in aerospace. There's a lot of different parts of this company. Your thoughts on Boeing, Kev?
Yeah, I'm right there with you. And then also just looking at the tail of the downstream companies that also interact with Boeing as well, right? So there's a lot of support when it comes to small businesses, mid-sized businesses for this company. So the U.S. is definitely invested in this name. But once again, kind of getting over the headwinds or the news headlines has been a little bit tough. But if you kind of notice, the more and more headlines we kind of get out, the less and less impact that it actually has on the stock. And that's actually a decent sign. Not when you're talking about the news, but when you're talking about the shock value that news can have on a company, once it starts to lose some of that, that's when you kind of see a little bit of a floor in this name. Kind of going back to that 10-year weekly chart too, you are looking at a little bit of an inverse head and shoulders type of pattern, which is bullish if this stock is able to maintain or hold above the $130, $125, $130 level. Now, obviously, weekly chart takes a long time for it to develop, but there is a technical structure there that may say, look, the stock could potentially hold in the near term. But I'm right there with you. I mean, there's so much that is invested in this name. I think it's more of when it's going to turn around and not if. And if it does have to come to intervention, regulatory intervention, I don't think that I don't think we're outside of the woods yet if it does come to regulatory intervention, just because of the impact that it can have with the economy here.
Alex, you brought us a trade in Boeing that is a kind of buy the dip type strategy. Tell us what you got.
Yeah, that's the idea here, Kev. Going out to July, buying 175 put, selling 2 of the 170s. We talked about potential risks in the overall market. If the market is to sell off, you maybe see a sell-off in Boeing as well. More headlines could lean to more downside. This is a strategy that, although it's neutral to bullish, and your risk is potential assignment, or at least the risk of being a shareholder, as you'll see that outsized max loss of 16,375 coinciding with that 163.75. That's because you're short a put.
Right.
But this is done for a credit, and the best case scenario, Kev's actually at a lower price. It's at 170. So it's a situation and a strategy that I would implement if I wanted to get long a stock. Wasn't quite sure we're maybe all the way there, but also wasn't so sure that this stock wouldn't maybe just make a U-turn or hang out here. I want to do it for a credit, but I also don't necessarily want to buy it quite yet. So leading to the downside, essentially your risk is that you'll be buying this stock at 163.75 effective purchase price, and you assume that risk for $125 in max profit based off that credit. But it can, of course, expand to 625 if it perfectly pins 170.
Kevin, 1/2 back ratio that you add a $5, it's 2 spreads, right? We talk about it's a cash secured put, but it's also a long 175, 170 put vertical. Kev, your thoughts?
Yeah, I mean, the structure here, too, when you're looking at the break-even point, I mean, the technical low that we saw in mid-April is really right at that break-even, which I do like that setup there, because you're also utilizing not only the time decay, but also the technicals to structure the trade. What I will ask, though, if you don't mind, Alex, instead of just doing the cash-secured put, what's kind of the differences, or why would you add that debit put spread on top of this? Is there a time value type of scenario that you're trying to play, or is this just something to be able to try to leverage up a little bit more?
No, I would say it's actually the opposite. For getting the break even down at 163.75, if you still think that there was still potential downside where it would be testing those bounds, this can expand into that 170 strike as opposed to the cash secured put, which essentially you just need to stay out of the money or you're going to be assigned at expiration. So for me, this is just a higher probability strategy and one that's still done for a nice credit. Also, if it does rally a little bit and you're able to buy the 165 put for less than $1.25, effectively you could put on a butterfly spread for less than zero.
Yeah, the risk on this trade is to the downside, as you know. So, because even though you're buying puts, you're buying one, selling two, you're trading it for a credit, so you have no risk on the upside. But what it does, if it gets down there, obviously you have a chance if it goes to 165 to take this off for a $5 credit, the put vertical, and the other put goes to at or close to zero. So, but make sure we all understand what the risk here is. The risk is that cash secured put. If that goes in the money, your risk is just like buying the stock. The advantage here is that you discounted that price. The break even is significantly lower because you get the benefit of that $5 put vertical. On the upside, you make your $1.25 or whatever credit you sell it for, and everything goes to zero. But it's on the downside where things get interesting. If it settles around 165, a very good scenario. If it doesn't, if it goes lower than that, you're going to be long the stock. But like I said, at a lower level, at a lower entry level than before. But a really interesting way to look at this. It's not for these small to medium accounts, right? There's big, that cash secure put carries margin with it. So you have to understand that going in. It says the margin on the Thinkorswim platform is about 17,000. That's the downside risk to zero in Boeing stock. So a real interesting look at how to do that. But again, this might not be for the small. It's more to the medium to large accounts. All right, let's take our second break of the show. Come back with our Like Folio segment. Say goodbye to Alex Coffey. Thank you so much for spending some time with us. Like Folio is coming up next. Andy Swan will be here to talk about another beat-up name, and that is Starbucks. Take a quick break. Come back in 2 minutes with Kevin Green and Kevin Hinks on Fast Market on the Schwab Network. See you then.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Fast Market, everyone. Kevin Hinks here along with Kevin Green. Now it's time for our cash tag segment. I'd like to bring in the co-founder of Likefolio.com, Mr. Andy Swan, to the show. He's going to talk about another one of our beaten up names. Andy, we're getting our portfolios ready for the second half of the year, so we're nibbling on some ugly names here. Starbucks is one of them. It's off its lows, but it's still significantly off where it was. And the fear, Andy, is this stock has stopped growing. Your thoughts?
Yeah, I think the fear that they've stopped growing comes from the fact that it seems like they've stopped innovating, and I think that's the big problem. They've tried to produce some new drinks, some new food items to really no avail. That putting olive oil in coffee apparently wasn't a big hit, and so I think this is a company that feels like they've run out of ideas. They're expanding by building more stores, which is always a positive. But each of those stores is doing less business because customers have a lot greater choice now. You look at the competition coming from Dutch Brothers, Scooters, Luckin Coffee. Starbucks is up against a whole new wave of competition and very competent competition. I know where I live in Louisville, we see these miniature coffee shops popping up pretty much next door to Starbucks, wherever they are. It seems like that's the strategy of these competitors, and it seems to be working. And so, overall, I think Starbucks, it's a really well-run company. It's easily the top name in coffee. It's got a big bullseye on its back, and the competition is coming in really strong. So, we think Starbucks being down at these levels is probably about the right price. I think long-term, this is a good company that knows how to execute and can find its way through headwinds. But the headwinds are very real, and I think investors need to know that for the next year or two. I think Starbucks could be somewhat dead money, but potentially a long-term, call it kind of dollar cost average you could get in over the next 8 quarters and probably be okay. But we don't see any reason right now, at least from a consumer engagement perspective, to be thinking that Starbucks is anywhere near through this turnaround story they're trying to pull off.
So Andy, when you're kind of looking at this data here, what is really driving some of the optimism when you're looking at some of these other names like Dutch Bros? Because when you're looking at Starbucks, yes, they have a domestic presence, obviously, but it seems like they've also been lacking when it comes to their China growth, and that seems to be the thorn in the side for them. But what's Dutch Bros doing that Starbucks is not doing outside of maybe the innovation? Is it more marketing style? What's it looking like when it comes to the data that you're seeing in the market?
Yeah, it's interesting when Luckin came out and they said that their China strategy worked because they understood the Chinese market. And I think there's some indication that maybe Starbucks was a little bit arrogant, a little bit presumptive in the way that they moved into China, maybe didn't understand the market as well as they should have, and a competitor did. But I really think, what Starbucks has going for it is its name and all of its locations, its ability to expand. It's got a great balance sheet. But what they aren't doing right now, again, is just really getting the customer excited to come into the store. It used to be that when Starbucks came out with a new drink, everybody would rush to Starbucks and give it a shot. And today, I think a lot of that luster has faded, and people see it more as just a convenience play. The other problem for Starbucks, of course, is that labor costs are going up.
Sure.
Input costs are going up. It's really hard to keep customers happy when they're paying more and more every single time they drive through. I think customers are feeling that, and some of them are just moving to the ultimate competitor, which is just brewing it at home.
All right, Andy, let's have some fun with this segment. Howard Schultz just called me. He wants Andy Swan to be the next CEO of Starbucks. How would you get this company back into the competitive arena?
I think that what Starbucks could do is just go back to its roots of, building products that the customers want. I think they've lost touch a little bit with their customer base. I think they've become an efficiency machine. They focused on opening new stores. But I think that the first thing that you've got to do is kind of get back to that roots, that startup roots that they once had, and just say, all right, how can we wow the customer? How can we bring people into here? How can we make our marketing pop? We keep getting caught up in all of these, kind of political distractions when really the conversation should be about our products. And so that's first and foremost what Starbucks has to do is just reconnect with the customer and start delivering products that excite customers again. It's just been missing for the past 18 months, and there's no real signal that that's changing.
So, Andy, one more question that I have here for you, because I think you kind of highlighted it. Well, obviously, we talked about the innovation side with pricing power. I mean, the company has been able to increase their prices over the last couple of years here in order to compensate for the lack of volume, especially when it comes to the new store footprint. Do you think we might have hit a ceiling when it comes to their pricing power in this space where somebody can, brew a coffee at home for $1 rather than spending $8, $9 on a latte?
Yeah, no, I think that's a perfect point. It's exactly right. I think that ceiling is coming down. The ceiling of what customers are willing to accept and pay is coming down while input costs are going up. That puts Starbucks in a really tough spot. Like we've talked about on this show many times, people are moving from Target to Walmart. They're moving down brand, down price, and Starbucks is in the wrong spot for that type of activity because they are the top dog. And so I do think that the days of them just raising prices and raising that ticket price, total ticket value, those days are over, and they've really got to get more people in the door and excited to purchase their products.
Yeah, stay in your circle of competence is the secret for Starbucks, even though they can say they opened 364 new stores and their rewards members actually went up by 6% to 32.8 million. They've got everything they need to be successful. They just got to get that right and stay in the business that they're really good at. Andy Swan, thanks for coming on as always, spending some time with us and bringing us the Likefolio data on Starbucks. Have a great day, Andy.
Thank you. You too.
All right. Now, all right, Kevin, when you look at a company like this, it's beat up. It's priced for, not doing well. It's down here significantly off its all-time highs. Now, it did bounce. They hit it after earnings when some of their numbers were a bit lower. Got down into the low 70s. It's up close to the high 70s now. Oh, it's over 80. It's now $81. Kev, you have a trade force in Starbucks. What do you got?
Yeah, a couple of weeks ago, the stock was trading at around $83.50 here, Kev, and kind of looking at that bounce back type of trade, China reopening, maybe they are going to right-size their business, become a little bit more efficient. Let's look for an upside move here. So the example trade here is actually doing a bull call spread, buying the 85, selling the 90s, out of the money for both, but you're looking at doing this for a debit of 55 cents with your max gain at $445. That's if the stock is above the $90 strike at the time of expiration, with your max loss being the debit paid $55 and a break-even point of $85.55. So yes, you will need a significant move to the upside here by the July 19th expiration. But if we do kind of get this rotational trade or traders looking at trying to buy value names, buying these dips in a lot of these companies here, this could be a stock that recently kind of was only around $2 away from that lower strike level. And this has that risk reward of about almost 10 to 1 if you look at it. Where it could be fairly profitable if you are able to get that stock to move to the upside there. So minimizing downside risk, small debit for that. Upside potential is pretty wide. Let's see if this is going to be something that is able to shape up. What do you think?
32 days until July 19th expiration. You're right. This is $3.5, $4 out of the money. It's similar to trades we talk about a lot here, but this is the long side of those vertical spreads. You need a move. The risk, you're right, Kev, relatively small at you said 55. I think it's trading up near 70 cents now as the stock has rallied a bit, but still, you need that move. Even if it's trading 70 cents now, 85.70 would be the break even on that trade. So you need an upside move, but if you do, and there's the trade-offs in a spread like this, if you get the move you're looking for up towards into the high 80s and towards $90, you've got a multiple winner. The downside, a little bit of a low probability trade, and the risk on a spread like this, Kev, only what you pay for it. Final thoughts.
Yeah, exactly. You know, you're looking for, this is more like a lotto ticket or a very significant upside move type of trade here, Kev, but you're right. If it is able to become profitable, it could ramp up fairly significantly too. And even if you're kind of looking at these moves and it does not hit that 85 level, but it's on that trajectory going in the next couple of days, you could also look at trying to exit out of the position if there's something that makes you a little bit uneasy about this. So you're exactly right. And it's around a 9-to-1 risk reward for this particular trade here.
Yeah, you're looking for some of the news cycle on Starbucks to change, like things getting better in China, like the return of growth. If you open up 364 new stores, you still think you're a growth company, right? You feel you're growing. So if that feel that they're growing comes back into the view of Wall Street, right? That could help the stock. If they turn around some of the numbers, if they get some of their labor problems better, even if they do something like a CEO change where Howard Schultz comes back or something like that, there's a lot of, when stocks are beat up like this, a lot of things can be the catalyst that takes them back up. This stock was significantly higher than it is right now at one point, and that's what you're looking for. Some change in that news cycle and the news flow, some good news. China would be a great place to start. All right, Kev, let's take our final break of the show. Come back with Kevin Green and George Tillis to talk about our final beat-up stock of the day, and that is UPS. Oh, man, has this stock gotten beaten up. Take a quick break, come back with our final trade on Fast Market on the Schwab Network. See you then, everybody.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab. Have a choice in how you invest with Schwab.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab. Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Welcome back back to Fast Market, everyone. Kevin Hinks and Kevin Green back for our final segment. Before we bring in George Tillis, let's go to the Schwab Center news desk for a quick market update from Mr. Ben Lichtenstein. Ben, the market started off very hesitant, very calm, and now it's just starting to drift higher again. Ben, it's incredible, the movement here.
Yeah, really shrugging off some of that weakness we saw in global indices overnight, Kevin. Kind of a disappointing start, to say the least. Asia-Pacific region in general was lower across the board. I saw the Nikkei down around 2% to start the week. So yeah, U.S. indices shrugging that off, not only shrugging off that weakness, but also posting new all-time highs in their efforts to do so in the NASDAQ and the S&Ps. Now the Dow still lagging a bit relative to those historic levels and still holding below that kind of key psychological level around 40K. So is the Russell, right? Russell actually sold off earlier today down to 1993, back above 2,000 as we speak. All four major indices in positive territory. But again, it's really the S&Ps and the NASDAQ. 54.58 was the high we saw in the S&Ps, 19,798 for the NASDAQ. So that trend we're seeing continues, 2 steps forward, 1 step back. Investors kind of discounting some of the unease and uncertainties that are out there right now. One of those being a stronger dollar we've seen, even as yields have come off. Data which is suggesting the economy is slowing. So I think the debate right now is, are we talking about rate cuts because we've made progress towards getting back towards that 2% target, or are we talking about rate cuts because we've got the economy which is starting to weaken a bit?
Ben, stay right there. I want to drill down a little bit more on the U.S. dollar, because you're right, it's firmed up. And you've got gold, you've got copper, both had record runs, and now they're just taking a wrecking ball to these two precious metals. What are you seeing there?
Yeah, definitely a bit of a retreat, right, off of those historic levels. We've seen some of those geopolitical tensions ease. I think that's pulled some of that premium out of gold. And, you know, copper really struggles above $5 for the most part. That's historically one of the levels where we see a lot of resistance, and we've pulled back significantly. But there was a big move up, right, to say the least, up to 519, just shy of 520 back in the end of May, and then back down to this 440 level. Gold back down to 23.25 off their highs up around that 24.50 level. So yeah, I mean, some of it I think is the stronger dollar, but some of this copper move I think is tied to this weakness that we saw China.
Sure.
A little bit of disappointment in terms of industrial production. Also, a house price index cratered. I mean, down 3.9% there. So lackluster enthusiasm tied to overseas or kind of any real, growth there. And then also you've got a lot of turmoil in Europe based on tied to the elections right now. So not surprised to see some of these metals coming off a bit.
Yeah, that copper trade, a proxy for China, a proxy for U.S. home building, and obviously a inverse relationship to the U.S. dollar. So a real interesting look there. Ben Lichtenstein, the host of the Future Show every morning on the Schwab Network with Ben Lichtenstein. Thank you so much for coming on. Now, let's go out to Salt Lake City, Utah, and bring in Mr. George Tillis to the show. He's going to look at our final beat-up name, and that is UPS. George, this company, it looks like a year and a half, they settled their labor dispute. They gave a big raise to over 300,000 employees. The stock has not upticked since, George. Tell us your thoughts.
It hasn't. I mean, if you look at the trend in UPS, I mean, it's been in a downtrend since 2022. And if you look at sales, they've actually been down relative to that year. I mean, in 2022, the company generated over $100 billion in revenue. And if you look at the last 4 quarters combined, it was around $89 billion. So obviously sales have been decelerating for UPS. There was a huge boom, 2020, 2021, as, parcel deliveries were just going through the roof. It seems to have settled down quite a bit. And if you look at the expenses for UPS, as you alluded to, Kevin, the driver pay has been exceptionally higher. And effectively, UPS front-loaded about 45% of that pay up front. So they cut into their cash position to essentially pay that ongoing expense, which is going to be increasing over the next 5 years or so. So I don't know. This may be obviously a barometer of the economy, but it also might be a barometer of a normalized economy, which may not necessarily be a bad thing. But I do see that if you look at UPS's earnings profile, you look at 2024, the actual movement to the downside, I've looked at the last 2 quarters and compared, they actually had around $8.85 estimated for this year. That's come down to $8.20. But if you look at next year, what's interesting is they actually increased their earnings guidance over time in the last 2 quarters from about $9.59 to $9.75. So we're seeing the forward multiple, at least for next year, compress. It's now trading around 14 times next year's earnings, where historically it's around 17 times on a 5-year average. So it looks like the recovering earnings, at the very least for UPS, is expected to be in next year. But overall, the trend is still down. If you just look at the price pattern, the 50-day moving average is a trend proxy. It's below that. It's also below the 200-day moving average. So it's too soon to actually say, is this the time to buy into this name? I think the valuation is becoming a little more compelling, but it just hasn't posted a trend reversal as of yet.
So, George, I think when we're looking at their guidance, I mean, we saw this last year as well. They've been trying to forecast out a bounce in volume, and that just hasn't been the case. In fact, it continues to decelerate, as you kind of talk about here. Is that the biggest risk for them for that forward multiple moving forward? Maybe volumes do not catch up, or are we seeing pretty much peak expenses? And even if they keep their volumes at these particular levels, they should be able to drive bottom line growth. What are your thoughts there?
So yeah, it's a great question actually, Kevin, because I think what's happening here, looking at 2024's earnings guidance cut, is like I said, they're front-loading a lot of expenses. So ideally speaking, that's sacrificing current shareholder price, or at the very least, the last year and a half. I mean, the stock is down year to date, I think in the mid-teens. If you look at it over the last year, it's down 20%. So I think they're essentially saying we're going to take these expenses up front for the most part, because I think if you look at the next year, or like I said, earnings estimates are actually rising. So if volumes start to pick up, or at least stop decelerating, because if you look at the last year, just total sales, rate of change or growth metrics, they were down about 9%. Earnings was down about 23%. But if you look at the forward revenue, it's expected to be flat. So I think sales volume is going to stabilize with some increase in earnings volume or earnings growth. So that, again, at least from a financial perspective, looks like there's a trend reversal in the making, but you have to let the market tell you what's happening first. Right now, the market is telling us the trend is still down, but you are getting paid. Lastly, here, let me just say, you are getting paid to wait because they are paying a pretty generous dividend, around $4.82, which is about 4.8% yield.
Yeah, that's a strong number. And with everything going on, I think this labor dispute that is now settled is going to bring in more automation. They're going to bring in cost initiatives. They're going to try and get the expense side of that ledger down, and then hopefully get the margins better and improve. Their thing was less volume but higher quality. They've got a plan. We'll see if it works, though. George Tillis, thank you so much for coming on, as always, spending some time with us. Have a great day, George. All right, now, if you believe, let's go through a paper money scenario in UPS. And if you believe that the turnaround is coming, and the stock is, in terms of an RSI, it's in the mid-30s, so it's not oversold yet, but getting pretty close. It's certainly in the low. But you look at the 3-year move on this stock, Kev, down 32.5% over the last 3 years. So this stock has gotten pummeled. George mentioned the dividend. If they pay it, remember, sometimes when stocks sell off like this, the dividend gets high and they actually cut the dividend to save money. We don't know that. We have no idea, but it's something you certainly have to watch. So the paper money trade that we looked at here, if you think that the recovery is imminent, you can go out to the July 19th expiration. That's 32 days, if I got the number right. Yes, 32 days. Buy the 135 call, and then go 2 weeks out to June 28th and sell the 140 call. That diagonal was trading about 360, 370. Now it's trading about 340. It looks like 338, 340. Cautionary tone here. The markets in UPS are a little wide. I would really suggest some price discovery, as I've noticed that the premiums, the level, that mid-market moves all the way around. It's a bit volatile, so you might want to check that a little bit. Really work on price discovery when you trade this name, because it's not the tightest markets. It's not the most liquid. But anyway, This is a trade that collects data, not as much as you think because the expiration is out a bit, but certainly a name that you can look at for a long-term play, or you could buy the stock because of the dividend. But remember, dividends are risky, especially on a company possibly not doing well. Kevin Green, I have 30 seconds. Give us your final thoughts on today's trade.
Yeah, selling premium in order to try to reduce some of the cost for that longer call, I think, is a strategy that is employed by a lot. You know, you could actually look at it as a, poor man's covered call, if what have you, but still looking for an upside move. And then you also have the ability to sell additional premium after the initial one actually runs off there. Because this is a strategy that you can also finesse a little bit to be able to position yourself really well, Kev.
Yeah, this is a diagonal spread. It's in the calendar spread family, but certainly you've got an embedded vertical spread in there. The risk on a spread like this is what you pay for it. There is opportunity to extend duration, but you've got to look for liquidity there and all the things that come with extending duration. You're buying one option, you're selling another. Always be careful with things like that. But if this is a name, this is that gives you the delta. It's a calendar spread family, but it gives you delta by embedding that call vertical. Kevin Green, thanks so much for hanging out with us the whole hour. Always good to have you on Fast Market. For all of us here at the Schwab Network, have a great day and a great afternoon. Don't forget to download the Schwab Network app, available in the Apple Store, and tune in 24/7 on schwabnetwork.com. Stick around. Alex Coffey, Jenny Horn coming up next with Next Gen Investing.
Welcome to Schwab Network. Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Horn, and I am joined today by Caroline Woods, who is coming to us live from the NYSE. And we're seeing green across the board today. Actually, some more modest strength throughout the session, but at least the four major indices holding on to nice gains, led by the NASDAQ, which is up about 0.8% here, Caroline.
Hey there, Jenny. Yes, green across the board, despite a pretty sluggish start to today's action. I think coming into today, the big question is, can the momentum continue after the S&P and NASDAQ notched those record highs last week? We're up for the 7th week in the past 8, and it looks like the answer is yes, at least right now. I'm seeing, the AI trade is still going strong, although I will say Google, Meta, and Amazon are not participating today, but it's another big day for Apple, for Tesla. Every sector in the S&P 500 is in the green except for healthcare, utilities, and real estate. So seeing some strength, and it's pretty impressive compared to what we saw at the open, at least, where it was basically kind of like wait and see mode.
Yeah, and I would say it's amazing. We joke that the market's able to rally without Apple, but today it's actually able to rally without NVIDIA. I know NVIDIA is basically unchanged on the session, but not seeing the same momentum as like the Teslas and Apples on the day, like you just pointed out. But even though we're in an earnings light period, I always say if you're a believer, we can always find earnings to discuss. And actually, a lot of analyst upgrades and downgrades today. So we'll kick things off as always with upvote and downvote. We'll chart and trade those upvoted names. For FOMO, we're looking at two of those analyst calls today on the consumer discretionary and staple space. And I would say both are pretty optimistic as far as analyst notes go. We'll also be diving into Broadcom today at new all-time highs. Strength across semis today, really across the board. And AMC actually having its busiest weekend so far this year versus, summer of 2023, led by some of these popular titles that were released. So a broad range of topics today to get through today, Caroline, but upvote, downvote, as always, not recommendations. But some of the biggest, most market-moving names, frankly. We'll start off with Tesla being one, which is one I joke that we look at on this show pretty much every single day, but because there's always news.
Can always count on Tesla, and there are a few headlines today. Of course, Elon Musk got his pay package approved last week from shareholders, and now Tesla got approval to test its advanced driver assistance system in China, more specifically in Shanghai, but approval for other areas are in the works as well. That's according to Bloomberg. Tesla staff, will conduct the system's initial tests. Meanwhile, in terms of other headlines, the Dubai police has actually introduced Tesla's Cybertruck to its fleet of vehicles, specifically for its tourist police luxury patrol fleet. The Cybertruck is green and white, and it has the license plate number 5. The Dubai police posted about it on X, and Elon Musk responded cool with the smiley face emoji that's wearing sunglasses. So I will say, though, the luxury patrol fleet apparently also includes Bugattis, Lamborghinis, and an Aston Martin, but it's mostly used as a tourist attraction, I read. So I don't know that we'll see it involved in any big crimes or anything, but I will say, from watching The Real Housewives of Dubai, I know how fancy Dubai cars are, and I know how important or expensive those low number license plates are. So I think 5 is pretty impressive for Tesla.
I do as well, and I think it's so cool Elon Musk responded as if it was no big deal, because I was also a little bit like, this is really cool. You have like the crown prince in attendance of this Cybertruck unveil. It's not too shabby of a crowd to be associated with. And I have to say, I've seen more and more of these actually on the road. They are so cool. They're so weird looking, frankly, that every time they draw my attention. But I'm jealous. I'm like, go ahead.
No, I was going to say, sorry to interrupt. I feel like they stop everyone. I've only seen a few, but I just saw a bright blue one last week driving around my neighborhood, and literally everyone on the street stopped and was looking. So they certainly attract the attention.
Okay, and I haven't seen a colorful one yet, so I would probably also be the person like that halting traffic just to get a glimpse. But actually, our next name today, I'd say, fits into like the overall EV conversation, because we're looking at BYD. Of course, this name trades a little bit on its own because of its nature being an ADR, but still, we are seeing that Berkshire Hathaway is dumping some of their positions. So I would say this is not exactly encouraging, but BYD, I think, has been seen as the most formidable competitor to Tesla.
Yeah, certainly so. And the winner when it comes to China, this is the Chinese EV maker. U.S. listed shares are up about 1.6% today, despite the fact that Warren Buffett's Berkshire Hathaway sold shares of BYD again. Last week, Berkshire sold about 1.3 million BYD shares listed in Hong Kong. That leaves Berkshire with about 75.7 million shares worth about $2.3 billion. So U.S. listed shares rising today regardless, up about, call it 7% year to date. It could be because the stock sale already happened. It's in the past. We also don't know if it was just Berkshire Hathaway taking some profits, as they tend to do, or if this is a call on the broader EV space, given some of the headwinds that it faces, including increased competition and, of course, sluggish demand that we've been seeing for some of these EV makers. But I will say, I was taking a look, BYD has about 33.4% of the EV market share in China, as opposed to Tesla's 6.9% share. So it just really goes to show its dominance in China. That's according to a source called CNEV or CNEV. But you know, BYD shares seemingly unfazed by this news that Warren Buffett sold some shares.
And I feel like there was a point in time when that was like really market-making news, but maybe this is just me. I like the quarterly filings, and outside of that, I just feel like it's sort of at this point we're used to it. And I maybe that's just me not trying to discount Warren Buffett, of course, but it just hasn't been the most market-making moves. I mean, like we've seen from some of these filings. But next name today is one that's always on our radar. Of course, that's NVIDIA, which I was saying was down on the session. Of course, now that I said that, we're slightly positive. I mean, I'd call it unchanged, but a name that's up 166% on the year and touching, I mean, right now, recent highs again today, and just continuing to be, frankly, like an amazing name to follow. So what is the latest, Caroline? Because again, this is another one like Tesla. I just feel like there was always headlines to go through. If it was ever like a news light day, I just look at NVIDIA.
Exactly. Yeah, it's kind of rare that NVIDIA is literally absolutely flat right now. It started the session in the red, but then actually it started the session in the green, but quickly turned negative, turned positive again, and now basically at the unchanged line. Just to put that into perspective, though, NVIDIA added 9% last week. It's already up 20% in June and 166% year to date. So I will say, in terms of the headlines that we're seeing, Citi closed the firm's 90-day positive catalyst watch on NVIDIA, said the catalysts including the April end quarter earnings and then that Computex Taiwan event, those have expired, and that the stock is up by over 50% since mid-April. Citi has a buy rating and $126 price target on NVIDIA shares. It's currently trading at $131.76. Meanwhile, it did get a price target boost from Susquehanna up to $160 a share from $145, kept a positive rating on shares. The analyst there noted that the target was based on a ratio of 51.5 times his forecast for NVIDIA's adjusted earnings per share for 2025, but says that's warranted, even though it's higher than the multiple for the rest of the group, because the company is well positioned to take advantage of flourishing end markets. I will say 160 is the highest price target on Wall Street now. 150 was formerly the highest. It implies, about 20% upside from current levels, and it's quite a bit higher than the median price target, which is 125. So NVIDIA currently trading above the $125 price target, despite the fact that 91% of analysts still rate this stock as a buy.
I know, and frankly, it's amazing. Like last week, we saw such a phenomenal back half of the week, and so many of these like semi stocks. Actually, the stocks index did post its best week in almost 2 months. So no surprise that NVIDIA rallied, but it still, frankly, amazes me where we see this name with the extent in which it's run up another 20.5% now month to date. I mean, it's frankly crazy. And our next name today actually speaks to some of that strength we saw in the semi space. That's Micron, actually also touching a new all-time high today. And this one has quietly been a very solid performer. I mean, we're up another 18% now almost month to date, and up 72% this year. Of course, that is, I mean, now almost 73% on the year, excuse me, but that is almost equally as impressive. I know, like not like, to the extent in which NVIDIA has rallied, not trying to compare them, but I just haven't been watching Micron. Hadn't realized we've been pretty much on this straight shot to the upside, Caroline.
Right, Jenny, and actually, if you do compare, I was saying NVIDIA is up 20% in June. Micron's up 18% in June, so almost comparable in terms of the month-to-date performance. But the memory chip maker is seeing shares up about 4.5% After getting several price target hikes before earnings, which come out next week on the 26th, Cantor Fitzgerald said don't overthink concerns about the potential impact from the Taiwan earthquake in April or the fact that they didn't positively pre-announce results already. In turn, boosted their price target to $180 a share from $150, stuck with an overweight rating. B of A raised to $170 from $144, kept an overweight rating on, or a buy rating on shares. Says Micron will be a key beneficiary of rising high bandwidth memory share and cloud. Pointed to the 12 to 15% annual increase in DRAM requirements in order to support AI PCs and, of course, smartphones. And then Susquehanna went even higher, raised to $185 from $143, kept a positive rating. Says they raised their estimates across the board to reflect increased confidence on blended DRAM and NAND pricing trends. So I will say, I mentioned Susquehanna went higher than the other two. Not the highest on Wall Street for Micron, though. I was taking a look. Rosenblatt's at 225, but still high up there. 185 price target. And Micron's currently trading around 148 right now, so pretty impressive. But yeah, Micron Technology's up about 4.5% today.
I know, and I know we've come off of session highs here a bit, but I mean, not by a lot, by about $1 here. We touched highs 148.75, so we're just about $1 off of those highs. But I mean, I think that this has been a really interesting story and just goes to show there's other names to follow outside of like the chips. Obviously, this is more in like the high bandwidth memory space. But we'll be looking more at NVIDIA's chart because it's just one that frankly continues to amaze me, as well as Tesla, which has been somewhat of the disappointment, if not the biggest disappointment of that Mag 7 trade. So we'll be diving into the technicals as well as some example trades in both of those names. Stick around, Next Gen Investing. We'll be right back.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. I'm Caroline Woods filling in for Alex Coffey. It's time to send it back to Chicago. Jenny Horn is joined by the chart master himself, Rick Ducat. Jenny?
So we are looking more at our upvoted names, of course, Caroline. Here we'll start off with Tesla, which is, we're also looking at NVIDIA. So we'll talk about the like have-nots versus the haves of the Mag 7, which I know we haven't used that term in a while, but I still mentally use it. But Tesla has been, of course, the biggest disappointment. But I talk about that, sort of tongue in cheek here because we're having a great day. We're up 4.5% in Tesla shares.
Yes, and in the broader picture, though, we're at least moving sideways rather than down. You can see, if you look at our chart here, we never quite were able to crack the 300 level. That was our high point for the year, trending downward from that point here. And, you know, we got a little bit of a steeper downward move recently, culminating with our yearly lows near 138.80. Now we can see that we have broken out of this downward sloping channel in our two blue dashed lines there, and we did have a nice move upward since the earnings event here, but we haven't really made a lot of progress from that point that we started moving sideways here. You can see kind of just a move between about 168 to 199 between our green and red dashed lines respectively. You can see our two moving averages, yellow 21-day, orange 63-day exponential moving averages are largely sideways during the recent weeks that we've seen here. Now, we are making our way above this confluence. The two are right on top of each other, so this was a key point to overcome. That was about where we bottomed out on Friday as well, but getting a bit of a resurgence here as we progress through this trading day here. So hopefully for the bulls, we can hang on to these gains and continue moving to the upside and take out some of these levels that we have highlighted here that we'll get to in a minute.
So now when we look at like the momentum of this recent trend, RSI, what are you watching here? And is there any degree of like momentum showing a turnaround in the overall recent downtrend?
Well, we were bouncing around this 50 midline for much of the past couple months here, which reflects the sideways price movement here. We weren't getting much of a lean for momentum one way or the other. You could have also drawn this downward sloping trend line in red there, starting with this peak that we reached after the earnings event. And you can see that not only are we above the 50 midline once again, we've invalidated that trend line here. So it's looking like perhaps we're making a little bit of progress to the upside, but really, you know, price needs to break out. Price is still very range bound here. We haven't even come close really to breaking through this boundary to the upside. The downside, we've touched on it more times near that 168 level, but you know, at least some potentially encouraging signs for the bulls here with this invalidation.
Okay, good. And I like to hear that. Some potentially optimistic signs here for the bulls that have since been punished on the year, but there's always like these rare areas and pockets of opportunity, it feels like, at least for Tesla. So that's why I do think the chart is actually one of the most interesting. But as far as now these levels of support and resistance here, what are you looking at?
Well, we can see when we put in our volume profile study, this area near 175 or so is very important. We had very heavy trading around this price level here. So the fact that we've moved above it is noteworthy here. So that's kind of another bullish check mark to put on our list here as we try to prepare some kind of example trade here. But as I said before, we've got some pretty clear boundaries here. Starting to the downside, this area near our moving average confluence, near about 177 or so, that's where the bulls would want to hold. If we were to keep moving below that point, you can see we bottomed out a couple times near the 168 level. And beyond that, then, we've got some big gaps to contend with there. So that could be a dicey situation if we start to move lower. To the upside, we would want to take out this high point right here near 199. That was the high point that we reached after our earnings event here. But the 206 level also was pretty interesting to me here because we had a gap and then we bottomed out there a couple times and then topped out near that level. So this is one of those sticky price levels where you could get a energetic reaction if we were to push above this key level near 206.
So now when we look at trading this name, because of course we've looked at the overall technical picture today, you're also doing double duty, you're also our honorary trade master. So now when we look at this example trade here, leaning into the fact that there are signs of optimism for the bulls, no doubt about it. I know when you zoom out, it's more bearish leaning, but walk us through a more optimistic, more bullish leaning example strategy.
Well, you'll remember that I just said the 206 level looked important to me here. The closest strike I could find to that was 205. This goes in $5 increments here. So for an example trade, I thought, what if we're feeling a little bit more bullish about this name? What if we think we can break out of that range and keep moving toward the upside beyond that frequent point of support and resistance in the 206 level? So I thought perhaps a call calendar might make sense here. The July 19th and July 5th long and short options respectively there near the 205 strike, coming in at a 230 net debit here. So there's kind of two ways this can play out. The first would be you could keep the spread as is and hope that we are near that 205 level when we reach the expiration, because that would be our max profit. You can see the peak of this triangular shape here, this kind of pyramid type shape. And we could also close out the trade if that happens. That'd be fine. We could also do it a different way, though. We could close out the short option and just try to keep the long option for unlimited potential upside at a defrayed cost there. So that would be kind of a couple different ways that could play out here. Depends on you, what you have going on as a trader, what you think would be more acceptable for your risk tolerance there.
And we continue to see this name rip higher. I mean, we were just up like 4.5%, now up over 5%. So yeah, pretty nice day for all things considered. Tesla. Now to shift gears though and look at NVIDIA, which NVIDIA, it's been a pretty good 12 months for NVIDIA. I mean, we've seen this name become briefly one of the most valuable company in the world. It's since, I think, been dethroned, but still it's top 5, so not too bad of a position to be in. And a name that continues to gain. I mean, we added over, we've added over 20% to its value just this month alone. So where do we go from here? That is the $1 million question, I think.
Yeah, it's been a really interesting run up in this name. I mean, if you thought this was an exciting time to be in this stock, look at this part, you know, like we
right.
we had a large breakout. We topped out here near 97.40, and then we had a gap up that just has been, astonishingly strong here. We're up 237% off our 52-week lows. You can see also that we've had volume that's been above average as well. Only one spike. By that I mean volume that's at least 50% greater than the 50-day simple moving average. You can see this one standout green bar there, but still notable volume, hefty trading activity here in this name as we continue to rise upward here. So not really any signs of slowing down. We're above all our moving averages. They're all trending upward, and we reached new highs today.
So now when we look at momentum here, I mean, momentum behind the new all-time highs. I know we've pulled back, but hey, actually firming up here on the session, up about 0.3%. But momentum RSI, what are we watching here?
You know, I think a lot of people probably would be feeling like, oh man, this is getting stretched a little bit thin here. This could fall off, but momentum is not reflecting that. We're continuing to make new relative highs along with price. Not only that, we're in the overbought area, which is typically regarded as a sign of strength in a trending market, being above this threshold of 70 on the RSI here. So really not much for the bulls to complain about as we kind of digest this move today here. We did have a very small dip below our trend line there, but it quickly righted the ship. And, we're still on pace to make new closing highs despite the fact that we have a red candle today. We're still up on the day because we did have a gap up.
Yeah, and I mean, frankly, I do think the momentum has been amazing. It's also still, I know it's actually run up a little bit more as far as its valuation goes, but it's still actually relatively fairly valued too, just given its price to earnings multiple. I mean, like it's ridiculous. But as far as then now support resistance levels we watch, because obviously this is the importance of standard deviations, or else where the heck would we possibly go from here, given that we're at price levels we've never been before?
Yeah, it's always kind of a tricky situation when you're making all-time highs. You try to kind of figure where you might find some potential resistance here. It's kind of like you've caught the tiger by the tail. What do you do with it now? Do you hang on and hope it keeps going higher, or do you look for a place to take some profits here? I can't answer that question for you. It's up to you, but I can tell you that our +2 standard deviation channel, which is 2 standard deviations above our blue linear regression line, comes in near 146.50. So that could be an area to start looking for a potential slowdown in this rather extreme move to the upside here. To the downside, we've got our rather steep white trend line here. If we do break below that, the +1 standard deviation channel, this yellow line, comes in right around 123, and that kind of matches up with this consolidation area that we had here after our run up. So that could be an area to look for support. And beyond that, we've far outpaced our moving averages here. We're kind of flying blind almost from a technical sense, so those could be some areas to keep an eye on.
So now when we look at overall trading this name, I do think there is this like renewed interest just given the relatively lower price point following the stock split, of course, a week ago. And I feel like this name has like surpassed into the threshold of like the common person is now like, hey, should I buy NVIDIA stock? And I'm like, hey, I mean, good luck. It's been an interesting trade. But when you have that in mind now, walk us through what you're thinking here for an example trade, given the fact that, I mean, this has been, all things considered, one unstoppable name.
Sure, and that 123 level that I mentioned, our +1 standard deviation channel, which matches up with that consolidation area, that was the thinking behind this next example trade that we put together. We came in -1 July 19th, 123, 118, short put vertical at a 140 credit here. So max profit would be $140, max loss would be $360, about 1 to 2.5 in terms of a reward versus risk here. So we can see that because that was a supportive area on the chart potentially, we're basically banking on price staying above that level and hanging on to that level here. So it's kind of a softer target when you're selling a spread rather than buying one. We just needed to stay above that break even, which is about 7.5% to the downside. So we've got a decent size cushion on this trade here. We've got about 30 days for it to play out here. So, you know, this could be a way to take advantage of these elevated prices if you think that there's more bullishness on the horizon for this name, despite its lengthy run up.
Yeah, and I would say, despite its lengthy run up, it actually continues to surprise us to the upside. And that has frankly been the story of our maybe 2024 thus far. But that'll do it for our Chartmaster segment. Now back to, of course, Caroline waiting by at the NYSE.
Thanks, Jenny, and thanks, Rick, the Chartmaster and the Trade Master. All right, we're going to take a quick break, but coming up next, it's time for FOMO. We'll be talking Best Buy and Keurig Dr. Pepper. Stay tuned. We'll be right back.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all of your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Welcome back to Next Gen Investing. It's time for FOMO. So we are looking at a couple of upgrades in the consumer staples and discretionary space. Two very different names, but still seeing some optimism. And joining me to discuss both of these is Caroline Woods, of course, joining us from the NYSE today. And we're looking at Best Buy and Keurig Keurig Dr. Pepper, which frankly have nothing in common other than the fact that they're both seeing this recent really, like, I would say, like, run up in analyst expectations to, I mean, like, nothing but optimistic. So we'll start off with maybe Best Buy here, as this is the discretionary of the two. And it has seen, this is not the first upgrade I've seen as of late on all this, like, revived hope on AI, it seems like.
Yeah, I will say analysts still largely in the hold camp for Best Buy, but UBS is turning bullish on shares, thinks they can rally another 20% from here. Upgraded shares of Best Buy to buy from neutral with a price target of $106 a share. That's up from $85 a share. As you can see here, Best Buy currently trading up about 4%, more than 4% right now at $90.97. The UBS analyst says there's compelling risk reward at these levels and actually sees several drivers of potential upside over the next 18 months. Some of those drivers, improvement in household trends, a pending electronics replacement cycle, higher levels of product innovation, which of course is the AI component, the artificial intelligence component really of this bullishness, and then growing sales of new categories like e-bikes and furniture and so on. So this analyst thinks these tailwinds can come together to drive a nice recovery in Best Buy sales in the back half of 2024 and into 2025, saying it should be evident that Best Buy's market share tends to flourish at the earlier stages of a product cycle, and said the restructuring effort should lead to significant earnings torque as comps improve. So as I mentioned, the majority of analysts still in the neutral camp, still on the sidelines for Best Buy. 61% of analysts are on the sidelines. But then, so there's 28 analysts that cover the stock. 17 are in the hold camp, 10 are in the buy camp. There's only one sell, so there's only one really bearish call now that UBS upgraded. The median price target, though, is $88 a share, and that's actually below where Best Buy is trading right now. As I said, it's up more than 4% today, trading just around $91 a share. So should be interesting to see if other analysts kind of play catch up with these price targets, or maybe we'll see more bullish calls as we progress. But Best Buy currently up about 16% year to date.
Yeah, and I think it's frankly amazing the way that we don't see more analysts coming in, because I think it was an optimistic note I read it a few weeks ago. It was like one single note that I'm basing my more bullish analyst conviction on, but it was still like the overall like cycle replacement we'll start to see come this fall with like the iPhones, obviously now including AI, and various like computers like we see from Dell also now including AI. That was the thinking, and I can understand that. I guess I'm surprised that it's not very much like felt amongst all. But obviously, as we know, these analysts aren't always like super forward looking. A lot of times it can be somewhat reactionary. But our next name today, actually here, moving on, it's a completely different news, but moving on the fact that an analyst does feel a bit more optimistic. Keurig Dr. Pepper, which I was just reading, did surpass Pepsi as the U.S.'s now second most popular like cola type drink. And I would say hello. I mean, that has been at least the case in my own household for quite some time, but it seems like the U.S. is getting on board here, Caroline.
So, Jenny, you're not crazy in terms of that bullish note. Just going back to Best Buy for just a second, I think we actually talked about it in the FOMO section.
Okay, yes.
Maybe a couple weeks ago, it was Citi that double upgraded Best Buy.
I'm having like deja vu.
To a buy rating with a $100 price target. So, yes, as you were talking about that, I was like, wait a minute, you didn't read that. I think I told you that too. So, yes, going back to Keurig Dr. Pepper, another winner today. Shares up about 1.6% right now. Got an upgrade over at Truist, actually. Not an all-out bullish call, but no longer bearish. Upgraded Keurig Dr. Pepper to hold from sell with a price target of $34 a share. That's up from $27. So as I said, no longer bullish, or I'm no longer bearish, but the price target's basically in line with where it's currently trading. So it doesn't from here as well. Truist said it's previously expressed concerns, including over-optimistic expectations for a rebound in the coffee segment. Those have played out and are reflected in the current valuation, and also points out that KDP shares have underperformed the S&P 500 and XLP since it downgraded in November of 2022. So this is an upgrade, but doesn't necessarily imply that Keurig Dr. Pepper is going to continue its run higher. It's up about 1.6% today. It's only up about 4% year to date. So I guess this is the staples of the two. We were talking about Best Buy being the consumer discretionary. some might argue maybe it's not necessarily a staple, but for all intents and purposes, let's call it that. And I should note that consumer discretionary and consumer staples, both two of the best performing sectors on the S&P 500 today, right behind information technology, kind of neck and neck for the #2 spot. But Keurig Dr. Pepper and Best Buy both contributing to today's rally.
And Keurig Dr. Pepper, I have to say, yes, yeah, whatever you classify it as, to me, it trades so much like a staple because, like, look at the last 5 years. It's like we've pretty much gone a lot of nowhere. And I know that we've seen outperformance on the year, but when you zoom out, these names just have not been, I mean, they're stable. They're performing exactly in the realm of volatility in which I think that the street expects from them. But also it does feel like inflation and some of these higher prices that a lot of these companies have had to basically eat is still like dampening the overall growth story. And as we know, inflation, while it's cooling, it's not cooling to the extent in which I think that a lot of like the overall community would make you think, because I still look at prices of all of the various sodas and I'm like, okay, so I know inflation is coming down, but that doesn't exactly seem like it's the case when you look at some of these consumer staple products.
Yeah, it seems like things aren't getting more expensive, but yeah, we certainly aren't seeing price drops. And I think that's the nature of the beast really with inflation, that maybe, you know, eventually rents and that type of thing. But when products get more expensive, they usually don't come down in price. Although, except for eggs, remember when we were paying like $9 for a dozen of eggs or something crazy like that? Just in terms of Keurig Dr. Pepper, I do want to say I totally agree with you. It is a staple. It trades like a staple. But in terms of the analyst breakdown for Dr. Pepper, I had mentioned that according to this Truist price target, there's not a lot of upside potential. But if you take a look at the median is $37.01. So there is a little bit of upside compared to the median price target, although analysts very much split on this name. No sell ratings, but there are 10 holds and 10 buys, so pretty split down the middle there. But Jenny, I just want you to clarify, did you say you like Dr. Pepper more than Diet Coke?
No. So I'm team like Diet Coke #1, Diet Dr. Pepper #2, but Diet Pepsi is where we really fall off. I do not like Pepsi.
Okay. Right, me too. Okay, just clarifying there.
No. Diet Coke is still king. That would be a very bold claim. You're absolutely right to say this is more of like, I think, like the once now and then soda, where I'm a Diet Coke enthusiast, and unfortunately so. But we'll leave it there for our overall consumer-facing combo as far as like the analyst community is concerned. But now I'd like to welcome in Kevin Green, senior markets correspondent for the network, to talk some Coinbase. We're completely shifting gears away from the consumer stable names, looking at some of the most instability, I mean, we see in the market, which is all things crypto. But Coinbase with some price target hikes today. Kevin, walk us through the story.
Yeah, we're still seeing the shares down about 0.5% in the session here, but we do have Bank of America increasing their price target on the shares to $259. That's up from $217. Now, they continue to have their neutral rating on the shares, but they kind of highlighted the fact that they have seen some positive traction when it comes to a revenue volume, transaction-based revenue volume, if you will. So they do believe that that's going to be a tailwind for not only the top line, but the bottom line. And then also kind of noting this State of the Crypto Summit in 2024, this convention where they did have the CEO, Brian Armstrong, actually talking and discussing the uses for blockchain, cryptocurrency in investing portfolios, as well as the regulatory changing environment. So a lot of optimism when it comes to the crypto space as a whole. And Coinbase has been a beneficiary of these new ETFs and products that have been approved here because of the positive flows, the increase in transaction volumes, which once again has been a benefit for them. And let's see if the stock's going to be able to maintain this positive price action. It has cooled off a little bit, but overall it's been in a nice little uptrend. And if we continue to see some new products coming down the pipeline, especially when you're looking at Ether, that can also be another tailwind for them for not only their top line, but also their bottom line growth.
Kevin, what else should we be, in terms of Taiwan Semiconductor, I know that you're also taking a look at that stock. What should we be considering for that one in terms of the move we're seeing there?
Yeah, we're seeing the shares up about 2.5%. Now, there's been a lot of positive thoughts around Taiwan Semi over the last couple of quarters here, obviously because of the AI theme, but not only just the GPUs that NVIDIA is making, but also some of the other product offerings, especially when you're looking at Intel. Now, Intel did, according to the DigiTimes, did put in an order for with Taiwan Semi in order to produce these 3 nanometer chips for the upcoming notebook processor series that they're going to be rolling out here. And that's going to be also around the AI front here. Now, wafer production has already started here, and they do believe that this is going to be optimistic when it comes to other products in this space. The other thing that's going to be a tailwind for Taiwan Semi too is the new products that are being offered. They're going to be able to adjust the contract terms and able to in order to be able to provide better margins. So when we're talking about the GPUs and NVIDIA, they are seeing the volumes going up, but they're not really making that much money. They may make around 9.5% to 10% margins on those GPUs, whereas new products that are going to be put to market, they could probably charge a little bit more of a premium, which once again will be a tailwind for them. So a lot of optimism when it comes to the hardware space. Taiwan Semi is really, there's only about 2 or 3 major fabs, and Taiwan Semi is getting the bulk of the AI orders right now.
Yeah, and Taiwan Semi is so important to the supply chain. I feel like this is such an under-discussed company, but I feel like we've been giving it the proper amount of love recently. And hey, the street also actually giving it love today, up 2.5%. So great insight as always, Kevin Green, senior markets correspondent for the network. But now coming up next, time to talk Broadcom. We're looking at another name at all-time highs here, Caroline. So pretty decent day for Broadcom here, continuing its really strong week from last week when the shares gained over 26%. Renita Young will have more on all of the updated analyst coverage for us coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for a look at Broadcom with Renita Young, senior markets correspondent here on the network. So Renita, Jenny pointed out Broadcom hitting a new all-time high today. Shares up 5.5%, and analysts getting more bullish. Fill us in.
Stock split price target hikes happening today. I talked about one of them earlier today, and a flurry of them have come since then. The first one I'll talk about now is Citibank, who raised its price target to $17.50 from $1,560, keeping it at a buy rating right now. And of course, the most important things are AI. That's the primary cause for a lot of this. The company or the analysts expect the continued upside to consensus estimates driven particularly by AI, and then the synergies from the VMware acquisition, which has proven to be a very good acquisition for the company. Earlier, D.A. Davidson raised its price target to $18.83 from $14.62, maintaining it at a buy rating. Deutsche Bank raised its price target to $1,900 from 1,500, keeping it at a buy rating. Noted that solid second quarter beat, the outperformance in AI, and the steady integration of VMware yet again. And then I'll give you one more price target hike. It came from Baird, which raised its price target to $1,950 from $1,500, keeping it at an outperform rating. Noted that Broadcom's networking revenue outlook was raised to a 40% increase year over year. That's up from a 35% increase that it previously had. And then they're expecting AI revenue to exceed $11 billion in this next go round. So nothing but positive news coming out of the street on Broadcom.
Yeah, and I have to say, Renita, I do think that this was really like the AI trade of last week. This was the best performer in the S&P 500. It gained 26% roughly on the week, and now looking at the overall analyst coverage, there's 38 buys, so there's 38 analysts, there's 33 buys, there's 5 holds, there's not a single bear. Yeah. So fair to say that not only like today's momentum is to the upside, but it's been pretty much, it seems like the street has liked the same for a while. I mean, the street high price target is $2,100 a share. So even more optimistic than I believe $1,950 was one of the highest you said today.
Yes, that was the highest that I saw today. That was changed. And also, we can't forget that this stock had a blowout earnings report. What earnings were up, or revenue was up more than 40%. And the 10-for-1 stock split will happen next month. It's going to happen July 12th after market closes, and then it'll trade on a split adjusted basis on July 15th before the market opens.
Yeah, and this has been a fun one because I just appreciate some of like the new AI, like the ancillary winners of AI coming to more center stage, because I just think like nothing but optimism as far as like the street's concerned. I see this is like a major beneficiary. Caroline and I looked at Micron earlier, another name at all-time highs. So hey, new all-time highs. We pulled back about 1% from that session high, but still not a bad way to start the week, of course, for this name here. It was Broadcom is up now about 5.5%. From, like on the session here. Well, we will leave it there. Great insight as always from Renita Young, senior markets correspondent. Coming up next, though, it's time to talk AMC, and AMC having a pretty phenomenal weekend. Its best actually so far in 2024. We'll talk about Inside Out 2 and some of these titles that are fun, that are driving some of this optimism, coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors, and everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Next Gen Investing. It's time for Under 30, and today we are talking AMC, which is a Next Gen favorite, and maybe as far as I'm concerned, because I'm a frequent moviegoer. But here to tell us more on some of the optimism we're seeing with AMC shares, I'd like to welcome in George Tillis, Senior Markets Correspondent, and of course, joining me is Caroline Woods, live from the NYSE. So, George, tell us everything with AMC, because it seems like there's always a story when it comes to this name. There's always volatility, actually. I mean, unfortunately, right now, moving to the downside, but some positive news I was reading from the weekend.
Yeah, I mean, ideally, if you look at the news headlines, they are positive. Last week, apparently, the company actually reported a record week for attendance and sales, and that's to be expected. I mean, it's getting hot outside, so I think people are going into to the movies for entertainment, but also to get away from the heat. And so, with inflation higher, you could expect sales to increase year over year just from an endogenous standpoint. But at the same time, looking at the share price action as a result of this news, it's still to the downside because, ideally speaking, if you consider, AMC's position in the realm of meme stocks, it was a meme darling, going back to 2021. But if you look at the last year, it's just been in a terrible downtrend because of the fact of the company taking advantage of shareholders who are buying the stock, and they're issuing tremendous amounts of shares to essentially recapitalize their business and pay down debt. So, if you look at the last year around this time, and this is where the conundrum lies, because, if revenues are higher last year, the stock is down about 85%, because last year around the same time this year, the stock was trading around $42 to $43. So since then, there's just been a tremendous amount of share issuances by the company. They're utilizing the cash to pay down debt, but structurally still, irrespective of, some record-breaking revenues, at least for the week of June they just reported, the company's still not making money. And that's been a challenge. Even going back 5 years, the company was losing money. And there's still sort of this secular trend, I suggest, going on with movie going, sort of increasing at a decelerating pace, and that's because of the availability of media and content from a streaming standpoint.
I haven't been to the movie theater since last summer when Barbie came out, but I think Inside Out 2 might actually bring me back to the movie theater because I loved the first one. But I just want to bring up, anytime there's any AMC news, I always, of course, look to Adam Aron on X because he's pretty, the CEO, because he's pretty vocal on there. He was saying people have been predicting the demise of movie theaters seemingly forever. Wrong in my view. But he's pointing out that their largest issue right now is that Hollywood has been releasing fewer movies. Of course, the writer and actor strike having a big impact on that, but saying that they're optimistic as they look to the kind of the slate of movies for 2025 and 2026. What would you say, is the biggest headwind for this company in addition to that, George? Because as you mentioned, shares are down 90% over the past 1 year, down about 20% year to date. Seems like there's probably more, and as you said, not profitable. So it seems like there's more than that issue at hand.
So there is. I mean, there's a lot of things going on here, but I will say this: I agree. There's obviously a secular shift in how people are viewing their media, and ideally speaking, movies aren't going away. The challenge for AMC is they've got a balance sheet with a blistering amount of debt. They've got $4.5 billion in debt. Market cap right now is around $1.4 billion. They have $600 million in cash.
Wow, that's all I can say is wow, wow, wow. All right, well, we were correct on the 6 4.5 to 6% type of day on Tesla. Very nice continuation. There is demand for this name today. All right, guys, let's get right to it. It's 2 o'clock. Let's end the day off good, guys. I'm not sure if there's anybody here or not. A couple of the stuff died on me. Sorry, I thought these charts were already. Oh my God, fucking Coinbase took off there of 234. Wow, you regained the 20-day right there. Very nice extension off of that level. We said 245 we were looking for. That's your area, 245. Let's see what the afternoon brings, guys and girls. S&P's rolling. I mean, listen. Oh my gosh. Listen. Anytime you see a consolidation, 1, 2, 3, 4 days, expect the upside move if it's not pulling back. I mean, look at that. I mean, it doesn't. This is what the market's been doing. 1, 2, 3, bang. 1, 2, 3, bang. Just, you know what I'm saying? Just get in tune with it. Get in tune with the markets. Unbelievable. I knew I should have went with the SPY. I had to go. I had a couple things I had to do. Unfortunately, I did not take part in this. All right, so one thing I do see is 545 or 544. You did not retest that level, nor did you test it on the Q. So I will be watching 481 on the Qs and 544 on the SPY. 544 on the SPY, 544 SPY. I think we do get that test. 481 on the Qs. All right, guys, give me 1 second and let's get it going. And did anybody get the GameStop short? That's all I want to know. Man, I'm telling you, bro. Today was an easy day to make a lot of money. A lot. You did not have to work hard for it at all. You just had to take the position, stay in it, take your profits as you get to those levels. So Tesla, obviously, you would look for your rejection up here if you even get it. Look for that area to be support, which looks like it's already pretty much turned it into support right there at 184.50-ish. You consolidated, bang. Now there's your extension. 1, 2. Huge move on Tesla today. Very nice.
Empowering every investor and trader
every market day. I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab
Bitcoin,
Network.
I'm going to say this right now. Bitcoin gets going. You have a really nice opportunity here to take this thing up to 68. If you look here on the daily chart, nice consolidation, nice hold of that 50-day. We need buyers to extend it. That's the thing, right? We need something like this. We need to get that thing up out of there, and you need to get above 68. But that's still a nice little move here if we can. Support, 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 support. You know, I would look for that 68 level. 68 to, yes, that low 68. Once you get away from here, you have a really nice opportunity to extend up and out. Let's see what the afternoon is. I mean, the overall markets are up. Overall markets are up. I mean, easy day. Easy day. All right, just because you think the markets have to pull back, you got to understand there's a ton of money to work, and the trend has not changed. The trend has not changed. 1, 2, 3, 4, bang. 1, 2, 3, 4, bang. All right, consolidation. You just rally, consolidate, 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 bang. Consolidate, consolidate, bang. We were looking for that today. All right, we were looking for it. We said you needed to turn, what was the level? Shit, I forget what the level. It was like, hold on, because I had to reload everything, guys. Everything died on me, so just give me a second. I don't have the chat up. I don't have anything up right yet. Just give me just a minute. But I pointed this level out on the SPY today earlier to say, yo, if you start rejecting it. It was right here. This level right here. I think it was like 543. 543? Yes, it was like 543. 542? I could have swore it was... Yeah, it was 542. Yeah, 542 on the SPY. And you really never got off of that. And that was it. I know you had people short right in that area. And, you know, volume couldn't take a hold. Right there. Then you reclaimed it along with VWAP. Bang. That was the start. Alright. If you guys can picture that. When you see these things, right, it comes down and, you know, you start to reclaim VWAP at the previous pivot high a day or high a day. And that you're usually more than likely going to turn it into support. Especially when the trend is your friend. Alright. I mean, it's just... really nice. Again, you know, the call of the day for us today was, you know, watching Tesla and GameStop. We wanted to be long Tesla, you know, at least to 185. That was our call. You guys can go back to the live stream and, you know, go back earlier this morning and watch the watch list. And we said, hey, there's going to be a ton of people. In my opinion, I think there's going to be a lot of people that are seeing this morning low, or you know, the pre-market get sold off, reject the 20-day, we start to turn it back around. Oh, cool, 100-day, 20-day, reject, bang, volume, right? It never does it. Then you start to reclaim high a day. Oh, 180 is the major level. Like, that's too easy. It's too easy. All right, it's just like, I don't know how to, you know what I mean? Because really what's going on here is just a pullback to the 100-day, and those buyers and anybody that got short near that level, it's a wrap. That's it. Bang. That's a 3-bar reversal. This is a technical setup right there with that 3-bar reversal right there. 1, 2 down, up candle, takes them all out. Let's see if it can close above that second one. It doesn't really need to, in my opinion. I still consider that a 3-bar reversal. You can use them intraday too. 5-minute, 3-minute charts. You see 2 down candles and 1 up candle that takes them out. The trend has changed. That is a signal of a trend reversal. Looking for the 200-day now. 200 to 205, maybe even 210. All right, depending on how quickly we can get up there. I am still wanting to be long Tesla. I want to see what the volume brings later on. I just don't want to pay too much in premium and not get rewarded for my risk. All right, we are risk managers at the end of the day. Right there, 209.89, call it 210. That's what I'm looking for. All right, this pivot high up here, that previous gap fill support. You have a lot of gaps. Look at this gap. You have a gap there, gap there. You have a gap here. You still have a gap way up here that we never hit. All right, there's even more. Just so you guys know, we still have gaps. There's a ton of gaps still left to be filled. All right. I can take you back to a gap way up here. Look at this gap. Never been filled. Right there. All right. So expect in due time. Full 100. Full 100. Anyway. I hope you guys are doing well. Give me 1 second. I got to get everything up and running. Again, thank you guys for joining us. If you could, hit the like button, subscribe. Again, this might be the last live stream that I do on here. Outside of maybe like a Thursday, Monday, like one stream during the week. And then outside of that, you guys will have to join the Discord or whatever, just because, you know, when things ain't working, you got to switch it up and change it. You know, I tried to build something here. It didn't work. You know, it's probably, you know, it comes down, it's my fault. I don't put out what people want to see, but hey, I'm here to make money. That's all it is. I've been doing this for years. I will continue to do it. It's not that it's not difficult. It's just not that it's not impossible to consistently pull money out of the markets.
The Fed's created the situation that we're in right now with all the quantitative easing, lowering rates as low as they did, and now everyone's kind of shocked when all these loans are coming due and the rates are significantly higher. And so the last thing that the Feds can do, if they raise rates, everyone keeps talking about a hard landing. It's going to be a extremely hard landing if they raise rates. So the only thing that they can really do is lower rates to have that soft landing that they've been talking about. But it's going to be short-lived. You know, as soon as they do that, what's going to happen is inflation is going to come back. So I think really because it's a political football right now, that's what they're looking at. You know, you hate to say it, but that's kind of a reality. And we just continue to kick that can down the road. But eventually we're going to have to face it.
Right. So, you know, when you started that sentence, you were talking that the Fed should not cut rates. In fact, they need to raise rates, but they really shouldn't do that either because you had concerns about that. So right. The Fed should probably just stand pat, is what you're saying. Till when? Till the new year?
You know, till after the election going into 2025. I mean, if they raise rates, it's going to be turmoil. Right. I mean, already the service on the debt is the second largest line item behind Social Security. It's going to create a strain on the banking system, you know, all the way across the board if they raise rates. If they lower rates, inflation is going to come roaring back. So really, holding steadfast is really the only option that they should be doing. right now, but they're probably going to lower rates. Probably only one time is all I see. September, maybe out in November. But yeah, that's all I see for right now. It could change, but that's all we're seeing.
Right, right. So at this point now, for someone's portfolio, how should they plan the portfolio? What kind of things should be in the portfolio?
No, it should be really broad and diverse. I mean, everything is based on someone's risk. Like for us, it depends on where they're at in their economic life cycle. How much risk can they afford to take? And if they already have cash on hand, why not just do very safe short-term treasuries, where you're getting 4.5% or more with absolutely no risk, and wait till we see what shakes out and then disperse that cash a little bit later on, or unless we find some really good buys. There are some things out there that I like. I still really like Lowe's. I like industrials. But, again, we're very, very cautious with redeploying capital at this point.
Right, understood. What about abroad? Do you look abroad sometimes when you're investing? And if so, what do you do there?
You know what? We do. I still like certain parts of Asia, Europe, not so much. I mean, when we look at the broader economic picture globally, we're seeing struggles all around the globe, just like we're seeing here. We saw the ECB lower rates. We saw Canada lower rates. A lot of central banks are already doing the lowering rates and already starting down the easing path as well. So, again, there are certain areas like India that I do like, but for the most part, we're just being very, very cautious.
Yeah, I think Bank of England is coming up too. Ed Siddell, thank you, EGSI Financial. Great to see you. Thanks. Coming up, Options Corner. Rick Ducat joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news of Alibaba, Invesco, QQQ ETF, and Kohl's. We'll be right back.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner. We analyze unusual options activity and trades that we've seen through the day. We bring in the pros to do this. Rick Ducat's with us, chartered market technician, and you are watching Alibaba. In fact, you saw a bullish trade on Baba. Tell us more about it.
Yeah, Nicole, some very interesting trades today. Not a ton of news activity associated with any of these names, but all of them are very large dollar amount trades. So the size, I think, is what's notable in these three trades today. So starting with Alibaba, the trade is plus 10,000 September 20th, 77.5 strike calls at a 465 debit here. So this trade came in at about $4.6 million. That's the total risk as well when you're buying a call. The max loss potential is the debit paid here. So, this one is about 100 days out here. And if we were to examine the break even at expiration here, that would come in at 82.15, which would be about 10% to the upside here. So, obviously the Chinese stock market has been a little bit of a worry point lately for a lot of traders here, but we can see that someone, at least one person, is banking on some big gains here. Max profit unlimited, as it is with all long calls here. And as I said, once again, max potential loss of about $4.6 million here.
Yeah, and I was just looking, like it hasn't really traded till it was mid-May that it was above $90. So these calls are $77.50. Look, they're looking for a move here to the upside, maybe something like the AI. They're claiming Alibaba is claiming its new AI model beats Meta's Llama 3. Is that a promising major advancement? Retail investors in China take note. So there seems to be a lot of positive comments about that. But to your point, we see a big trade like that out about 100 days. So we'll watch for that. What about the triple Qs? Invesco's triple Q ETF is something you're watching. A bearish trade stood out to you. Why?
Yeah, well, we're making all-time highs today on the Qs here. And when we look at this trade, it's kind of the reverse situation of our previous trade. When you trade a longer-term option, when you're doing calls, for example, it's kind of like a stock replacement strategy. You're getting a similar amount of exposure for a much less upfront cost here when you buy those calls. The trade-off is that options are a wasting asset. You might, potentially lose out, but from the theta and the time decay here. And this is a similar situation here. This person was buying puts plus 3,500 June 20th, 2025 calendar year, 430 strike puts at a $14.16 debit here. So this one is more than a year out, so even longer here, banking on a hefty decline in this tech-heavy index here. So, even though we're at these all-time highs, someone is perhaps thinking that, maybe there's some storm clouds on the horizon during the next year to come here. So, bearish trade, break even at expiration would be $415.84, about 14.5% to the downside here. Max profit would be $145 million, but that would be if the ETF were to go to zero here. So that's not really realistic here, but that's just the way it would be set up there. Max loss would be almost $5 million, $4.9 million here. So that would be, once again, the debit paid on these long options here. So another interesting situation here, a long-term play, but unfortunately for us who are feeling more bullish here, banking on a bit more of a decline.
Yeah, it's interesting. I wonder if they're waiting on more from France. I mean, you got a lot of negative sentiment from France, for example, which could impact stocks. We have retail sales coming up. That could be something that could move stocks. Maybe it's just sort of an exhaustion or a frothy idea that the triple Qs have been hitting, as you noted, new highs today. So thank you for bringing that to our attention. And we see that right now trading around those levels. And last but not least, Coles. You have a bearish trade that caught your eye, right? Tell us about that.
Yeah, this one is a little bit of a different beast from our other two trades. Although, once again,
so I wanted to let you guys know that. Let me turn this down real quick. All right. So Russia has banned trading from trading the U.S. and euro, dollar, not Japan, Australia, and whatnot. So I'm actually curious. You guys can see that yields are pulling back, but I think US02Y. Why is this not working? Oh, I gotta click it. So you can see the 2-year today actually has rallied. The 2-year has actually rallied today. right? Ten-year rally pulling back. Because I did see TLT pull back, and that's why I'm. But look, this is weird because you rarely see the dollar pull back when yields bounce. Usually they bounce together, right? Usually they're going up together. You know, yields kind of make the dollar move, and the dollar kind of makes the yield move. I mean, they usually, from time to time, they coincide moving with one another. So I wonder how much of this Ukraine, or I should say not Ukraine, but the U.S., the sanctions that were given last week with, you know, pretty much, you know, purging Russia of being able to trade the euro and U.S. dollar on their markets. Their markets actually closed last week. They were shut down. Not because of some run on the banks, this, that, and the third, but because of the sanctions. So I'm really wondering if this sell-off has to do with that, and they're selling off U.S. dollar reserves. So I don't know what type of impact. So you guys keep hearing them talk about this French election. I don't think it's the French election. It is the fact that they have sanctioned Russia into not trading the U.S. and euro dollar. And the Moscow exchange was closed last week. All right, so I really think that is what's going on here. You guys can always Google it. But you can see, like today, yields are up, but the dollar is pulling back. Dixie is pulling back. You know, it rallied a little bit this morning, 16, 17. You can see it consolidated. Now we're falling out of bed. And you can see the market going higher off of that. But you have yields bouncing, which is so strange. They bounced this morning. Yeah, you're getting a small pullback, but this is still, you know, technically, this is still bullish, right? That's still bullish because you're just pulling it back to this support zone right there to potentially bounce. So keep an eye on that. Just know what's going on. I know they're talking about this French presidency. I don't think that matters as much as the Russia, you know, sanctions with trading the U.S. dollar.
Available anytime, anywhere, on any device for
that's
free.
Liquidity.
And available on all your favorite streaming services.
So.
Futures
And
with
if
Ben
they have to
Lichtenstein
dump them,
every
if they
weekday,
own them and can no longer trade them, they're going to sell them
Network.
off. So that's why you can see the dollar pullback and that nice bounce today. So keep that in mind. Just be aware that that's going on.
Number one broker
and
here
be smart
for the
enough when you hear, oh, because of the French presidency, blah, blah.
No problem.
I think you want to look to the sanctions. I do. I think that's really
adjust
where
the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take
the presidency again. In my opinion, doesn't matter as much as the blockage of trading the euro, U.S. dollar, because they have sold off a bunch of the treasury stuff, but so that means that they could potentially be selling them, and that's why yields could be going higher because they're dumping them. They don't want them. They don't want to buy them. They want to sell them. So there's not a demand for it. So yields will go up until there is a demand, and that is creating less of a demand for yields. So that could potentially help yields stay a bit higher. Well, we'll see. We'll see. All right, GameStop. Man, I wish I was able to be here when this thing traded because again, guys, I had to run out. I didn't expect it. So, you know, I wanted to have a shareholder meeting and we could have attacked this thing. And I told you guys I wasn't looking at anything until, or I should say, I wasn't looking to go long GameStop until you saw this 28 become support and rally to $30, right? Rally up to $30 with high volume. That way, okay, we get an inclination that chances are 30 is going to break and hold, and then we get above 33, and then it's on the 40. So I came in this morning saying, hey, the indicators are saying one thing, but the chart's saying another. The chart is bearish, but the indicators are kind of bullish. So I did not have a conviction. I actually had it, like, if I had to lean one way, I was leaning more bullish than bearish, but still undecided. So, and I think that's why they kept things open like it was, because of that meeting. We didn't know really what, I guess the market didn't know really what it was going to receive or what was going to happen. So it left that long option there. At least that's how I feel like, GameStop was being traded, as in it not too bullish and not too bearish. Actually, it was trading bullishly. It was so oversold that, you had MACD cross. I don't know. It's been a day. It was a very busy weekend. I hope all of you guys had a great weekend. I did a lot of work this weekend. So I'm still a little tired from that. It was really hard getting up this morning. So let's see what happens here at the end of the day. So you guys know Coinbase. And look at the ATM machine. Starbucks. This has been an ATM machine ever since earnings. Get long pullbacks. This is why I say people dwell so much on insider trading from government officials. Bro, buy good companies on pullbacks. Go long them and you'll have no problem. We have caught each and every single breakout. Like, it's not that serious. Just NVIDIA. What did Nancy Pelosi do? Apple, NVIDIA, long pullbacks. They're good companies. At least they're not going anywhere anytime soon. So we caught that. We caught that, we caught that, and we caught this. And today, I wasn't watching it. I didn't catch this, but you still have room. If you close above 81.80, look for that test of the highs up there at $83. What else do we have? All right, Oracle, nice breakout. ORCL, nice breakout there. FSLR. This thing ended up having a failed breakout. Now, what I would do is I would look for this previous, let's see here. Let's go to a daily chart. I'm trying to give you guys some trade ideas to have on both sides of the trade. I want to look at AMD and stuff real quick, semiconductors, because they're finally having, like, a mild day. They're getting ready. Some of them are getting ready to go green. This one's a little funky, but I would keep an eye on it. I would just keep your eye on this, because what I'm getting at is if you start breaking this level down here at, like, I don't know, I would have to say 250 to like we'll put a stop. We'll make it like $1 wide from here. What is that? That's 249.80 to 253.75, so 254. That area right there, right? If we get down in here and we start breaking this, because now you broke the 20 day, you're retesting it. You could get a nice little trade break down through here, boom, and then you get this 250 to 220, huge day up, and then get that 50-day right up in there. Once you start pulling back is when that starts yanking up. But we'll see. I'm keeping it on watch because it is potentially putting in a nice pattern here. We've been watching these, so nothing's really changed here with us in our watch list. Coinbase, Tesla was our top trade idea long early this morning. Pre-market, we were talking about going long. The main level we were watching was 182.50 to 183. That's your previous double top major resistance level there. And we told you guys that, don't fall for the 180 rejection. Don't fall for it. It's way too easy. If we break above that, you absolutely have nothing stopping you once you get above 180. That whole area, and look at it. It's exactly what it did. Now it's pulling back to 186. See if you find support here. Watch tomorrow if it's able to hold. This type of move, it may... So, I don't know if you're going to get a day 2 continuation on Tesla. You could. I think it's possible. It's just where does that move? Does it like gap up in the morning and then we wake up tomorrow and we're up at 190 and then you get the pullback off of 190 and wait for that, like, I would say 186, but you guys got to be a little bit better than that and say, yeah, they're probably going to fake some people out here with this 186 level. We'll probably have to take the long down there at like 184.75, 184 on those wicks. It'll shake some people out. or potentially could. I'm not saying it's going to. So tomorrow, we'll see here. You know, you did solidify this area. It was a nice consolidation at this range. And, you know, I do want to try to take this to 200, 210. Again, once Tesla picks a direction, it goes, guys. And it goes for days and days and days. But we need volume. Like, you know, we still have a lot of sell volume here. This is an indecision type of day. You know, just looking at it on the daily chart, this is a gap above the 100-day pullback. We have showed you guys that the 100-day moving average is the level that it coincides with, where you can buy or sell according to it, right? It was an area of resistance. It has now turned it back into support. Look at this blue line here, man. It's just clear as day, right? Right here. Just some areas. Bang, support, resistance, right? Resistance, support, your gap below it, hit it again, right? Support, 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 right? Resistance. I can take you in there to show you, right? Look at this. Bang, 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 right? It just loves to get above it, pull back, boom, trade. You sell when you get above that gap. The 50-day, not so much. As much as, you know, you have a little bit here, but if you really look at this chart, you'll say, damn, she really fucked with that 100-day. She really messed with it. So, all right. So my plan for Tesla, we got to get above 190. We got to get above it and claim it. All right. We got to claim it. She's done a lot. Like today is going to make it hard to extend, but I think we can. Unless we have some type of news that takes us, you know, that makes that not possible. So I will go after pullbacks, and I'm going to try to aim for, like, I'm not going to say 210, like 209.80 to 210, but it would be nice. I just think the 200-day is going to be pulling back by the time we get there, and it might be like 205, which I'll show you guys. My charts keep messing up on me. Sorry that the mouse is right next to the mic. All right, so this is pretty clear, right? We still have a ton of gaps above us. So I want to look for this 200-day, that teal line right there, that teal box. Start pushing down in here, and we meet at like 200, 205 area, and see if we can't really try to get something going for Tesla. We could try the 200s as a lotto to like see if we come in with a gap up, but I don't want to play with my money like that. We could buy, like, see, here's why. Because if I buy one, what does one do for me? You know what I'm saying? So maybe do we go out 2 weeks? Let's go look at the 2-week 200 calls. But what are the deltas on those? See, those deltas, it's not paying you. You're actually losing money on those. Let's look at it for this week. Are you better off this week? You might be. No, not at all. Oh, man, you might be starting to pull back. I don't like that. The options chain is still telling us 200 might not be in the cards just yet, but there was some news with China on Tesla today. Was the shareholder meeting Thursday or Friday? Or when? It might have been last Wednesday. Let's look at GameStop. Let's see what we can't get done here in the afternoon. I'm keeping Tesla on my watch, though. You guys, if I get into a swing trade, I will definitely let you know. I just think we should have done it. You should have, you know, if you guys were here earlier, it would have been nice to do it earlier. All right, so we're getting our pullback. All right, pullbacks. This was the best. Like I will say this, guys. Go back if you ever want to see the most beautiful setup, picture perfect, A++, long setup. Copy this picture, throw it on your desk, your monitor, on your wall. The first 2.5 hours, 3 hours of Tesla. All right, you see this line here we put there, flat top resistance there. You reclaimed high day, but there's just so much here. Everything. Reclaim 180. Bang. 90 MA. 90 MA. Look. 1, 2, 3, 4, 5, 6, 7. We counted it 13 times. I circled this entry for you guys. I said, guys, long way. Like the Spanish guy next to me. No, there isn't no Spanish guide. But anyway, right there. Bang. Right there. That, it is showing you time and time and time. How many times did it have to show you? That's an area you want to put your, or that's an area I want to put my buying. I want to be buying on and around that 9 EMA. And then we get above it to the level, we separate, take some profits. It's not yours until you take it. All right, let's go to GME. We'll just watch for these pullbacks and see what happens here the next couple of days with Tesla. I do want to try to swing trade Tesla, though. I'm going to tell you that right off the jump. We have a beautiful 3-bar reversal. Before I forget, I did not look at it, but look at Palantir. I was watching some things on Palantir last night. Palantir is one that I wish that I was on right now, but I'm not. You're breaking out. You have room up to $26, $25.50. What time is it? It is 2:30, so we still have some time here. That sucks because I've been watching Palantir for a minute, and I knew Palantir needed a little bit of time to get long. All right. What else do we have? Coinbase, GameStop. Let's go to GameStop real quick. GME. GME sucks at trading. Let's take it here. Let's go here. Let me go here, and let's do here. Fuck. All right. Let's go to the daily. Daily with Haley. Damn, that's a mean rejection. That's a mean rejection at 28. 28 was that trigger. 28 was that trigger. And it couldn't hold. All right. So you retested 23.75. Call it 24. Breaks at 24. You gotta look for $20. So you had the 50-day coming up here. Look at that bear flag right there. Bear flag breakdown. Just look for the extension. I'm looking for $20 on Tesla. But I mean, I wonder if there's going to be a press release. I got to be honest. This thing still feels bullish. The chart isn't bullish, but everything else around the chart is just like, other than this volume that day. Come on, man. Let's go. All right, so this level right here. So we're watching $24. 24. You got to get to $32 on volume if you want this thing to go anywhere. 30 to 32. Got to get up in there and start closing up there on volume. Like this, leaving this level right here now at 24. You want to leave it on volume so that way you know going into 28 you have volume behind you. It should break and hold. All right, so we want to think about exactly what it is we're doing, why we're doing it, and anticipate some of these moves, right? Whether it's, knowing like, hey, 2 standard deviations above or below VWAP might be a mean reversion trade with support down here. Support down here at 24. I'm 2 standard deviations below VWAP. Chances are we retest VWAP. I don't even have VWAP on here for some reason. It took it off. I had it on there, but it took it off on me. It has a mind of its own. Let's see. Yeah, that's all I can say is look for 28, possibly. Because it's already made 28 resistance, but let's go to... Damn, Coinbase is a beast. All right, break at 248. We're looking for 250, 256.50. Still think we have a lot of room left on Coinbase too. Just gotta watch Bitcoin though, because if something happens and that thing falls, Coinbase is going to murder you. So if you get paid on longs, take your profits, because God forbid news comes out and you're fucked. You don't take your profit and then you're like, damn, I just was up 80, 100, 20%, and now I'm down 35, 40, 50%. That's a real gut check. When you're green, beautiful trade, and it's not locked in. Just throw some trail stopped orders, whatever you need to do. All right, our job is to get paid and manage risk. Manage risk and then get paid. But we get paid by managing risk. It's neither here nor there which way you want to use it. Okay, GME. Let's go to GME. Oh, yeah, AMD. I want to go to AMD as well. All right, let's watch this level here at 25 bucks and 24. If we can get above here, if we can get above this little pivot area, come on. If you can get above this level right there at 26, it's 25.87. Start closing up here. You still have VWAP in your way, but I think we need to look for resistance levels. Just doesn't feel like there's a lot of buying going on. I know you guys can't see it. Just give me 1 second. Let me turn on this. There was some news out earlier with Adobe. I think Adobe has recovered since. Palantir's ripping and roaring. Oh, AMD. Just wanted to look at Coinbase real quick because man, everything is up. DraftKings, Apple. AMD, that's right. AMD. Watch that Apple level there, all right? AAPL. Apple, watch this 218 level. I can't believe it's already at 220. I told you guys, man. I was like, yo, 218, 220 is definitely possible within the next month. It did it in like 3-4 days from the original rally. So watch 220 have some sellers there. Apple, AMD. That's right. Let's go into semiconductors. Let's go to Semiland. I'm so tired. I drank a Red Bull and now I'm going to start crashing. I had a Red Bull at lunch behind, and now I was driving, and then now I come home, sit in my computer chair, and I'm like, shit.
We're going to speak to the golf superstar about that and more when Power Lunch comes back. Crypto Watch is sponsored by Grayscale.
I wonder if we can get a nice rally on AMD. That's a nice tail there. Really nice tail. Watch the 50-day.
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
Okay, ready to watch this? 1 second, I gotta finish my laundry. Jess, it's girls' night. 1
prescription savings for the whole family.
Have a good one.
Another good reason to check GoodRx.
In today's volatile markets, you must learn to trade options. Hi, I'm John Najarian, and this is my brother Pete. Our new book, It's Not an Option, can teach you to become a successful options trader. And we'll send you a copy for free. Look at the return on options. Most stocks can't even compare. Relying on just buying and holding stocks in this market? It's not an option.
To claim your free copy, go to itsnotanoption.com now. That's itsnotanoption.com.
Are you interested in safeguarding your investments with gold? Alamos Gold is a growing Canadian gold producer with a long track record of outperformance. Alamos Gold. Invest with us. Our growth sets us apart.
For me, Squawk Box is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you might get some useful information.
Squawk Box, weekday mornings, 6 a.m. Eastern, CNBC.
It was a thrilling U.S. Open finish on Sunday, Father's Day, as Bryson DeChambeau overtook Rory McIlroy by one shot to capture his second U.S. Open title.
Damn, 0.5%. Come on, AMD. You can go green, baby. Right back to the 100-day or 50-day moving average.
DeChambeau over one shot to capture his second U.S. Open title. Bryson DeChambeau joins us live. Bryson, welcome and congratulations on one of the most compelling rounds of golf that I have ever seen. It really was truly amazing. A lot of people are going to remember it as the Open McIlroy lost. I call it the Open DeChambeau won. And you won it despite, hey man, you did not hit many fairways, did you, on Sunday? You were scrambling all day.
I was. Thank you for having me on. It's a pleasure. I can tell you that I was hitting good all week, too, with my driver. I striped my irons, hit it really well. But that last round, I just couldn't get in the fairway for some reason. And my iron play was beautiful, though. Wedge game was awesome. Putted it well. And Rory, man, he was fighting for every shot. And, unfortunately for him, he didn't make it.
It was kind of like a match play down the stretch here. But here is this shot on 18. You had an impossible lie. You were underneath a tree branch. You hit it into the trap. You had a 55-foot shot from the trap that I'm told had about a 2% chance, and here's your shot, about a 2% chance of getting as close as you put it. How'd you do it?
Oh, it's been a lot of practice. I actually practiced a lot of bunker shots growing up from 50 yards. Certainly didn't expect to have that to win a major championship, but when my caddy and I got to that lie, he told me, Bryson, you've done harder shots before. You can do this.
But never a better one.
That's true. It's my best shot, the best shot of my life.
Bryson, you'd be able to, not that you're doing these amazing things to just get endorsement deals, but listen, there's so many fans who want to see you as part of the traditional PGA. I mean, what do you tell them? They say, we don't like this rift at the heart of golf. Come back and let us adore you. What do you say?
Hopefully this bridges the gap a little bit. It's unfortunate, the landscape that it is. Obviously, being a part of LIV, I understand people's perspectives. I have respect for it. But I hope that this transforms the ideals and the narratives that have gone on in the past, and we're now in a place where we can start to heal and hopefully come back together. I know that they're in talks, and I hope this great game comes back together a lot quicker than it's been. It's taken too long, and it is what it is.
This was the second major that I was watching with your friend Reed Dickens, the PGA, where you almost pulled that one off. This was your second one. As you were standing over that 3.5, 4-foot putt, what goes through your head there?
I've done this before. I've hit this putt thousands of times. It's a right center putt, just knocking a 4-footer, and that's it.
And you did it with confidence and pace, and the celebration was awesome, man. Congratulations, Bryson. Appreciate it.
Thank you. Thank you guys.
Thank you.
Coming up, let's test the water, shall we? We'll highlight a startup that's revolutionizing, oh yes, lawn sprinklers to cut down on wasted H2O. This is a big deal in my town. Diana Olick is going to tell us about it. Power Lunch is back in 2.
Had to get something to eat real quick, guys. I didn't want this paper and stuff whatchamacallit, getting in the mic. Alright, just give me a second. If you guys have questions or anything, you guys can throw them down below. I still got to bring up the chat. I don't have the chat up. Just give me 1 minute. I had to, everything died on me. It's been a while since we've seen everything go up. Energy. Healthcare is kind of lacking, but, I mean, just about every sector is green. BKNG, Burger King. No, I'm just playing Booking Holdings. I told you guys last week that NVIDIA looked like I said if there is any weakness, NVIDIA looks like the best one. Now, again, AMD is down. NVIDIA is down a little bit today, it looks like. Let's see. Nope, it's green. It's up a little bit. Yeah, it's up a little bit. NVIDIA looked like the one that would be the best pullback. But look, it's regaining that level. I would watch previous highs and this. How I would trade this is something like this. I said, alright, resistance, reclaim support, VWAP, all up right in that area. And then this level right here. Pretty much like that, right? I would say, alright, we're holding, so I have that area for a long, and then I have this area right here for a short. That would be my trade. Up, down. 130 to 132, and then 132 to 134, but potentially could break out higher. So you got $2 either way.
Welcome back, everybody. Summer's here. As you know, temperatures are climbing. You're probably watering your lawn a little bit more, but traditional sprinklers are anything but accurate, leading to significant waste.
The first day,
what if there were a better way? Diana Olick joins us now with the latest in her continuing series on climate startups. Hi, Di.
Hey, Ty. Yeah, climate change is accelerating both water scarcity and drought, and as a result, water prices are going up dramatically. Landscape irrigation uses about 9 billion gallons of water per day, and about half of that goes to waste. Precisely why it's time for a smarter sprinkler. You see it all the time. The sprinklers are watering the lawn, but also watering the driveway and the sidewalk. Whatever the system, it's generally not very accurate. But new technology from companies like Rainbird, Rachio, and Minnesota-based Irrigreen are changing that. Irrigreen likens its system to the precision of an inkjet printer.
It's a digital robotic sprinkler that pops up in the middle of the lawn, and it basically traces the contours of your landscaping. And it's putting down a completely even layer of water.
Dyer claims the single-head system saves about half the water typically used. But it's not just the precision. Of course, there is AI involved.
We use the cloud data and information we have about your soil and what kind of crop you're growing, like what type of grass, like cool weather grass or warm weather grass, how much shade and sun.
If we can get some volume here, let's go look at the options chain to help back us up with all the indicators. Let's see if we can take a long to high a day. Take profits in front of 133. 133.75 would be the target and possible break, but I think you might get a pullback here on NVIDIA. Damn, so I think Damn, the put side just the options chain is saying very like by 1 delta, pretty much by 1 delta, it's saying it's got a little bit more faith in the 130 puts than anything else. Like, you know, a test back to 130, which, you know, the volume supports that and everything else. But again, I can't have a difference of 28 to 27 delta, one delta making up my trade. So see what happens if we get a pop and we can't hold it. Oh, things might have just changed. Hold up. Let's see. Let's see here. Yeah, the volume on.
And remember, you can always hear us on our podcast. Just follow and listen to Power Lunch wherever you go. We'll be right back.
Yeah, let's wait and see if we get a break here. Let's see what happens. I personally kind of want to just trade AMD over NVIDIA. Especially if AMD can try to reclaim itself. You have a tough level up there, though. All right, watch that 20-day. You have the 50-day moving average right there. So I guess I would take that. I would take today, and from like the story on AMD is you broke the 50-day and closed below it Friday. Thursday, you went below it, but you closed right above it and right on the 50-day. Friday, you officially bounced, you gapped under it, and it bounced into it. Today, you opened below it, pulled back. Now you're running a test into it. You know, maybe AMD's trying to get back above it and get to 162. If AMD gets back to 162, look for pullbacks in the 160 to try and grind to the top end of the range of 166 to 167. I just think AMD has just been treated like a dog. At least I hope you wouldn't treat dogs that way, but it's just not keeping up. It's just not keeping up with the overall semis. Let's look at ARM. It's going to be hard for NVIDIA to pull back, honestly, and even any of them, because there's just so much going on in the semiconductor sector right now that it doesn't make sense to try and short it until you really see that volume where it's just like, whoa, hold up, there's something going on here. Like, look at this. But, you know, even though some of this daily chart here on ARM was buying, that was some serious volume. It was red on the day.
All right, folks, let's give you a quick
but
check on the markets. As you see there, the Dow Industrial is up about 0.5% or 182 points, 38,770.
And the trial in the class action lawsuit against the NFL continues today, with the biggest name witnesses yet to take the stand. Julia Borston is there at the courthouse in Los Angeles and brings us the latest. Hi, Julia.
I know, it was garbage, but they're scamming.
Hey,
NFL.
Kelly, that's right.
That's
NFL
funny.
Commissioner Roger Goodell took the stand this morning with as much as $21 billion in damages at stake in this class action lawsuit, alleging that DirecTV's exclusive distribution of Sunday Ticket inflated prices for consumers. The commissioner describing Sunday Ticket as supplemental and complementary.
Huge bear flag on GME.
Sunday afternoon games. He called it a premium product that's additional content not meant for every fan. Commissioner Goodell also noting that before Sunday Ticket launched back in 1994, which Goodell called an innovation, that there was no way that fans could access all of those Sunday afternoon games. Now, Goodell stressed that he is focused on reaching as many fans as possible and that the league has recently expanded its fan base from 175 million to 210 million fans. Now, there's one other thing that Goodell stressed. He noted that the NFL had zero control over DirecTV's pricing of the Sunday Ticket package. He said that sometimes DirecTV offered promotions and gave the package away, which the NFL did not like, but that they couldn't do anything about it. So right now, Goodell is being cross-examined by the plaintiff's attorney. And Tyler and Kelly, I have to point out that earlier this morning, the judge admonished the plaintiff's attorney for wasting time and being redundant. So we'll have to see how it goes this afternoon.
Remind me, Julia, because I've frankly forgotten, is DirecTV still a carrier of these games?
It is not currently offering Sunday Ticket. So DirecTV did offer Sunday Ticket for many years, but currently it's YouTube, which is offering Sunday Ticket. So that sort of distribution right has switched from DirecTV to YouTube, which Commissioner Goodell explained was because DirecTV changed ownership. It was ultimately acquired by AT&T, but that YouTube developed this.
Sorry, I was just checking on my cat. She had me worried there for a second.
That YouTube did have the streaming capabilities for live games, so many people watching at once. Did they switch over their distributor?
All right, Julia, thanks very much. Julia Borston reporting from that NFL trial. Thanks for watching Power Lunch, everybody.
Closing bell starts right now.
Welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with stocks levitating into a new week and on track for another set of record highs. We'll discuss this big run with our experts, including BlackRock's
So what I would
leader
say here is watch
a
VWAP. All right, VWAP. Oh, look at this. Look at this 15-minute chart, actually. See, it's not going to do it now. Might be able to get a little long out of GameStop back up to VWAP. Let's see here. Nice support level there. What I would say, VWAP 2650. I might actually take a short. Man, I don't know, man. I don't want to get a gap up tomorrow because I'm still reluctant to get short GameStop. I'm still reluctant to do that. Once again, you're turning 25 into support. Once again. And the thing is if tomorrow you come in with a gap up and you get a pullback, like depending on where the gap up is, this thing may go again. Because if it's just not breaking levels, people are going to take profits. And once you get profit taking and buying, it could turn into... It could go from profit taking to end buying to a short squeeze real quick. So I'm keeping my eye on this level here on GameStop. All right, and that's $25. So we could get a small trade here to VWAP. Maybe grab some calls into tomorrow. I just think it's got to be a setup, right? The risk to reward has to be worth it. I just think
The idea that with inflation going down, their current policy starts to look more restrictive.
29, 28 is still in play. 4, 2. Shit, sorry. I meant to go to an hourly chart. Damn it. Come on now. Let's go. Go. Come on.
If you think about, though, the direction of travel, we've got an economy that's moderating, but very slowly. There is a two-stage economy at play, though, that I think is significant, which means that the Fed has to go. I think they have to go. You're talking about pressure on low income, pressure on small business, pressure on local banks. You created a two-stage economy. The question is whether
Oh, man, guys.
in my mind is not the right level.
Maybe this is it there. All right, this is Thursday's low. Like, look how low that volume was. I think I'm gonna do it. I think I'm just gonna. Man, this is crazy. I gotta be honest with you guys. This is actually pretty fucking nuts. Because I think there's a freaking crazy chance, even with the volume today, that you could see this thing go higher. 15-minute. Real quick. I'm sorry. I know I keep flipping back and forth. Just give me 1 second here. Like, the ideal, like, for me to get short, I need a gap up. I need a big gap up and get short that gap up. And I'm wondering if that's, like, don't quote me. Look at the volume coming in. I'm telling you guys. I think there might be a shot for, the thing is like, I can already assure you that the call premium is fucking stupid. I'm sure they're charging $10 a dollar move. Right? I'm sure they're charging you $10 for a, or I should say $13, $14 for a $10 move. All right, let's just look at the 28s. 28 call, $1.30. Yeah, that's what I figured. And where are we at? 26, 7, 8. No, it's not bad. That's not bad. That's not bad. It kind of calmed down a little bit. Let's see here. Let's look at the 29s because there's a lot of... Well, there's more volume on the 28s. There's a lot more volume on the 30s. Yo, watch out, guys. Yeah, I'm going to go for a 30 call. I'm going for 30 calls. Let's do it. I'm going to trade GameStop right here. I'm going to let you guys know. I'm looking. I know it's way out of the money. I know it is. But there's so much volume and open interest there that I think I have to go for that. There's a reason why I'm going for that, because I even though it's out of the money where it is, I think that the volume alone is going to could help with the price, if you know what I'm saying. I can't explain it right this second. I may not be saying it clear enough to somebody, but I think because of the amount of volume and open interest there, you could really see the price of these options change on, you know, a break. Like that 15-minute, we need to start getting some volume here. We do. We gotta start getting some volume right here. 25.50. All right, again, the bottom left, right? The left side of the screen is level 2. The right side of this thing is level 2 for the options. And then the top right 3-minute chart is your time in sales. So you can start to get a feel. If you read them, you'll get a feel for where order flow is and the size and the who, what, when, and where. Not really the who, but what, when, and where. It really does help reveal those kind of things. All right. These candles are so small. Come on, man. Give us a test of VWAP. Oh, that volume died. The volume died. Come on, let's go. Do it now. Let's go. You got a flat top resistance up there at 26. Let's go bust through that level. What time is it? 3 o'clock. Let's go. Come on, baby. Let's go.
Do the CTF bank. that we're keeping all our yield in 5 years and in. And by the way, you don't need to go out the yield curve because there's so much, you've got a flat to inverted curve. So you capture a lot of yield using credit, mortgages, securitized assets. So that's where I think we are today. The curve will steepen. It is, I just think it's going to take time for that to happen.
So that's where you get the yield from. What about other kind of allocation decisions you'd make right now in terms of dialing up or down risk and what parts of, let's say, equities?
I mean, I still like the equity market. I mean, boy, it's a heck of a move today, and it's been a pretty profound move. I still think when you boil it down, and I hear all the discussion about is the multiple it turned too high, you're still seeing a historic dynamic around the growth, the ROE, the return on equity companies are creating, and the buyback relative to the IPO calendar. When you marry the fundamentals and the technicals,
need some volume here.
They're pretty powerful. So do I think equities still have upside? I still think the upside. The beauty of equities today, including a lot of stuff we are active in, including today, the volatility is so darn low that you can use options and you can actually reduce. So we've done a little bit of reduce what is your outright equity exposure, but you actually grow it because your options keep coming into the money and then you roll your options. The vol, by the way, interest rate volatility is high. Relative history has come down a fair amount with the recent Fed decision, but equity volatility is a gift. I mean, these vol levels, to be able, and by the way, you know, in any given day, you can see the equity market up or down 50 points in the S&P 500, like today. You can move around your risk. You can and be with volatility so cheap. It's a phenomenal opportunity.
It is amazing. So index level volatility is very, very calm, almost to the point where people are trying to question why it might stay that way. But within the index, things are swinging around, and so there has been this trade, as you know, and maybe this is what you're talking about, of essentially betting that you can earn that difference off the volatility of the components versus the index.
Well, I would also have single name volatility is also pretty low. I mean, you look at the volatility of names like Apple or the banks, they're under 20 vol in terms of, that's pretty cheap. So you can move some of your equity, your holdings, your Delta, what we call Delta One, move it to synthetics because the volatility in single name is so cheap today. So both are pretty reasonable. What it makes it harder to do, we do a lot of overwriting of our positions to create some income. The volatility is not, particularly when you get days like this in tech, semis, it's pretty hard to give up some of that upside.
Sure. Yeah, no, that has been kind of a little bit of a trap maybe some people have fallen into. I guess just in terms of this idea the Fed can, you know, maybe ease off a little bit in a measured way. Usually slower easing cycles are more bullish than fast, urgent ones. Do you think we're going to, in 6 months, say that was just kind of a mid-cycle slowdown and now we still have years of this expansion left? Or are we still in this late cycle psychology?
It's not the same as it used to
So
be.
one man's opinion, I don't think cycles are nearly what they used to be. I think the whole concept of cycles was a manufacturing-oriented economy, a goods-oriented economy, a commodity-oriented economy. You think about service economy, healthcare, education, et cetera. You don't have that sort of cyclical dynamic that you used to have. There's some cyclicality, but boy, it is much more reduced than it used to be. So listen, I think the economy, you go through, we took in a lot of people through immigration. You got nominal GDP to a level that was very high. My sense is that will dull some of that growth. My sense is that some of the CapEx, R&D will probably come down a little bit from the high levels.
I'm not getting the volume I want to see. I'm not long yet.
Investment. So I think you're going to see an economy that, and by the way, when you step back and think about it, if we get 2% real growth and you have 2.7, 2.6 inflation, you're talking about nominal GDP of 4.5 to 5. People say, my God, the Fed has a problem, we got to get it down. If you have 4.5 to 5 nominal GDP when we have too much debt on the country today, pretty good. Like it's pretty good for investing. It's a pretty good.
That used to be kind of a normal
Tomorrow might be
or even it's a little high to me.
Don't be surprised, like if you have to like search for news tomorrow. You know, the market might cool off tomorrow, but you might have to shift your attention to like something that has a catalyst or some type of news. Let's see. There's some sell volume. Let's see. Are they going to knock it down or what? Let's find out.
If we ease here?
So I bet that's part of the conversation. But it's part of why you can create a paradigm where you say the terminal rates is going to stay higher. And by the way, I think their end point will be significantly higher than it used to be. And as long as you articulate that, by the way, they've reduced the balance sheet. I think there's some. I think you can deal with that and not create anything that's a financial condition easing of significant magnitude. And I just don't think equities. I know I've talked about before on your show. I just don't think equities are as interest rate sensitive as they used to be.
Oh, not nearly. Yeah.
So I'm not. You know, it's always interesting when people say if we hit a 4% 10-year or 4.5, and they're like the equity markets come under pressure. I don't know.
Yeah, it doesn't seem like that's a relevant indicator anymore. Rick, great to see you. Thanks so much.
Mike.
Appreciate the time. All right, well, keeping a close eye on the NASDAQ and the S&P 500, both on track for record closes. Let's bring in Jordan Jackson of JP Morgan Asset Management and Jason Snipe of Odyssey Capital Advisors. Jason is a CNBC contributor. Jordan, let me get your reaction there to just those thoughts that, you know, the Fed's in a pretty good spot. It has flexibility to move based on where inflation is and maybe being able to kind of preserve this pretty decent economic backdrop.
Well, it's pretty interesting. I think the Fed, coming out of at least last week's meeting, they're concerned around the inflation outlook. It's clear that Powell is a bit concerned around base effects, particularly as we move through the summer. He has on occasion mentioned some concerns, even though core goods prices have fallen, core goods potentially re-inflating a little bit again, and that complicating the inflation backdrop. I'm impressed that he's able to, after a Wednesday morning print, be able to talk to all the governors and have them update their dots. I think most folks said after one print, they said it's not really worth updating my dot, and so that's why you got that shift down to one cut. But I think that's generally right. I think, you know, if stuff is still moving, humming along over the course of the summer, now you're swinging into the election season. I think it's going to be tough for them to start moving in September and November. And I think perhaps they at best can squeeze in one rate cut in December. And I think that's where the median member sort of lies.
And Jason, do you think that that's kind of an acceptable scenario here? It's kind of amazing the way that the markets have basically been okay with Fed patience, and obviously you've had market-based yields more or less cooperate. But how long can we wait?
Yeah, Mike, I think absolutely. The numbers that we got last week is clear indication that inflation is moderating. Again, this is the second month in a row that we're seeing very positive numbers on the inflationary front. We're coming off a backdrop of we had 3 months that were difficult where the Fed was talking about a trend of inflation obviously moving higher. But as I look forward, and to Jordan's point, coming with the election coming ahead and other geopolitical stories that potentially will play out here, I think it was prudent for the Fed to talk about, you know, maybe potentially one cut in December. Obviously, the dot plot has been updated from 3 cuts to 1 cut. And I think that sets a nice ramp into 2025. Because again, I'm in the camp that earnings have been strong, the economy is relatively strong. I think the Fed is getting a lot of what they've asked for in terms of inflation moderating, some loosening in the labor market, which plays into exactly what the playbook was coming into this year. So I think they're right in the right place, and being data dependent and looking towards 2025 as an opportunity to continue the rate cut story starting in December of this year.
Jordan, you say in general that you're still pretty well disposed toward risk assets. I guess the question is how much the market's already sort of built in here. I mentioned, you know, you had the sell side strategists raising their price targets. One of the, I think, components of the bull case has been, hey, Wall Street's kind of fighting it. Nobody really thinks the market can do much. It seems like maybe expectations are in check. Is it starting to feel like it's running a little hot right now, or is the, I guess, negative sort of breath in the market, you know, making that seem less the case?
Yeah, I think this suggests that we may be primed for a bit of pickup in volatility over the course of the summer. You know, the reality is, look, we are expecting a broadening out in earnings growth from the rest of the market, not just technology really driving earnings and mega cap tech. That being said, mega cap tech is still expected to post double-digit earnings growth as well. And so I think, you know, look, markets are becoming a little bit jittery, which I think rightfully so over the course of the summer, given where valuations are and given where interest rates are at. But I do think we're going to looking at on the balance of the year, an equity market that's going to deliver 15 to 20% total returns. And I think we're going to rally pretty nicely in the fourth quarter, given you also have 2025 earnings growth expectations that are sitting in double digits as well. So I think there's a fundamental backdrop, a micro case to stay bullish. But also, again, the Fed is still very much biased, both implicitly and explicitly, to want to cut rates. This is not a Fed that's putting hikes back on the table. They're firmly biased to want to cut. It's just a matter of when. And I think both of those are bullish for the market.
Yeah. Now, Jason, where within the market looks like it hasn't yet quite been kind of fully reflective of the underlying earnings power? Because, you know, everyone complains about, it's only a handful of stocks driving trillions of dollars of upside in market cap here. But that's also where the earnings momentum has largely been, is in those mega cap growth names. So do you find areas that are now primed to pick up as we wait for second quarter earnings estimates are up 9% year over year and are looking pretty solid at this point?
100%, Mike. I think obviously the story to our all points here is obviously, tech and the semi-hardware space has obviously done really well. The opportunities that I see more cyclically oriented is I look at the financials and I look at investment banking as an example. We've seen Goldman Sachs price action so far this year. It's up around 15%. It's pulled back in recent weeks, but I think there's opportunity there as we and all the numbers IB has, and I think we'll see a nice run. The other election year really returned very well. There's an opportunity. There's been a lot of GLP-1s and what's going on with Eli. But I look at like Stryker, Intuitive Surgical. I think there's opportunities for these names strength and see earnings power ahead. So those are a few of the opportunities that
Jordan, I wonder if there's one thing that stands out to you that's causing you any about sort of the macro outlook and whether, in fact, this sort of patient Fed keeping rates here for a full year, deceleration in parts of the economy, investors' attention, whether any of that could break the wrong direction.
Yeah, it still feels like inflation is public enemy number one. I think there needs to be a little bit more focus on the growth backdrop, and particularly across labor markets. I'm not seeing labor markets come under significant pressure just yet, but the job openings number has been steadily coming down. Initial claims, we'll be looking to see if this will be a second week in initial claims data. So it tends to be a bit noisy, and there's a lot of seasonal adjustments. There's still an incredibly wide divergence between the household survey and the establishment survey. I tend to think somewhere in the middle. The labor market is cooling, not freezing over just yet, but I do think there needs to be a little bit more focus on some of the growth dynamics that are at risk under higher rates.
Yeah, I guess we have to stay alert. Probably good news. The market seems to at least have one eye on those factors as well. Jordan, Jason, appreciate it. Thanks for the time. Let's send it over to Christina Partsenevelos for a look at the biggest names moving into the close. Hi, Christina.
Hi, Mike. Well, the U.S. government is suing Adobe, alleging that Adobe, quote, hides expensive fees in the file to cancel a subscription. And when customers actually try to cancel, the Department of Justice alleges Adobe forces customers to go through a process and, quote, ambushes them with a termination fee, saying that they are, quote, transparent with the terms and conditions and have a simple cancellation process. They plan to refute these claims. Best Buy getting a bullish boost today from UBS. A new 6 a share up from 85. 47 trading right now. They suggest this retail is restructuring effort, and that's why shares did hit a 52-week right now.
Thank you very much. Getting started here. Up next, big opportunities in alternatives. Goldman Sachs' Kristen Olson is revealing her best portfolio. She'll join me at Post 9 after this break. We are live. Closing up 200 for a new record.
today.
Interest has been building in alternative investments during this record run for the markets as investors look to diversify. Joining me now at Post 9 to discuss is Kristen Olson, Global Head of the Alternative Capital Markets Group at Goldman Sachs. Welcome. Good to see you, Kristen.
Thanks for having me, Mike.
What principally are investors or your clients looking for when they want to look at non-public markets, various types of alternative options?
So our clients, as ultra high net worth clients, have always had a very large allocation to alternatives. And the approach has been to be quite diversified. So alternatives is a big category that's going to span private equity, private credit, real assets, and also hedge funds. The largest allocation has been going to our buyout strategies, so traditional private equity. But really the objective for our clients is how can they achieve differentiated sources of return from public equity and public fixed income returns? How can they add uncorrelated sources of return? And most importantly, how can they drive alpha or outperformance versus the returns they're getting in public liquid markets?
Interesting that you say that they're looking for outperformance as opposed to just a smoother ride. I mean, some of the criticisms of some alternative strategies is that, well, they don't mark to market every day, and you don't have to absorb that sort of noisy volatility on the way to whatever return you're getting. You're saying that they think that there's sources of better or different types of returns.
100%. Look, I think there is a benefit of perhaps not seeing the volatility or not having to live through the volatility. And I think one of the other hidden benefits of alternatives is it forces investors to stay the course, right? These are illiquid strategies. You're signing up for a 10-year commitment, and it takes the sentiment out of it, right? You're going to have to deploy capital. It's not at your discretion, and it allows you to really stay invested. And I think that's one of the hidden benefits of alternative investments.
Has private equity recently kind of lived up to the billing in the sense of, you're seeing these reports. First of all, there's maybe less activity in terms of new buyouts than you might expect given some of the other market conditions. And then just this idea that if LPs want to withdraw their money and the sponsors have to, take on leverage to do that. In other words, it just feels as if there's a lot of moving parts that maybe are not necessarily as clean as, hey, we buy companies, we lever them, we fix them, we sell them.
Yeah, look, I think that manager selection and looking at what is the actual strategy under the hood is incredibly important. I think now more than ever, finding managers that are driving real value creation at their portfolio companies and looking through as what was from cheap financing, how much of it was multiple expansion, like what was actually organic growth that was driven at those portfolio companies. That's incredibly important to be looking at today. You also bring up an interesting topic, which is liquidity.
Yeah.
And so one of the interesting areas within private equity right now is secondary private equity, right? So you've had institutional LPs that have now gotten to targets in terms of how much they want in alternatives that are finding themselves, given the lack of distributions coming back, finding themselves needing to potentially sell. And as a liquidity provider, that's an interesting strategy to be a secondary private equity investor today.
Should anybody's antenna be raised by the idea that now you have these managers who want to open up to high net worth individual money as opposed, why am I so lucky to be getting this opportunity kind of a logic?
Well, I do think it's one of the most interesting moments. So in the last 25 years, I've been at the intersection of wealth and alternatives for individual investors because you've never really had access in the way that you do today. For the ultra high net worth investors, it's top tier managers that are thinking about how they're going to grow their business over the next 20 to 30 years and realizing that they need to tap into individual investors to grow their business, right? And so it's projected that if there's $4 trillion today of individual money in the private markets, that's going to triple in the next decade. And so alternative asset managers are figuring out how do I access that capital. But the other part of that is going downstream and thinking about how do you get to the mass affluent, how do you get to retail. And so what you're seeing is the advent of new structures that allow for that. So in credit, the non-traded BDC, in real estate, non-traded REITs, and then you're seeing private equity and other real asset strategies going into these open-ended evergreen structures, some of which allow you to go to smaller investors that don't have to meet the $5 million minimum net worth for traditional alternatives. But these structures also have a modicum of liquidity, because that's the other real challenge to investing in alternatives is you have to give up liquidity to be able to get that alpha in the private markets. And that's harder for smaller clients.
In a world where, trailing equity returns in public markets have been pretty strong, and now you can get pretty safe yield above 5 and 6%, does it raise the hurdle rate for investors wanting to go to less liquid strategies?
Well, I think, always looking under the hood, what's interesting. So with higher rates, you look at credit, okay, so you can get pretty attractive yields today. But in the private markets, you can add to that and be getting low double-digit returns as a senior direct lender. So I think investors find that pretty compelling. And obviously, that's a product that has, or that's an investment product that has gone into some of these structures for broader individual investors. And I think the way our clients think about returns in privates is what is the spread that they can get above the public market return? And to give up that liquidity, generally looking for 300 basis points a year, better than the public market alternative.
Interesting. That actually says a lot in terms of how how people are making these decisions relative to what any old person can get. Kristen, great to talk to you. Thanks so much.
Thanks so much for having me, Mike.
All right, up next, the S&P and NASDAQ trying for record closes. Top technician Ryan Dietrich is back. He's breaking down the charts and flagging why he thinks May's market performance could be a big bullish signal for stocks in the upcoming months. He'll make his case after this quick break. And don't forget, you can catch us on the go by following the Closing Bell podcast on your favorite podcast app. We'll be right back. Stocks are in the green across the board with both the S&P and NASDAQ hitting record highs to start the week. NVIDIA also briefly hitting a record high earlier in the session. So does this rally have more room to run? Let's